Good morning, June 16th. Buy is ripping. We're going to be streaming live stocks, options, futures trading all day. Sub up, like up, comment down. Happy money sticks around. If you're watching technical analysis, GME, SPY, barbecue, BYQ, whatever's running. Thanks guys for your market likes. We're at 8 likes this morning. About 5 minutes to the bell. Yeah, still getting set up here a little bit. Like SPY's gonna have a little gap up from yesterday's squeeze. Good morning, David. Good morning, Tyler. Guten Morgen, Keenan. Good morning, Mo. Lava. Good morning, Buzzin. Yeah. Morning, John. Or afternoon. Wait, you're in UK, John? Morning, Sergeant. Shut up. You operate a tower crane? Right now? That's awesome. You're pretty hyped to be operating such heavy machinery. Be careful. You gotta be calm and mellow. Don't go tipping one of those things over. I've seen those things fall over. Morning, Jack Wolf. I don't think there's any barbecue news. There's still stuff that we're it's kind of being discovered in that 10K, which is interesting. Even Bullion's shared some stuff on Discord this morning, which looks like it's maybe more evidence that Baby's not even a part of it. I don't know, I'll let you guys read it. Bullion's, are you on chat, man? You should come jump in the YouTube stream. Voice. He says, note that in the 10K they did mention that not all assets will go to auction. I don't know if he's talking about that same spot that we saw. Or another place. This means Baby could have already been purchased. Yeah, that's what's crazy. Like, that would be such a big oversight. With any investors, like with a share, like truly the cost of the stock right now is way undervalued then. Interesting note regarding the liabilities from the 10K from David Simpson's on Twitter. By the way, my calculation that credit card liability brings BBY debt down to 2.5 billion, similar to his. Not sure what he's talking about. And the new court information of 4 billion cumulative net operating loss brings the tax attributable or attribute up to 840 million, 500 from previous estimates, now providing 1.5 billion in shareholder value, up from 700 million. And this is just Bed Bath & Beyond, I believe. It seems as they are using all advantage of Chapter 11 to eliminate debt and creating shareholder value. So that's without Bye Bye Baby. I mean, us shareholders of BBYQ, we have Bye Bye Baby also. We have the rights to that, as far as I know, unless they pulled a quick one on us. In balance sheet 10K, total liabilities is 5 billion. Total current liabilities is 2.5. All right, there's the bell. Yeah, jump on our Discord though, guys, if you haven't already. It's interesting, quite insightful. I'll put a link for it in the chat. So GME is up 0.25%. Barbecue's up 5%, above 20 cents. All right. That is neat. There's a link for our Discord if you haven't seen it yet. Link for a barbecue miracle. Yeah. Nice, Daniel. Well done. Happy Friday to you. God, that's awesome, John. You guys get paid pretty good money. I've actually thought about looking into a tower crane job. Seems like it'd be kind of fun, and I know you get paid pretty well. Pretty good hazard pay, right? Hey, Jan. I could just stream from my tower crane. Barbecue's up 6%. Space is up 45%. They announced, I think, that they're gonna go flying again. Shared store first space tourism flight set for later this month. Expect for that to dump once it takes off. Expect for it to dump really fast if it blows up. But either way, I think once it takes off, that thing will, the stock will probably dump. Yeah, we were actually just looking at spaces. Yeah, the chart didn't look great though, so fun one. Fingers up 16%. Nikola cannot get an entry on this thing. Finger 16%. Nikola 15%. There's just no, it's like, just strap on at any time. Hold on. No good entries yet. And unfortunately, it might just be a one-time, like, it might not come down, consolidate, and then like keep going. Knowing the nature of this stock, very well could just be a nice rally up and then come down, then maybe a little lower high, and then, you know, lower highs. And MSGM up 10%. No Labs 10%. Astra 8.5%. Barbecue 6.6. That is neat. 2080. See if media's pushing anything. The rise over stock. Bed Bath & Beyond faces 1.29 billion in impairment charges. Let's see. Bye bye baby Friday. That's genius, Daniel. That's a genius. Yeah, you got to catch the more. This is the only time barbecue really moves, is in the first like 30 minutes. Might as well watch it. Okay, money, it's light work, sat down all day. Yeah. Yeah, it's not like digging ditches. I don't know, I feel like in the States it's pretty good money. Assuming UK would be just as good. I don't have any expectations on it necessarily. Hopefully we're starting to stop this downtrend we've been in since that failed bull flag right there. Because that was the start of something beautiful. Based on yesterday, I think we are starting to hopefully stop making lower lows and start making higher lows, which would set up an inverse head and shoulders here, signify a bottom. We'll see though. We can hold some kind of support today. Just yesterday. Oh, this was yesterday. Yeah. So, or no, that was yesterday too. Yeah, yesterday opened low, but then held a higher level all day. So we can hold that 19 cents again today, or even higher would be better, like 20 cents. Look for maybe a gap fill though. Oh, it's happening right now. Look for maybe a gap fill, which would be fine, and then like to find some support here. But it is so much just up to the news on it. It's like, yeah. Just in time watch a gap fill. Yep, exactly. All the stuff that happens you didn't even realize while you were sleeping. Yeah, today is a quad witching. Interesting. And it's X Divi Day on SPY? I think it might be. Interesting. So SPY's come down a little bit. Had a gap up about 0.4%. Barbecue bouncing on that 20 cents, 2.5% up. Space is coming down a little bit. Nicola's holding out. Fingers up 11 still. GME's up 0.85. Yeah, Mullen's up 13. I don't want to get Mullen, dude. That volume yesterday was insane. It actually made 0 cents. Yeah, I might grab a little bit of Mullen, really. I don't know. Just because that volume. Too exciting. Alright, I got some Mullen shares. I don't know, that volume is too crazy. I'm not gonna sell these today. I'll hold them at least over the weekend. Jeez, JH, you're just loading up on Mullen, man. You've been buying this whole time down. About 20,000 shares? Crazy. What's the, I don't even, what's the thesis on Mullen? What? I just don't even get it. Is it 1 p.m.? Yeah, I'd have to check. Yeah, I mean, Nicola, it's, you gotta be quick on that one. Barbecue 2040. Oh, thank you, Poison. 8 bull flagging. These still have to match up, or am I wrong? Yeah. Barbacoa flagging. Astra's up 9. Is that because of the space news? Kind of a sympathy. Party City. Party. That's right. Alright. SPY just kind of hanging out. GME up almost 1%. Barbecue up 3%. I got some Mullen shares. It's stuff I could have put into barbecue, but I wasn't planning on putting more in, but I did have some buying power too if I wanted to. I'd like to see a little bit more of confirmation. Maybe by end of day, we do kind of complete an inverse head and shoulders. I'll add some to it. Base is hanging out. Nikola 13%. Mullen 11%. MSGM. Smile Direct. Ooh, Smile Direct's chart looks nice. SDC. This one's definitely been a runner before. Options on here too. Morning, Jay from the Bay. Rivals up 5%. I like this chart. Like space is getting. Oh, not much. SPY is kind of coming down a little bit. IEP is down 3.6. Starting to sell off a little bit. Rivian, this chart looks nice too. Much as I don't like Rivian. Big's down 5%. I look for an entry on this thing today. Yes. Yon's up 0.3. Big. High kind of melting down a little bit. Head and shoulders there. 5 minute. That divergence also. GME down 0.4%. IP down 4.2 now. Barbecue still up 3.6. 2021. Did take a short there on that Head and Shoulders. Put a stop in. I'm not going to watch it too close this morning. Get a good dump down to some port levels. Close it. I'm still in it. Let's see. Morning Aware. Happy day. Happy Friday. 2049 up 5% on barbecue. What did we get this morning? Mullen? Mullen's borrow fees still pretty steady. Let's look at barbecue sauce. Barbecues holding steady, 15%. Borrow fee. It doubled from a couple days ago. So looks like it's maybe on the trend up. Very nice. 5% on it. A little green candle. See if I can stay in this short without stopping me out. Yeah, I'm out. Got stopped out. We'll see. Early. Might be building a bigger Head and Shoulders here too. Head, shoulder, shoulder. Get a retest of VWAP. Maybe I'll go short again. It's GME plus 0.5%. Barbecue 5%. The AMC's down 0.8. Beyond's up 0.3. Coin's up 1.75. 55.20, that's good. Dish is down 0.3. A-Safe up 0.8. Eliton plus 1%. Group is up 1.45. Buy is pretty slow this morning. Sofi is down 6.5. MVIS is down 10. Wow. Base came down a little bit, 31%. Nikola 10% now. It's come down some. Smile Direct still going. This chart looks nice. 9.3 on Smile Direct. Mullen's hanging out about 10%. Kind of melting a little bit. Haven't gotten a test of VWAP yet. Space is the only company worth holding long term. Mile Direct 13%. Starting to go. Dang, dude. Dang, dude. 14%. As far as the chart, I like Smile Direct better than Mullen, but Mullen's too exciting with all that volume. And Nikola 8% there. GME down 0.3. Got a pumper. Beat the pumper. Bubo. Maybe. No, I don't like it. We played it on this little run right here. Then I closed out here. And it did this weird move. But now it's made an RSI divergence. Could break that, but see more exciting stuff. Up, sold off. Might be a nice entry here on up. Down 11.3%. Yesterday was a big day with good volume. And it just had that split, and it has this RSI divergence. It's bullish. Lots of stocks. Microvision, that's crazy. Actually, Microvision's still selling off. Don't say you're offering shares if you don't mean it. Because if their plan was to offer it and then cancel it for the rip, they're back to where they were after they announced the offering. So might as well offer shares now. Buenos dias. IP down 4.6. We trade. $30. Barbecue's holding up. Pretty much flat. TTOO's down 7. AP 4.6. Okay. Added a play to the Theta Farm. I'm gonna put it on Theta Farm membership. Digit out. No time. Time for you to buy it? Have you not bought it yet? Oh, got some data there at 10 o'clock, I think. I just gotta bounce. What came out at 10? Something. Woke it up. If you want exposure to whatever's happening, then yeah, I think it could happen at any time. You could get halted or suspended at any time, and then you might not have an opportunity again until it's at a much higher price or much lower. But yeah, PacWest down 2%. SPY, something woke it up there at 10. Sofi down 6. Oh. Yeah, we might be seeing a little head and shoulders getting formed here. Green's up 4.5. Snap's at $10. Beyond's up 1.3. Tesla's up 2.5. Wow. Palantir down 1.4. Neo's up 1%. Nice breakout Neo's been getting. Nvidia's up 1.8. Oh yeah, PayPal is hitting crazy lows. Hitting lows from like 2017. Crazy. Back below VWAP. think you nailed it, Ace. One bald guy? I don't think he was bald. But very nice hair. Barbecue 4%, holding 20 cents. He's coming down a bit. IDX down 6.5. Yeah, he had a receding hairline. He never was bald though. He got probably transplants or whatever. IDX might be a nice support it's finding here on that breakout. That'd be a nice opportunity for IDX, honestly. I even set my alert there. Adobe's down 3. I gotta fly. I hit like. Don't go strain yourself, Ace. Thank you guys for your likes. 25 likes this morning. 10 o'clock. Trying to figure out which way the spy wants to go. Might just be a little profit taking here in the morning. Might be up and away still. Little inverse head and shoulders here. IDEX. A lot of charts that actually look good. 29. Thanks, Maui Sam. I like ups chart. I like big lots chart. IDEX. We're all on discount today too. think run might have a little bit more retesting, but like run's chart too. Nice breakout. West down 1%. What's green? That space still up 35%. It's bouncing also. All right, up 25%. We looked at this one the other day. Yep, this chart looks really nice too. Just had the reverse split. A lot of volume this morning. Wow. Done this too. All the sketchy EV companies. Yep, rides up. Mullen's up. Mullen's at 12%. Finger at 10.8. OHR up 8%. Nikola up 8. Tango Group 7.7. Nice to see barbecue on the top of my watch list. Oh, never mind. That's recently viewed. Yeah, SDC looks good too. Yeah, IP is due for some pullback. Yeah, I'm bullish on barbecue. Sure. Retesting VWAP here. That's more than a retest. Up 2% at the exact same time. All in the stars, man. Gotta look at the stars. Barbecue's holding up nice, 2050. I think it wants to kind of break out here too. 5.3%. Donuts are yummy. Nikola. We don't know. Modify's breaking out. GME's up a quarter. Yeah, Alan definitely looks like a head and shoulders there. Barbecue 2060 up 5.6. We'll pop there on barbecue. 2079, 6.6. John's up 0.5%. Alt is down 1%. First tree. Big trouble. GNRC is down 1%. Adobe's down 3.8. Down 0.93. I'm gonna cut those Nordstrom calls. Surprised Lucid isn't popping up yet with all the other hype EVs. It'll start to. Mullen's at 10%. I should have bought it yesterday. Then Tier down 1.5. It's down at like 12 bucks. Go. Because today is yesterday, tomorrow. Your target price for barbecue is 20 bucks. That is neat. MC down 0.11, bouncing up a little bit there. Dancing around VWAP. Beyond is green 0.77. Point gave up those gains. Dish is down 1.2. Still liking Dish, liking for it to bounce somewhere around this $6 level. Stay safe. 1.7. Peloton down 1.7. Up. Barbecue holding out at the high of the day. 2079 up 6.5. You mean back to green? Micron to invest 603 million in factory in China's Xi'an over the next few years. Bank of Japan maintains policy rate at negative 0.1%. Xi Jinping will meet Bill Gates in Beijing on Friday. Microsoft's sudden AI dominance is scrambling Silicon Valley's power structure. The company has quietly cornered the emerging software market. Oh, you got their CPI numbers. Eurozone core CPI year over year May was 5.3% versus 5.3% previous, so it has not improved. CPI non-core for May year over year 6.1% versus 6.1% previous. Estimates were 6.1%, so no improvement. Nomura cuts China 2023 GDP growth forecast to 5.1% from 5.5%. Speaker of Russia's upper house of parliament says impossible to extend Black Sea grain deal in current conditions. DraftKings submits superior proposal to acquire PointBet's U.S. business. DraftKings been up to. Been rallying, man. Wow. Well, the Galactic came back down to VWAP, up 11%. Astra, space stocks are going, and then get your EVs. Finger Motion holding up 10%. Mullen as well. SPY is crazy. I think it's starting to slow down. Maybe starting to turn the ship today. About an hour in. Seeing a nice little head and shoulders there though. That holds. Barbecue sitting at the high of the day, 2080. On down 2.18. A bounce on Dish somewhere here. The Nordstrom falls. Barbecue 79. Wilson at the high. Oh, little pop. New high of the day there on barbecue is a transaction at 2081. Puts it up 6.7%. If Baby was not a part of this chapter 11, and yet these shares still have ownership of that, that would be crazy. And if that were the case, I feel like we would see something in the media about that. Someone that looked through that 10K filing and noticed, wait a minute, this is just the assets of Bed Bath & Beyond they're selling off. Unless they've all been paid hush money. Keep that dream alive. I'm just saying how crazy that would be. I don't know if it's true. It seems hard to believe. Oh, SPY's kind of breaking out to the upside there. Barbecue also 2090, 7%. All right. Head and Shoulders is maybe failing. Look for a little cup and handle being formed here. Probably take the short at the high of the day. Yeah. Back in our bullish saddle again. It feels low today, the volume, yeah. Pretty slow. Maybe because it's quad witching. Maybe because it's XDivvy day. Not sure. Backhanding happens. On barbecue? Yeah, that's true. It's low on there also. But you know how it is. It can pour in at any time. Yeah, it's a little low on... I think it's low on the market also right now. Long weekend, that's true. People probably already are done. Good point. Point Hugh. Base coming down a little bit. Finger holding up 12%. Master holding up 12%. I'll direct 10%. NK plus 10%. Mullen 9%. Nikola 7.25%. Morgan Stanley moves Nvidia to top pick over AMD. Ups price target. Ups it to 500 from 450. Keeps an overweight. Billionaire Rubin brothers sue Figueroa over nickel fraud. SP 500 has erased all of the losses since the Fed started raising rates over a year ago. Crazy. Apple and Microsoft both have made all-time highs recently. So they have fully, I guess Apple's been quite a while, a couple weeks. They have fully rebounded from the bear market of 2021 and have simultaneously held the SPY up to high levels. Yeah, there's Microsoft. So, dude, that weekly candle on SPY though, oh my gosh. Looks like it wants to just make a big double top, doesn't it? Barbecue 2081 plus 6.7 still. Good.
And that's where we come in.
Plus 0.5%. Nicola's popping up a little bit, that's true. Above VWAP now. At 9.25.
On the analyst notes and the fundamentals. Sofi with the big reversal here. What's up, Jenny?
The big reversal after what was a pretty sizable
Jenny in the morning.
Sofi has had quite a last couple of trading sessions. Now lower today.
I usually catch the morning sesh.
Their valuation on Sofi. So Piper Sandler did downgrade shares here to neutral from overweight with a price target of $8. That was actually raised from $6.50 a share. But they highlighted the fact that this downgrade is really reflective of the valuation, with SoFi now up 107% year to date compared to some of its consumer lending peers, which are up 15% on average, just to speak to that outperformance. They do believe that some of this strength is warranted, particularly if there is a significant decline in interest rates, which would then drive better margins and a more attractive lending opportunity for SoFi. However, with rates moving higher, they said in the last 2 months, SoFi faces an incremental headwind in the near term. Now, B of A also downgraded shares today with a very similar sentiment to neutral from buy, with a price target of $10 that was still raised from $9.50 a share. But the analyst said that while the student loan payment moratorium is a positive, SoFi's positive fundamentals are now priced into the shares, saying that right now the outlook here is considering the fact that they'd be a huge winner from student loan payments resuming naturally, Oliver. So, well, this has been on my radar all week long. This has got a ton of noise. A lot of people that are really, really excited about SoFi love to tell you they love SoFi.
Oh, yeah.
I mean, we had Truist calling it earlier this week the future of banking. And so this has definitely gotten a whole mixed, I would say, reaction from the analyst community.
It's interesting to see the cuts now kind of coming in, whereas a lot of the other stocks right now that are explosively moving higher, analysts are piling on with the big tech names, the big AI leaders. We've been talking all morning about the chips. All of those expectations are being raised by analysts. And then SoFi, it seems like there's more of an appetite to kind of fade. So there's a couple categories of the recent winners. There's kind of the big structural tech names, and then there's some of these more kind of high beta stocks that swing, and its vertical move now is bringing in some of the analysts to basically say, that's enough.
Yeah,
Does it look like it's been enough, Rick?
Well, like you said, it's been pretty much a vertical move upward. We're up. We've just about doubled since these post-earnings low that we encountered here. We are definitely fading a little bit today, though. And I wanted to zoom in a little closer on this chart here, just so we could kind of see what's going on with this recent move up. We can see that, we just rocketed upward here, but today we stopped short. We're starting to fall off a little bit here below this trend line, and the point that we stopped out at was just about near the +4 standard deviation channel, so pretty stretched at that point. A fairly extreme move relative to its recent price history. And remember, even though we've had a nice move upward here, we're still down about 68%, 69% or so from our all-time highs near 28. So it's been a big fall from grace in this name, so to speak. And we can see now that the RSI, our measure of momentum right here, we were in the overbought area earlier today. We're falling below that line here, so that's a bearish signal to be aware of there. It's more significant as well, too, because we're breaking below support in terms of both our trend line and our +3 standard deviation channel right here. Those channels are support or resistance. So it's notable because we're getting the bearish momentum signal at the same time we're falling through this support level here. So something to keep in mind there. Another thing would be to look out for some potential support right about here. That's where we had the start of this gap near 825. It's not a huge gap, but it's still worth noting, I think, these gap points on your chart here.
Okay.
Resistance at about $9 based on our +3 channel there.
Last time the RSI went negative or went back, out of overbought, it then went into a pretty long sustained period of average. So it's had these kind of punchy, explosive moments without big follow through. There's definitely been a lot more follow through on this one. So going to be interesting, I think, to watch.
Barbecue.
Because I like in these companies, like Jenny mentioned, there's
No, that's where it was, I guess, 2090, up 7%.
Trade like a GameStop or some of the other meme stocks like that. The fact that it is kind of in that camp, I like to watch the RSI on those because these are stocks that actually thrive off of the momentum. So a lot of people, as you like to point out, they see RSI get hot and they go, oh, I want to fade this. I have to fade this. But especially in companies that thrive off momentum like a SoFi, you actually like when they first enter the overbought, which was way back in May. So it's been overbought and extending now from almost a month. So to see it come back in, possibly the first sign of breakage. I do think it'll be a really interesting stock to keep an eye on here. Good chart and interesting note too. About the positive stuff out this morning. AutoZone and Caterpillar both getting some love from the street. Let's start with AutoZone.
Buy back down to VWAP.
Earnings for a lot of the auto parts companies.
Yon's up 1.5.
Now feeling a little bit more like it's a value or what?
I mean,
Coin's up 2% now, dude. Intraday on Coin's crazy.
Auto part retailers, this name is actually
Say that like every day, but it really is.
About 2% on the year. Compare that to Advanced Auto Parts, which is now
Price coming
currently
down.
the worst performing S&P 500 stock,
Oh, wow.
at least year to date. So all things considered, this chart of AutoZone I think actually looks relatively okay in its respective space. But UBS today upgrading shares to buy from neutral with a price target of $2,900 a share. That's up from $2,800 and above where we're currently trading, just over $2,500 a share. But the analyst thinks that the current valuation has created an attractive buying opportunity, highlighting the stock's multiple has compressed in response to the perception that AutoZone's commercial prospects have dimmed and the fear in the sector will see now more price competition. The firm also believes that the company shows evidence it can successfully navigate through these risks, and then we could see actually shares rally. So we did see shares touch an all-time high back on May 10th. That was only about a month ago. Since now we're up about 6.5% for the week. I know today's move is modestly higher, but again, all things considered, when you look at Advanced Auto Parts compared to AutoZone, just incomparable on a year-to-date perspective.
Yeah, and O'Reilly was also doing great, and then that one kind of slipped a little bit. So there's kind of a clear ranking among them. Advanced Auto way down near the lows. Obviously, we know why that's the case. They don't have a jingle. AutoZone and O'Reilly do, so that's a big deal in the auto parts world. Pretty cool chart though, Rick. It's like we've got this well-established support around 2,300.
That's the first thing that jumps out to me in this chart is this floor that we've established. Right here, it's when this small gap up started, and then we bottomed out multiple times right around that level, near about 2,305, 2,300 here. This level was also the springboard for our most recent advance upward here. That's about where we stopped during this decline that was beginning around this last earnings event here. Now, we also slipped below our purple 250 two-day EMA for a bit, but we've managed to recover above it. We recovered above our volume profile point of control, our area of heaviest trading right here, this thick red line, and our yellow 21 EMA. Now, the other thing that struck me right away is that we breached this downward sloping trend line here, this blue dashed line here. We made our way above that point, but now it's looking like we're retesting it once again. Common thing to have happen would be a retest of a trend line after it's broken. Not going to say it happens every time. Certainly that's not how it works, but it's a common thing that happens. We can see now we're finding some support near where this gap opened up, our earnings gap, near about 24.95. So that's the point to watch as we progress throughout this day. It would be good for the bulls if they could retake that orange 63-day exponential moving average as well. Now, kind of a conflicting signal here is that our RSI crossed above the 50 midline. So that means we switched from bearish momentum to bullish momentum, but we're also not making our way above this support, our resistance level that I mentioned, our 63-day EMA. So kind of some tension there between these two situations that are happening here. Nevertheless, we've got an uptrend still in play, this white dashed line in the short term at least. So look for price to make its way above the high point that we established right here, our relative highs near 25.48. Beyond that, look for the start of the gap near 26.20.
Yeah, that would be a pretty big recovery and an impressive one if it gets back to 26.20. And if we can just keep kind of moving through some of these upside technical, not barriers, but resistance points, could be a good bit ahead of us. If it can power through that, then AutoZone might well have just bounced back into the leadership position for its category. All right, really interesting chart, well supported. AutoZone. Let's talk Caterpillar. Price target hike, a little bit of love from Bank of America, Jenny?
A little bit of love, but we're not seeing that reflected today in its price activity because shares are modestly lower now on the session. But B of A did raise its price target on Caterpillar here to $283 a share from $250 with a buy rating, and highlighting the fact they do see a catalyst coming up actually next Tuesday, June 20th, when the company does host a virtual visit with their management. The firm did also raise its 2023 earnings forecast by $1 a share to $14.25 and attributes its higher target to a higher multiple as it sees now more resilient demand. Earlier this week, we also did get news that Caterpillar did raise its quarterly dividend by about 8%, showing signs again of a healthy company. Caterpillar, though, quietly enough, has made a 20% jump month to date, which is fascinating. It's up 5.5% for the week. It's only down about 7% off its 52-week high now. So even though when you look at the year-to-date performance, it's only up about 3.5%, much of this move we've seen has just been over the last several weeks, Oliver.
Guess I didn't even realize that Caterpillar was rocking so much. Kind of fits our conversation this morning about little rotation potential, little industrial, cyclical themes if the Fed's going to let the economy recover, break out from that downtrend off the highs, Rick?
Yeah, breaking out from this kind of wedge-shaped pattern here that we had, starting with those highs. We can see as well that our price movement has taken us above all three of our moving averages here before we even broke out of the pattern. Then we had a big surge upward once we breached that upper trend line there. RSI also in the overbought area, a bullish sign, a sign of strength. It's like the stock is kicking into overdrive is how it's typically interpreted. You know, you may think that, oh, overbought means it's due for a pullback. Not really the way that it's typically regarded as. So a couple areas to watch here. 241, this green dashed line is about where we topped out here. And be bottomed out a couple times near that point here as well. I also noticed that we are in the thick of a pretty large volume node here, near about 247 here. So that was kind of the consolidation area where we moved sideways here for several months there. So looking at that, we can perhaps anticipate a bit of a stall and trend here. This seems like a likely point that we could start to maybe move sideways a little bit as we gear up for another move up, or, you know, fall back down to the support level that I mentioned. Anyway, the 255 level, this point where we made our relative highs past that, that would be the next area to be looking at for some potential resistance if we do keep kind of moving upward in this name.
All right. Seems like Caterpillar maybe is finally getting its groove back here. Kind of been stuck since the year began, basically. Pretty much peaked out with that first month, looking back on the fourth quarter earnings. So some hope here that we get a little more participation outside of tech. Fun part is Caterpillar Industrial, Caterpillar supplies to the farming world, commodity prices. Crude oil firm today. I'm watching those commodities very closely here. If the Fed just opened the gate for strength. All right, in the economy. Thanks, Jenny Horn and Rick Ducat on the charts. Speaking of charts, a pretty explosive move, or ballistic, or I'm not sure what the right pun is, Caroline Woods, for the way Virgin Galactic is moving this morning, but you get the idea. It's higher.
So many puns. They're rocketing higher. They're blasting off. I was wondering if I was going to use a cheesy pun, but you kind of beat me to it. But yeah, shares up about 25% right now. Already off the highs of the session. They were up about 36% just a little bit ago, but still an impressive day for the company. This, of course, is Richard Branson's company, and this is on news that it's launching its first commercial space flights. In a tweet yesterday, Virgin Galactic said, "We're opening space travel to anyone who has ever wondered what is above and beyond. Get ready for our first commercial space flights." Virgin Galactic's first flight, named Galactic 1, will be focused on scientific research. That's set to take off later this month between June 27th and June 30th. It will carry 3 crew members from Italy's Air Force and the National Research Council of Italy. They're looking to conduct research on microgravity. Its second flight, Galactic 2, will be a private astronaut mission that will launch in early August, and then there will be monthly flights to follow. There's a backlog of passengers who have been wanting to go to space and see what's above and beyond. At least 800 people are on that list. And of course, this follows Virgin's completion of its Unity 25 space flight last month. That flight was its 5th overall, but that was the first crewed mission in nearly 2 years. So all of this giving a big boost to the stock today. As I said, shares up about 25%, now up about 46% year to date. But keep in mind, this is a $5 stock at this point. So that 25% move is just over $1. But Oliver, I won't even pay extra to choose my flight, to choose my seat on a normal flight, so I knew this was going to be out of my price range. But I was checking the website for you because I thought maybe you'd have a a bigger budget. So $150,000 down for the deposit. 25 of that, 25,000 isn't refundable.
Oh.
With a final balance of $300,000 for a total price tag of $450,000 to go see what's above and beyond. So you can go and let us all know what you see.
Yeah, hard to decide. Buy a house or go to space. I don't know. Honestly, I mean, I don't know. I feel like I might be going to space. Those are the options.
The person who just outbid me in the bidding war with an all-cash offer for my no longer former home probably could pay for this in cash as well. So
yeah, hey.
Whoever that lucky winner is, maybe they can go.
You know, it's kind of suspicious. It seems like Virgin Galactic plans their space missions around the NASDAQ valuations. Maybe it's a coincidence. I don't know. But all right. Thanks, Caroline. Appreciate it. We got Kevin's on the panel, multiple, Mr. Green and Mr. Hanks joining me here this morning.
I want to know if that's economy or is that
Right,
extra
yeah,
leg room
yeah.
for $450? What do I get for my $450?
Do I get headphones?
I mean, you know, are we talking business class? What
Right.
is that exactly?
Yeah, is there a meal? Is it a tube? You know?
Yeah.
I'm picturing the Space Odyssey.
Am I drinking Tang?
Seats, yeah. Well, from what I saw, you know, it's a pretty tight ship, literally.
Yeah.
From the previous footage. Am I crazy, or does Virgin Galactic plan these missions every time the NASDAQ breaks out, Kevin?
It does seem like there is a little bit of a correlation there, Oliver. But, you know, this company has been compressed here or depressed over the last couple of months. So it's nice to see a little bit of a rally in this stock, especially some of the other companies that Richard Branson does own that, you know, has gone into bankruptcy as of late because they just haven't been able to take off. So this is a nice little windfall for the company here. I'm not sure I would ever, I actually know this for a fact, I would never go up into space. I'm staying right here. But there are some that have the money to be able to do it and have that experience. I'll just watch from a camera, you know, in the confines of my house.
Yeah, not me. I just had to cancel my second Vegas trip. The first one went so bad, so we're in the rebuilding phase.
Yeah, but that's a different level of risk.
Right. All right. We're having fun here this morning because the market's not doing anything.
Right.
I mean, nothing. Unch basically. Russell kind of softened up a little bit. Yields are higher. Dollars firm. That's kind of the only thing maybe happening here this morning, Kev.
Yeah. Russell a bit heavy, but look at the main components that you and I talk about on a daily basis, and it's the dollar. Its yields have drifted slightly back higher. The dollar is slightly back higher, and this market has, I don't know if it's lost its upward momentum, but it's lost its inertia to go further, at least so far for a Friday. Let's see how the day plays out, though. Like I said, you've got some Fed speakers today that are speaking, frankly, a little unfiltered this morning with some of the Fed comments. So we knew they were going to come out hawkish. So let's keep watching that. But all in all, Oliver, ahead of a 3-day weekend, this is a yawner.
I saw Waller's commentary. He used the word ripping. The economy's still ripping. Weird time to stop hiking rates with 4% inflation if the economy's ripping. Am I missing something, Kevin? Green?
No, you're absolutely right. I think it's obviously the employment picture that has been, confusing a lot of traders and investors that are out there, especially the Fed. I mean, at the end of the day, you raised interest rates pretty rapidly. You would think that there would be more of a contraction within the marketplace, especially for mid-cap and small-cap companies, even small businesses for that matter. But we haven't seen it as of late. Now, we have seen a little bit of contraction when it comes to consumer lending or commercial lending, especially to some of those smaller players, but it hasn't really been reflected in the data that we have seen coming out. Now, obviously, we still have some weakness when it comes to the manufacturing sector, but the services sector continues to be fairly strong. We are seeing some sentiment data as of late, as we had consumer sentiment here today, where we saw a rapid decline in inflation expectations. I think that's actually a good thing here for the stock market, but there is probably going to be some room here to grow. Once again, we look at some of these historical indicators that are, pointing to a recession, and we haven't seen it yet. Maybe we have to throw those old indicators out, or maybe it's just going to take a little bit more time here. But I think the Fed has also learned, and they should have learned in this whole rate hiking cycle, that they actually have more power when it comes to their balance sheet in itself and maybe raising interest rates. The exposure that a lot of homeowners have now post 2008, it's not in adjustable rate mortgages. It's in fixed rate mortgages, and the adjustable rate mortgages or adjustable rate products that are out there are really focused on commercial real estate, but they can actually hide for the most part because private equity is pretty much owning the majority of that, and private equity doesn't have to show the have the transparency and show the exposure of lower commercial value, commercial real estate value. So I think that's also a little bit of a benefit. From an option standpoint, we do see a little bit of a wall at the 44.50 here level, but it's actually dealers are actually positive gamma on that, Oliver. So as we continue to move up, they can actually back off some of their short positions, and that can cause another catalyst to the upside here. And really, when you're looking at options positioning, there's not a lot of headwind moving past that 44.50 level, but a lot of options traders are actually moving into the end of month options. I call them quarterlies, even though the quarterlies are technically today. End of month options here instead of rolling them to the July monthly expiration. That's a little bit suspect, so I just keep my eye on that. Maybe some volatility as we get to the end of the month here.
One of the things that we were talking a little bit about with some of our guests the last couple of days is the amount of kind of speculation coming back into the options market. Skews getting pretty tilted now to where you can see people think they don't want to miss out, right? So they're paying up for calls again. It's starting to kind of look like some of those frothy days from COVID a little bit, Kev.
Well, when you see the market up and VIX up like we saw yesterday, it says some of the wings, some of the tails are starting to gain some momentum. I think that's interesting. The skew is worth watching. There's a ton of information to be gained by the skew. And I wonder, one last thing, I wonder if Waller isn't tipping the Fed's hand here. Their frustration with banks, and maybe that's what's making them pause. So Waller mentioned getting to July and seeing if there's any tightening, and his frustration with a small number of banks. I wonder if he just didn't tip the Fed's hands on why they paused.
Yeah, no, I think that's probably it. I mean, Powell has been pretty open himself about his kind of concerns with that group.
Yeah.
And maybe if the Fed really is going to push again later this year, and we see a little bit of pressure coming down the economy, then you want to watch those regional banks. They are down this morning. That's why the Russell's down about 2%. So you might be onto something there. Thanks, team. Thanks, Kevin. It's great stuff. Thank you for joining MTL. I will see you.
lower on the session. On this news, it does plan to invest an additional $602 million in its chip packaging plant located in China, despite some of these recent restrictions imposed by Beijing on the use of its semiconductors. The investment will involve acquiring equipment and expanding its assembly lines at the existing facility. Through this expansion, actually, Micron aims to create 500 new jobs, increasing its total workforce in the country to over 4,500 employees. The company said it would also be offering contracts to around 1,200 power tech employees. They do plan to expand this plant following news that the China Administration of Cybersecurity barred critical information infrastructure providers from buying Micron's products, citing national security risks. The company's management has said that the Beijing ban could cost as much as, or could really impact them in a pretty massive way, considering the fact that China does contribute to about 11% of Micron's global sales. But the ban on Micron's chips has intensified as we do face some uncertainties with the relationship, of course, between China and some of these other U.S. chip makers, including other names like Qualcomm, Broadcom, and Intel, who also do rely pretty heavily on these Chinese market. So Micron shares will lower today. They are still up about 35% for the year and still do remain up about 3.5% for the week. Like you mentioned, some of the strength we've seen in the overall tech space and really the overall market this week, it is still hanging on to its week-to-date gains despite today's move lower.
Yeah, absolutely. As you mentioned, tech and new highs, right, for the NASDAQ and NVIDIA, Microsoft, all-time highs. So NVIDIA was up 195%. People loving the data centers. Some news there. Tell us about that.
Yeah, NVIDIA somehow is remaining to be the bright spot among so many of these chip names here, and perhaps it's because the good news just keeps coming, at least from the street's perspective. For NVIDIA shares, they did touch a new all-time high earlier in today's session at $436 a share. We're down about $3 off of that, but all things considered, still a really strong day for NVIDIA. Morgan Stanley raised its price target on shares to $500 from $450 with an overweight rating, saying that NVIDIA is now its top pick in the semiconductor sector in place of AMD. They said the AI theme remains the most important aspect of these current market conditions, and only one other company is in a position to beat and raise this year. As other stocks have seen substantial multiple expansion in the last 3 months, NVIDIA has compressed given its earnings upside. They continue to be bullish still actually on AMD's, though, 2024 AI opportunity, but says the top pick designation from here is meant to highlight this near-term upside, hence why the bigger factor they see, or the bigger of a beneficiary they see, being now NVIDIA. They also said the demand environment for AI training has continued to pick up since NVIDIA did report those really stellar quarterly results. So NVIDIA shares, like you said, up 196% on the year, up 300% off their 52-week low. And actually, even though we have seen strength in AMD this year, up almost 90% on the year, NVIDIA is pretty much the only name throughout so many that we discussed that is actually nearing its all-time highs. AMD only about 4% off its 52-week high, but it's very rare, I feel like, to find some of these names that are actually peaking right now towards their best performance ever, like NVIDIA is.
Yeah, thank you so much. Jenny Horn, great to see you. Appreciate it. Markets correspondent. Good luck there. Micron and NVIDIA. Let's get some insights in the news shaping the markets. For that, we welcome in Mark Travis, President and CEO, Intrepid Capital Funds. All right, look, it's the end of the week, but I think a lot of people are still saying, how did the market jump to new highs and stay at these levels when the Fed basically said, we're likely to do a couple more rate hikes? I mean, what happened? Was that a pause? Was it nobody cares? They're just waiting? What's happening here?
Well, I think the old proverbial, the markets climbed a wall of worry. We got through the debt discussion with Congress, check that box for now. We've got through a Fed meeting where they've paused, but act like they could certainly come back later. I would contend we're closer to the end than the beginning of the Fed cycle. Looking at some, forecasted rates of inflation, it's certainly going to come down. And so I think the markets rallied in the face of that worry and that good news. And certainly things like AI have got people excited. It's really kind of skewed the indexes, as a lot of people are probably aware. The kind of S&P 7, as some have called it, dragged, the NASDAQ's phenomenal returns this year of 30% plus have pulled up the S&P into the mid-teens. Interestingly enough, the Dow is only up 3 to 4%, and the Russell 2000 small cap benchmarks, 6.5 to 7. But so I'm continually looking for, high quality businesses, ideally kind of small to mid cap, where families run them and have for generations in some instances. And as I would like to say, built to last. And I want to benefit from the long-term compounding of co-ownership of those businesses. And so those are a little bit outside of, the discussion of NVIDIA or Micron today, but they're still going to continue to do well.
Look, and you have some great companies that we're going to be talking about, some of your picks here today. What's interesting is you have a tight credit market, right? I mean, when you look at what's going on in a high rate environment, that's something that could loom and actually slow the economy if people are not getting the same loans and things aren't flowing in the same way, right? People even can go to private folks for credit.
Well, I almost think of it in like decades. If you really look at the decade post the tech bubble crash in March of 2000, we had a kind of a more normalized rate environment up until the great financial crisis. Then we had rate suppression activity, and so you've now got compelling short-term and longer-term rates in the fixed income markets for investment capital. And, they keep pushing out when the Fed's supposedly going to cut. But, I think we're back to more normal allocation of capital where, the central bankers of the world don't have their thumb on it. And so I think the market will broaden out. But again, short duration, high yield credit's a compelling investment in my perspective vis-a-vis the equity market. But again, if you look at the trailing 3 years, a lot of people wouldn't have thought so in April or May of 20 in the pandemic crisis, but we've now got annualized equity returns that are more normalized. Again, 10 to 12%, depending on what equity index you're looking at. So I try to see through the noise and try to hang on for, a long-term compounding where I can.
Yeah, you want to give me a quick thought on ICMUX, the Intrepid Funds income here, as this is up right now as we're talking about this? Quick thought there.
Yeah, it's a great alternative to the equity market in my view. We've been a short duration credit investor for over now almost 2 decades, and in a falling rate environment, we were step slow. In a rising rate environment, we're not doing anything different. It's just showing people how a short duration high yield credit can perform. Cash yields in that fund are now in the 9% plus range. And so again, looking at the 3-year number I gave you for the equity market, I think that's a compelling alternative for somebody who wants to be higher in the capital structure and not take equity risk.
All right, let's get to the names. So if you remember the tech boom and bust, of 2000, Y2K, then you remember Mr. T. Mr. T is now a spokesperson for Skechers. And I couldn't quite figure it out, but it turns out they have him on the radio saying Skechers no tea. There's no tea in Skechers. I mean, it's a great ad, but I know that the Skechers sneakers and shoe wear very popular. Tell me a little bit about this stock.
Well, I should have worn my gold chains. My last name starts with a T too. It's a growing brand.
Pity the fool.
The father-son team's done a great job. There's 2 share classes. We obviously don't own the controlling share class in Intrepid Capital Funds. And, I think that the business is built to last. They always have plenty of cash to operate. They're not overly levered. And it's the 3rd biggest brand in the world now. So I like to say I like to own things that people need and use, beer, shoes, and underwear. Skechers falls into the shoes category.
Yeah.
What's the 3rd biggest brand?
What point is more friendly, more attractive sometimes than some of the fancier brands. And Levi goes into a good old American name. People love their Levi jeans and more that Levi makes and puts out. Tell me about that one.
Well, again, you've got founding families still involved, going back, believe it or not, to the mid 1800s now. I would say
Crazy.
for Father's Day that, you know, every dad needs a new pair of red label Levi's as a Father's Day present on Sunday. You got 2 share classes. Again, not over levered business. It's, you know, $6 billion market cap. You're getting paid to wait, as I like to say, with a little north of a 3% dividend. And it's an iconic brand. If the family ever decided to monetize it, I'm sure there's a PE firm panting at the door to help them with that transaction. So I think that you could get a higher valuation where they trade today in the mid-teens if there was a transaction to occur.
Okay, and then what about Garmin? This would have been a very popular Father's Day present too. You know, another great brand.
Yeah, you know, as I age as a 61-year-old, I can measure everything I don't want to know about my level of fitness with a Garmin. But you know, it's an iconic brand in terms of cycling, running, aviation, marine. Really interesting story, though. The 2 founding families are control.
All right, we'll check it out, Ace.
They have a 20% equity interest. There's only 1 share class. The business went public in '92 with about 200 employees and $200 million in revenue. It's a, you know, it's a run rate today is significantly higher than that. So it's been a great compounding story. And the business at a $20 billion market cap has $2.7 billion in cash and really no liabilities to speak of. So they're going to continue to do well in my view. And I think the shares are worth more than where they trade today.
All right. Well, good to see you, Mark, and I'm wishing you and everyone a happy Father's Day this weekend. An important day. Certainly gets that kickoff of summer feeling, too. Mark Travis, thank you. Intrepid Capital Funds. Plenty more to come right here on Trading 360. Our 360 Spotlight focuses on the semiconductors. We're watching Intel and Micron expansion plans. Our disruptor, Squarespace. And our 360 round, we'll look at today's consumer sentiment data. A lot to discuss there. But up next, it's the big 3. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes through the technicals. Scott Nations will take us through the trades for ExxonMobil, Home Depot, and AMD. Trading 360. We'll be right back.
Did you make this, Ace? I forgot this was Bed Bath & Beyond.
Crazy dream.
What?
You're not supposed to lay in the beds, but I do sometimes.
I do sometimes.
I'm back in the store. I'm young again. I'm young again. Well, I mean, you're not young. I'm young. You're kind of on the back nine. No. I'm just teeing off, baby. Look at you. Hey, you want a friend? Yeah. You want a friend? Yeah. I'll be a friend. I'll be
It was all a dream. So basically that you never invested in barbecue. It's all fake. You still have all your money back. Or you're waking up and barbecue's at $20 a share. Arrival still going. They still selling off. FFIE ripping up 17%. Yeah, FFIE's chart still looks nice. 2 more Tesla puts, nice. And chased RC. Oh, so like a long dream, like pre-GME. You made money on GME though, Ace. FFIE is a nice breakout. Decor, I'm just day trading like futures. I don't have any long-term bearish plays per se. I guess I do. I have Lucid, Joby. Those are only 2 long-term puts I have right now. But yeah. Yeah, you might be early on Tesla. It's hard to know still. I mean, it's just consolidating, so see which way it breaks. But getting enough time, it shouldn't be a problem. I feel like AI is a good sector to get some bearish stuff on. Don't even need a whole year. 6 months be fine. I guess yeah, January would be 6 months. Not just AI, but all the AI stuff. Oh, I guess these have come back down. I guess that would be like NVIDIA. I mean, Microsoft and Apple are both at all-time highs. Ace, you made money on GME though. About all the experience you got in all that time. You didn't lose your money like most people, including me. You actually still have your money from that. I know you think, oh, if I had that money, I could have made money here, I could have made money there. You don't know that. I would have lost it. Now, chased him on barbecue. Yeah. I mean, you did. When you exited, that was your exit. Deep SPY starts to sell off here today. It's just been so slow around VWAP. AP down 5 1/4. Yon's up 1.4. Yeah, you're talking about barbecue falling in there. Yeah, you just had to exit when he did. I know, none of us knew what was gonna happen to OTC, and this is still very much an outlier. This is not the rules' exception. So, yeah, some people got lucky and just bought at the low into OTC. Almost looks like it's setting up a bigger head and shoulders here, actually. Yeah, I see it. I see it, decor. Let's see what happened in January, February. Like, didn't just sell off, consolidated for a while. But yeah, you've got plenty of time. And then it just did this. So the actual low took 2 months to get to. But no, I like the play. You've got enough time on it, so it's not a problem. I think it's good. $2 million shares at 9 cents first buy. Crazy. Yeah, I mean that was pure luck. Like that was a stupid play. It's working for him, but that doesn't mean it wasn't stupid and he got lucky. There you go, barbecue up 9.5, 21.37. Buy coming down. Like you can be lucky, but you can't be consistently lucky. So have rules, stick to them, and over the long haul, that will succeed. People that gamble and get lucky, yeah, it goes, it works well until it doesn't, and then it's, you know, lose it all. I mean, the 741 docket. $21.38. Let's see what barbecue does here. Still want to get over that 23.40. That was never a level I wanted to break. Could have even closed there, which would have been smart since I was a support. I didn't want to break. Save me anguish, but where would I have bought back in? Maybe now. Today. Does seem like it's starting to reverse though. Between yesterday and today. Really, this bull flag fail was such a nice exit. Could have been. It's alright, we'll get there again. I might be finally coming down here. If I even waited till today, which today would have been 23%, so I had 23% more shares. If SPY breaks the neckline of his head and shoulders or bounces again. Liechtenstein.
Goes into this horizontal pattern where we establish value, but you can also see migration of value in this instance to the upside. 3 areas that formed at higher and higher levels, and you get a bit of a pattern playing out here. Now, as we take a look, stepping back from the 15-minute time frame, you're going to see that this run-up that we just looked at kind of puts us into the upper extreme of a range that we've been in going back to the beginning of February. You can also see the high conviction separation between these 2 areas of consolidation, right? So you have that horizontal phase around 325, the big breakout to the downside, news-driven, earnings-related, and then you get that consolidation as the market accepts this new lower level. Again, we're balancing right now around 290. All we're really doing is testing the upper extreme of a range that we've been in again since, well, we'll go back to
Antonio Banderas.
Very random until we get above or below the upper
Antonio
extreme.
Liechtenstein.
Looking for this one to take out that lower extreme around 270, 275, and you can see that the bears have done pretty well here for a while, off the highs that we saw up around 421, going back to the end of 2021, beginning of 2022. We've got areas of consolidation forming at lower and lower levels. This area, as we mentioned here, we're just testing the upper extreme of it right now.
You've said, was that the movie with J-Lo, or who was in that? I feel like I didn't know that movie.
Still some heavy lifting to do for the bulls before they can really claim
Robert Rodriguez.
In this instance. And notice how we're testing the upper extreme of this range. If we were to get through it, you've got some
base still selling off.
340 in a very similar
FFIE
fashion,
red
right?
candle.
The upper extreme of a longer term range that's been
Rival
forming.
back to VWAP.
Yeah, I mean, I see a long-term trend to the downside. Bit of a chop around this balance area that we're forming right now, but
barbecue at the highs, 21.39.
Yeah, and we're sure you're getting some good food and drink at your sister's house for all that hard work, I hope. Scott, let's get to any final thoughts there before we get to AMD.
There you go, barbecue, new high.
I agree that in the short
21.49.
the Home Depot chart
10.2.
That's why the very first thing I said was we're getting a short-term discount in price right now, which is a hangover from COVID.
And And then you have a trade for AMD. I wanted to hear some of your
Desperado,
opinion
yeah.
on this one.
I don't know if I saw El
we're in a
Mariachi.
mini bubble in AI. That is not a statement on what artificial intelligence or machine learning might do for
Borrowed
the
everything?
economy over the
Nice.
next 10 or 20 or longer period years. It's a statement that we're in a short-term bubble, and we've seen plenty of these. But the fact that we're in a bubble, and particularly that AMD is
150.
in a
That's
bubble,
another level. Another
informs
support
how I
level.
want to trade this. So I want
Could
to
flip
get
this
some
back into
downside
support.
exposure, but I want to define
That would
my
be
risk,
neat.
so I'm not going to short the stock. We're in a bubble. We could get into a bigger bubble, but I want to buy a put spread in AMD. And,
All right, SPY's coming
given
down here.
The PE is 40, that revenue is due to fall 2.5% this year, that earnings is going to fall, EPS is going to fall by nearly 18% this year, and the fact that the stock's up 90% year to date, buying a put spread is perfect for this. And so I put this together right after the open. I wish
Pretty
I'd
cool,
executed this trade then, because it's gotten substantially better. But with the stock recently at 121 and a half in July, I can buy the 120, 110 put spread.
Going barbecue. Yeah, really light, pretty light volume today on it.
35% of the width of the spread, even though
Don't
we're
bounce on that
almost right
support,
at that
SPY.
top strike. And again, I'm defining my risk. What we pay for the put spread, $3.50. That's our max loss. Our max gain of $6.50 net. We're going to realize that as long as the stock is below 110 at that July expiration.
Yeah. And I'm just going to ask you about that AI bubble, but let me just get Ben's thought on this chart. Ben, the chart, please.
Yeah, the weakness that Scott's looking at here is very much against the grain in terms of what we've seen on the bigger picture. Short-term weakness, longer-term trend up, but breaking through a key pivotal area. So there could be some room to the downside here, Scott. We could see some further weakness. I can understand why you're looking at the puts here, especially when you dial in on this most recent price activity. We've got 1-minute candles here, Nicole. I never do this, but to Scott's point, this has been a chart or a stock, I should say, that's been on the move throughout the day here today, taking a look at some of the price activity and how we can identify. Look, you can see the areas of consolidation that have formed here. We're currently balancing around this 122 area, actually trying to break out of it right now as we speak. But again, the market here has seen some energy to the downside. These are 1-minute candles, though, so let's not do too focused on this granular time frame. Stepping back and taking a look at the 5-minute candles, though, you can see this move that we just looked at, part of that longer-term trend to the downside, 134, your top left corner, again, currently balancing around 122.
Bar and talent is mostly Americans.
After breaking out to the downside, a very well-defined example of that sideways consolidation we're talking about throughout Tuesday, Wednesday, and then look at this, the initiative phase, the imbalance that's occurred, lower lows, lower highs, a stopping prices reach, we go sideways, and actually looks like we're going vertical again out of this balance 122 that just formed throughout the day today on the 5-minute candles.
I kind of retested the lows from extended hours.
I was talking about how it's against the grain, because here you can see on the daily candles a trend up, but breaking through that pivot area 123 opens up a door for a potential retest of the lower extreme of this range again around 115. So I like Scott's look at this as a short-term play to the downside with well-defined risk as well. I think that's important because of this longer-term trend to the upside.
Right, understood. All right, thank you for that, Ben. Scott, I just want to, if you want to comment on Ben's chart there, but also you mentioned a mini bubble on AI. So you're not talking about AI itself, but some of these stocks that are hitting, NVIDIA, new high, it's now the $1 trillion company, for example. Do you think some of these names, you could even name some names that might be too frothy at this point, you wouldn't touch them?
Well, NVIDIA seems to be the poster child for what's going on. I'm not certain that company deserves a $1 trillion valuation, but some of the secondary names that are...
I don't think they're inverse
in
each
the
other.
leadership space as far as technology that NVIDIA are being pulled along as far as price is concerned.
You've had 3 days of IP going down.
Picking on AMD right
Barbecue's
now.
not been going up for 3 days.
Earlier this week, they tried to make a big splash, talk about a new chip that's going to compete with NVIDIA's chips.
A little bit, actually.
I have to admit,
Last 2 days it's been going up a little bit.
That they're not going to have those chips until the end of until next year. They're going to test them this year, but they're not going to be able to ship them until next year. I mean, I don't really want to get that prospective.
That actually is kind of crazy.
It's trading at a 40 PE. That's going to have lower EPS this year.
You might have found an awesome arbitrage. I know people have been talking about it, but I've not really bought into it.
And so while they tried to make a big splash this week, that's just not some place I want to be. The stock might double between here and the end of the year because we're in a bubble. And I don't want to constantly be betting against companies that are in a bubble, but I think that given how the stock has reacted to the company's announcement earlier this week is a good setup for a defined risk bearish trade.
Thank you for that. A good explanation. I appreciate that response. Scott, always great to have you on the show. Thank you very much to both of you for the big three today. Scott Nations, President, Nations Indexes, and our
barbecue.
Liechtenstein. Thank you both.
Liechtenstein. Barbecue at 2178. And I have one transaction up there. Let's see how many shares. 101 shares at 2178. You probably did a market fill.
Trading 360 next.
Volume's still light, but kind of been picking up a little bit since like 11 o'clock. You know, a couple of these 5-minute volume bars are bigger. Up 8%, 8.72. Liking it. Getting that inverse head and shoulders. Bottoming formation. And once IEP finds a bottom, then we'll sell out of barbecue. Find IEP. Pie, very, very slow. Coming down though. A little bit at a time. A lot of volume there on barbecue. $400,000. Saudi Arabia is looking to China for business instead of the US. Fly's kind of setting up a bear flag here. Kremlin aide says early withdrawal from grain deal unlikely. John Hickenlooper's spouse just sold tons of stock. 50K in SIRI, 250K in CMG, 250K in INTC, 250K in AMT. They realized 100% gains in CMG after holding for many years. I love CMG. Took them many years to realize 100% gains? I suppose so. Bull needs to have a dividend, man. What you doing? They make gobs of money. The decline of plant-based meats has decimated the value of shares that Impossible Foods offers to its employees. It is offering shares at $167 currently. In October 2021, it was $14.64. This is down 89%. David Rosenberg says the Fed found a way to tighten policy without tightening, by holding rates and signaling hikes at the same time. And Powell's been doing that for like 2 years. Just scares the market, and then doesn't have to actually do it. The market sells off from it. Martha Stewart has said that America will go down the drain if employees continue to work remotely. ECB's Villeroy. Nobody should rush to a premature conclusion about our calendar, nor about our terminal rate. San Francisco, New York, and Los Angeles top the list of major global cities that will have the most empty offices space by 2033. Many investors have now turned from being bearish to having a bit of FOMO. Perfect time to be bearish. Just when they all start flipping around and trying to ride the wave. Do it. Do it. Rum and Coke. Do it.
Revenue of $4.83 to $4.87 billion. That's in line with what analysts were expecting, but the adjusted profit of $3.95 to $4 a share is above consensus. For the full year, the outlook came in at the high end of estimates. Going back to AI, there was a lot of talk about it on the earnings call. I was running through the transcripts, a few things that stood out. We believe generative AI will drive both further accessibility and adoption of our products. Our generative AI offerings represent additional customer value, as well as multiple new monetization opportunities. Adobe also has this new generative AI product called Adobe Firefly. I was taking a look at some of the demos, and it's pretty cool. You can just type in what you want a picture of, and it will create these pictures, and then it will start to, you can kind of customize it based on that. But analysts are turning more bullish after these results. You can see some of these price target hikes. Just to name a few, Jefferies boosted its price target to $600 a share from $530, kept a buy rating. Says Adobe's fiscal 2024 is shaping up to be another solid year, regardless of the macro environment, as the company firms up its AI monetization plan. Goldman Sachs raised to $550, also in the buy camp. MoffettNathanson is in the market perform camp, so a bit more neutral, but boosted its price target to $540 to reflect changing position in AI and potential for the growth it could generate. Says the actual impact in terms of monetization, or in terms of revenue impact, will start to occur modestly in Q4 and then grow from there. So that's kind of a timeline in terms of where MoffettNathanson thinks. But you know, I had mentioned they're in the market perform camp. If you take a look at the analyst breakdown for Adobe, it's had a really impressive week and month, up about 20% this month, up about 50% this year. Analysts are kind of split on this name. There are 35 that cover the company, 19 have a buy rating, and 16 have a hold rating. So this isn't a completely, you know, bullish camp for Adobe, but we have seen strong price performance, and we're seeing it continue today, and it's up about 10.5% this week.
And I'm starting to think that maybe it was lagging in the AI plays, because now it's proving its determination to lead in the AI market, whereas maybe over the last year or two, people weren't really looking to Adobe for AI. I mean, I saw the high in October.
Mullen dumping.
Was almost 700.
Yeah, Mullen green to red.
But this one, as you noted,
down 3% now.
Had a great, it's at up 50% this year, but it's not at all-time highs like Nvidia.
The volume again.
Well, I think there was some concern
already at 161 million.
could actually hurt Adobe's business and make less people customers.
Yeah,
that's
but Adobe
crazy.
is very much remaining firm that it's only going to help, you know, improve their products and improve their monetization plans.
I'll hold on for the ride.
It's definitely coming out an AI winner, at least at this point.
Without a doubt, and potential for growth, and some of those analysts really noting it. All right, Caroline Woods, good luck there at Adobe today. Caroline Woods, Senior Markets Correspondent. Thank you. All right, let's spotlight some more of the semiconductor space right now.
GNRC down 2 1/4.
Chief Investment Officer at
Where are you, Al?
Partners. Glad you're here. I know you're going to talk about Intel and Micron, and just give us, you know, the buzz. What do you think is happening here? And do all the players participate or not necessarily?
Oh, you're asking me to predict the future, and that is hard, but I'm going to give it a shot here today.
So what you really are focusing on.
Yeah. So let's
Bobby's popping a little bit, trying to break this 2146 area.
Everybody knows there's a trade war that is centered around chips, and the non-Chinese companies of the world are trying to restrict the really high-end chips from being used in China, specifically for AI and military sort of applications. So that's the environment we live in, and China's hitting back, saying, "Ooh, we're not going to buy any of those Micron chips." But the craziness of our world is, apparently Micron is going to invest more in their Chinese operations, and I think it's good because they may not be selling the product there, but they certainly can make the product there. And it looks like this is a good acquisition for them. It's a little too nerdy to talk about what is going on at that, but you'll have to take my advice that, or my opinion, that this is a good thing for Micron to add to its stable of things it can do well. And that's something called packaging. And no, it doesn't have cardboard. This is a different kind of packaging when you're doing chips. So that's thing one. And thing two is Intel, it looks like they're going to get more money to become a fab for in the German market, in the European market.
The Germans.
Spreading around the
Barbecue 10% up, 2150.
Chips around the world is very healthy for everyone in the world.
Yeah, and Intel was a name that you've mentioned to us prior, and sort of when people thought it was a little bit out of favor, you thought it really had potential, right? That we shouldn't write this one off as one of the oldies.
Sure. Well, there are wasting assets out there that people can ride down into oblivion. And I'll just call one out. I can't remember the ticker symbol, but there's somebody that makes tapes. Remember whenever we had computers and in computer centers and there were tapes, and that's how people backed it up. So, that is a cash cow that somebody is owning right now for the dividend. That is not what Intel is. Intel is going to and has the ability to create fabs around the world, make chips for other people, maybe even NVIDIA, and return shareholder value by doing that.
Yeah. I mean, look, we've certainly had an AI-driven rally. We've had semis. There was a time where we would watch the semis and know what the market was doing just based on the demand, the supply chain issues. Now you have the battle
AP
of
down
these
6.4.
They're going to be making their own chips, right? And that's been a topic too. When you look at Tesla and Apple and how they rotate what they're using and how they're using it, that must be something that you think about, right?
Absolutely. And I think if you are skewing to processes and companies that allow for more exotic chips to be made at this point in the AI hype cycle, you're not going to go wrong.
Understood. And just on the big picture of the market and such, I mean, the Nasdaq's at new highs, the S&P's at, these are 52-week highs, but we've had a pretty good win streak running right now, for 8 weeks in a row. What are we going in the 9th week for the Nasdaq? The S&P has a nice run too, longest win streak since 2021. So any final thoughts here on the big picture?
No, I think the markets are telling you what the economy is going to be like 6 months from now. We're going to see, right? Like, we never know. There's a lot that can happen in 6 months. But right now, it looks like jobs and the interest rate environment are holding up. And that's what the market is reflecting.
Yeah, it really is. It's pretty amazing how resilient everything seems to be. Kim, it's always great to have you on the show. You inspired me to bring my denim jacket out east this weekend. It's so refreshing and vivacious, and I was like, wow, it's denim jacket season. So thank you for that reminder. Yeah. Great to have you on the show always, Kim. Thank you so much. Kim Forrest, Boca Capital Partners. Coming up next, the disruptors, and we're looking at Squarespace soaring after acquiring some assets from Google. Well, Kevin Green is all over this. He has all the details for us, and we'll explain next.
Yeah, barbecue 10 and a quarter, 21.49. Reaching for that high again, potentially. Fed Waller says, this was this morning at 8:30. Right now, everything seems to be calm in the U.S. banking system. The banks are sound and resilient. The banks are sound and resilient. Says the U.S. economy is still ripping along. And wholesale sales, April, month over month, it was negative 1.4 versus negative 0.1. Previous estimates were negative, or no, positive 1.6. Wow, missed estimates by a lot. Most U.S. cities' office vacancies are hitting all-time records. Putin says there's progress in using national currencies in international settlements. S&P 500 is now at 15.3% year to date, the best start to a year since 1997. Nouriel Rubini has yet again said the U.S. is bound for a recession. Housing bust comes for thousands of small-time investors. Lululemon employees risk losing their jobs if they try to stop a thief from stealing products while on the clock. I think I figured out where to go steal stuff from. Mentions of retail shrink or theft from retail has hit an all-time high. Oh, what do you know? How could that be? Base still selling off. Front running itself. Iron Net's ripping 50%. Thing just waking up. A lot of volume on it yesterday. I may be coming down here. Barbecue, hanging out at the high, 10%, 2147. IronNet moved back down to VWAP. Surprised this thing didn't get halted. Up 50%. Came down to up 30%. Just a couple minutes it dropped. Definitely within inside the parameters of being halted. I want to pick some up at VWAP.
It's coming in down in the right direction. That sentiment number, 63.9, beats the estimate of 60. I mean, what'd you make of it, Eddie? What did you think of it?
Well, I think the consumer continues to be savvy about how they spend their money and manage their balance sheet, so to speak. There's some interesting trends going on where disposable income is continuing to decline. It was 0.3% in April, and was 0.4, 0.5, 0.6 in the months before that. But what we see is that actually labor participation among 25 to 54-year-olds is at the highest it's been at 83.4% in April. That's the highest in 15 years. And that, consumers are actually being smart about what they're doing with it. And so they're shifting their money. They're not spending on goods. According to MasterCard data, spending on experiences is up 65%, whereas spending on things is about 12%. Travel continues to be plus 15% year over year. So they're spending on the things that they want. They're cutting back on the things that they aren't. And they're managing their income and balance sheets by working more and, trying not to overspend on housing. That's what we see.
Yeah, so they are very selective on how they're spending. And Marino, as this 4-month high comes in for consumer sentiment, I also noticed the outlook for inflation. Even if you go out 5 years, 3 to 5 years, they are expecting that inflation expectations, those are dropping. And they were, less inflation than even most people were expecting. So that was good news too. Well, how did you read into that?
Well, it's interesting. I don't read much into this number today. Granted, it was a good number.
I was trying to get into IronNet. I realize I have more day trades on this account.
Frankly,
Breaking out again, 56%.
Consider is that we have $1 trillion credit card debt on the consumer balance sheet right now. This is 20% more what used to be 1 year ago, right? And also the savings is going down by half. Used to be 8% in general, in average, is now 4.5%. So I don't see this number to be, a great number. And in context, we're 25% below the average of what has been in the last 20 years. So at the end of the day, yes, there is a positive number.
An order, see if I'll get filled.
Much into it. Consumers are selective right now. They are thinking about what they're spending. It's not necessarily a bad reading, but frankly, it's something that we are looking at in the context of a lowering of inflation. To your point, lowering inflation is also good, but finally we're seeing the measures of the Fed working.
Just 80%.
And I think this hopefully is just the beginning.
85.
Right. I did find, and I understand what you're saying, and Marina, I wanted to hear what your advice is to folks that are investing. But Eddie, I will ask you, as you look and you noted that young folks are employed and, adding to the employment.
90%.
Good news. What are the final thoughts here? Because the Fed could keep
95.
Yeah, I think the consumer has done their part. I think, as was previously said, we are kind of whistling past the graveyard with debt levels that have been the highest that they've been beforehand. But you know what? The consumer has come out of this pandemic period. They're trying to figure out work from home and this and that. And I think that at the end of the day, the roller coaster is going to continue. The consumer is going to hold
Cancel
up their
my order.
bargain, and it's really on the Fed to not be slow and reactive on this, because the dominant domino that's yet to fall is housing. Rents are finally coming down. They're negative year over year, according to Redfin. And housing is a single largest
100%.
expense. So if the Fed can do its
98.
job and cut rates sooner, that'll help out with the housing, and the consumer will have led us through this period of uncertainty.
105.
Marina, what do you tell folks who have their money in the market, or they're sitting on cash waiting, or what do you tell them as for investing?
Well, we're private investors, so we typically do private equity type transactions. But maybe as a proxy, we are looking at consumers still, but mostly in food, restaurants,
120.
and travel and apparel. These are the sectors we're looking at.
Yeah, this thing's not halting. Isn't that weird?
Some resistance from the
Totally
consumer
subjective.
making big commitment.
125.
To the earlier point, housing and related big ticket items. So if you want to look at companies, we're looking at companies in the private sector. By
Just up my order.
In the public market, you may be looking at companies that are more geared towards immediate selective consumption, like the one I mentioned earlier.
All right, thank you both so much.
The cost per hour is up a little bit. Yeah, it's at 15% on barbecue.
Keep it
When it's made its big moves, it's been at like 100%. But yeah, it's been at like 8, been single digits for, you know, since like April, May of April. So yeah, it's doubled. Set up another more consolidation. This is about the daily height that it gets though, so be careful. See all these big candles. Don't usually get much bigger than this. Could be different this time, but
which is down on news that half of its China's customer revenue could be at risk. And like Folio will break down consumer sentiment data on Best Buy, which has rebounded about 9% so far this month. Now, 2.5 hours into the trading day, stocks are relatively flat as Wall Street traders caught between the fear of missing out on the stock rally and the artificial intelligence euphoria are sending the market towards its best week since late March. The S&P 500 is up was up for a 7th straight day, and the NASDAQ 100 is now up about 39% so far this year as the risk-on trade continues. Now let's take a look at those 4 major indices. The benchmark barely in the green now, up nearly 0.1%. Dow Industrials about the same, and the NASDAQ 100 just slightly in the green. Russell 2000 lagging once again, down over 0.9%. But to help me break down the market action, let's bring in my co-host Kevin Hinks. Kevin, you know, maybe some consolidation, some warranted consolidation here to end a pretty strong week for equities. I mean, the NASDAQ
fatigue.
NASDAQ 100.
Exhaustion.
Yeah.
Out of money.
I'm all of those things.
Yeah. What exactly? Fill in the blank here. Are you exhausted? Are you fatigued? Are you out of capital?
Check.
What are the reasons that you can't buy the market right here, or you're stalled? Well. There is no real economic data. Consumer sentiment was actually stronger than expected. I've got some issues with the consumer sentiment. I think the sample size is too small.
Yeah.
I think
what's it? 500 people that
420 in mid-month, 600 end month.
Yeah.
I'm sorry, I can't pay too much attention to something that has so little sample size. But that's another story. The market still liked that it was a good number.
Yeah.
Fed speakers today, Christopher Waller, hello.
Yeah.
Whoa.
Putting the hammer down,
he
right?
He took the market to the woodshed, didn't he? I'll read you the quote that I like from him.
Okay.
Let me end by noting that some have argued that the Fed's tightening of monetary policy was significantly responsible for the failures and stress in the banking system. They argue we should have...
Yeah, Hugh, I like dividend stocks in my long term.
Let me state
there's not much to
the Fed's job
to focus on. I just kind of buy and hold them.
Mandate, and right now that means raising rates to fight inflation. Here's where it gets fun. It is the job of the bank leaders to deal with interest rate risk. And nearly all bank leaders have done exactly that. I do not support altering the stance of monetary
this thing just
policy
pumps and it does this.
Here it comes.
Does not expect to be able to file Form 10Q for quarter ending April 30th.
Yeah.
That was 18 hours ago.
But I think we talked about that.
Why not pump up 130%?
There were some bad imposters in that specific sector.
But the common theme from people that speak on TV like us and others has been, oh, you broke something. Raise rates till you break something. Oh, you broke something. No, they didn't.
Yeah.
These
breaking out again of this flag.
They're not breaking something.
Yeah, and you could put some of the blame on the administration for.
Sure. Oh, you mean by 4.8 trillion in spending over 2 years?
Yeah. That might have something to do with inflation.
I've got all the acts right here. I listed them all out. There's like 8 of them.
Kevin's got it.
I'm on a little bit of a roll. I'm bored on a Friday.
All right. We do have one of the stocks doing well.
150%.
The big one yesterday was.
When did we start watching it? It was up like
up over 2.5%.
30.
Let's bring in Caroline Woods, senior markets correspondent here on the network, to kind of break down these results. You know, the run up before maybe capping some of the upside here, but pretty good report here from Adobe.
Yeah, it's certainly the case. We are still seeing about 2.5% gains today, but as you said, there was a run-up heading into this report. Shares up almost 11% this week, about 20% this month, and then, of course, about 50% so far this year. But Adobe beat
kind of like
the top and bottom line. Also,
like I was saying, for the daily candles on IRT, this is, yeah, now it's bigger than a normal daily candle, even on like these spike days. So,
incorporating AI into its products, so it's shaping up to be an AI winner as well. In terms of the actual numbers, EPS of $3.90.
It'll be a sustained rally for a couple days.
Expectations of $3.78.
I wouldn't hold it, but
to $4.82 billion. As you can see,
the next major level's like 50 cents.
Net new digital
So just keep watching to see if it consolidates and keeps breaking like we've seen. Rip, consolidate, rip, consolidate, rip, consolidating. Wow, just crazy volatile.
$7 billion. That's in line with analyst expectations. And an adjusted profit of $3.95 per share to $4 a share. That's above consensus. Its full year outlook came in at the high end of estimates. Expects to earn between $15.65 to $15.75 per share on revenue.
It's just crazy they haven't halted it.
$19.25 to $19.35 billion.
Dollar cost average compounders is the 8th one of the world. Pretty awesome.
Says it believes generative AI will drive both further accessibility and adoption of Adobe products. Says its generative AI offerings represent additional customer value as well as multiple new monetization opportunities. You know, there was some
just consolidating up here, Cameron.
AI could actually act as a competitor and make the need for Adobe tools kind of decline, but it's definitely shaping up to be a winner. As I said, it has posted some impressive year-to-date gains at this part and only adding to those today on the heels of this better-than-expected report.
Caroline, is there any more prominent company than one that uses cloud software to for documents, photos, and videos? Is there any more relevant company right now? And throw in the headline AI winner, and you're off to the races, Caroline. But here's my favorite. When Tom and I joke about analysts all the time, right? We tease them incessantly sometimes. One firm, I'm not going to name the name, they raised their price target from 460 to 440 to 525. They raised an $85 price target and kept it at a neutral rating. How is that neutral in any way, shape, or form? $85 higher.
30%? Heck yeah, man.
actually noticed that about a few different firms, and I can go through some of the analyst actions that we did see. And I was just talking to Nicole about this. There are 35 analysts that cover this company. 19 have a buy rating and 16 have a hold rating. But when you take a look at the median price target, it's $540. So it's actually, you know, almost $40 higher than $37 higher than where it's currently trading right now. But we did see MoffettNathanson boost to 540 from 360. So I think that's even a bigger jump than what you mentioned. And they kept a market perform rating on the shares. They boosted the price target to reflect Adobe's changing position in AI and potential for the growth it could generate. Says the actual impact of AI on revenue is expected to start in Q4, and that would just be a modest impact in the quarter and then grow from there. So I don't know, maybe they're waiting to be all-out bulls until they actually start to see the impact on that revenue and see more than a modest impact. But yeah, I mean, it's still a very bullish price target. We also saw Mizuho raise their price target to $520, saying in our view, Adobe remains well positioned to benefit from digital transformation with its highly comprehensive end-to-end offering. In addition, despite macroeconomic forces, we believe fundamentals appear to be on firmer ground, and Gen AI offers legitimate upside potential over the medium term and beyond. But they also stuck with their neutral rating on shares. There were some more bullish. Jefferies kept its outperform rating on shares, boosted its price target to $600, but largely in part to AI monetization plans. Goldman Sachs raised to $550. So definitely some bullish price target action, but we're not necessarily seeing that reflected in the actual ratings. And I'm glad that kind of
momentum might be slowing on it,
Kev, because I was thinking the same thing.
Yeah, I think if you attach AI on anything, you're going to get, you know, some price target hikes. Yeah. Even the Kroger CEO post earnings mentioned it 8 or 9 times in their Okay, so yeah, trying to boost maybe the sentiment there.
How does AI come into grocery shopping?
Efficiencies. It's all about efficiencies because they got low margins. I think that's what he's getting at. All right, thanks to Caroline Wood, Senior Markets Correspondent here on the network, breaking down the Adobe earnings. But now let's bring in Joe Mazzola, Director of Training and Education.
Yeah, they're starting to break down.
You know, pretty good rally.
Look for a test on VWAP.
Equities. I wanted to kind of get your thoughts on that, as Kevin and I have been pounding the table over the last several days that, you know, technicals might show that the NASDAQ and S&P 500 are overbought, but I don't think the market cares at this point.
No, I mean, we talked last week that I thought 43.25 would be a level to kind of keep an eye on. That was the August 22 high, and that was also the 61% Fibonacci retracement. I believe we blew through that. We didn't even bat an eyelash as we flew through it. You know, look, guys, we know this, that once some of that FOMO trade starts to occur, and we know that there's a good amount of cash that's still been on the sideline. We know that there was a lot of bearish sentiment, you know, from our own sentiment surveys, and from what we've seen, you know, from other groups that take sentiment surveys. So there was a lot of bearish sentiment coming in. You know, you still got what, $5 trillion in money markets, so there's still money on the sidelines there, and I think people are kind of looking now and saying, okay, the S&P is up, you know, 14, 15%. You know,
maybe building a little head and shoulders here.
Feeling comfortable earning our, you know, 4% or so in a money market account. Now,
you didn't get out?
Expand those.
I thought you said you made a quick 30%.
That could be what we're seeing here at the end. I think, you know, a couple levels that I'm looking at in the S&P 500 now would be around 45.50. I think would take us back to the April of 22 levels. But yeah, you're right. I mean, you know, RSI is 77, so it's definitely kind of in that overbought territory. But remember this, guys, I always look at the RSI not necessarily as overbought. I look at it if it's going back down below 70 from overbought as a better potential bearish entry signal, or at least kind of a short-term momentum indicator that some of that momentum is starting to fade. Not when it's overbought, but when it rolls back down below that 70 level.
I think
barbecue hanging out the highs, 21.30.
Talk about them on the show. I think they're
up 9.2,
especially when you see parabolic moves like we've seen in the major indices. But Joe, if you look at this means that valuations are starting to ramp up here, even though you know the Fed came out and said, hey, we're going to see slower growth towards the end of the year, not negative, but
GME down 1%.
When you see valuations start to explode,
IEP starting to bounce,
that
down
maybe
5%.
isn't supported by what you're probably seeing in the data that's upcoming.
Yeah, well, it'd be interesting when we have the July earnings start to roll out to see whether or not analysts are starting to kind of downgrade those earnings a bit, because we did see it coming into the last earnings cycle, right? The week or two right before earnings really started to kind of kick off in April, you started to see some of those downgrades. We haven't seen that yet. That's been something it's been a little bit puzzling to me, is the optimism for the second half earnings. Even in the higher rate environment. And it seems like the market has just been kind of trumpeting that sound going along with those. So we haven't seen those downward revisions yet. There's still expectations for real positive growth in the second half of the year. And then if you kind of look at some of the macro data and what specifically you're seeing in the fixed income markets is this idea that, pushing out the recession until 2024, I think you see a lot of that in some of the cyclical strength that we've seen in the last couple of weeks. You started to see that rotation back into some of the cyclical names as they're starting to catch up. Just take a look at the equal weighted index. Take a look at the Russell. I mean, those are those are indicators that some purchasing is going back into some of those underappreciated assets that didn't do as well that first half of the year.
Yeah, and to expand on that a little bit, Kev, to Joe's point, that's what people are waiting for. They talked about the Magnificent Seven leading the market up higher. Now everybody's talking about, well, the rest of the market's going to start to play catch up. But why? Why should they? If we're starting to see slower growth, interest rates are still elevated, yields up higher today, dollar up higher today. What makes everybody so comfortable that we're going to have that soft landing where, the equal weight, which is up, S&P 500 equal weight's only up 5% this year. SPX is up 15% this year. What's to say that they're right, that the market's going to kind of continue to move higher because we are going to see that rotation that Joe mentioned?
When we talk about markets diverging like they have, one of two things has to happen, right? Yeah. Either the rest of the market has to catch up, or the part that diverged, like the NASDAQ and those Magnificent Seven, have to come back down. One of those two has to happen, Tom. One last thing to talk about. If you're watching at home, put up a 1-day, 1-minute chart of the VIX. And with a long weekend, the VIX was actually up yesterday during the day. Did you notice that with the market up?
Up 4.5%.
Right.
Yeah.
But once about 9:45 Chicago time, almost 10 o'clock Chicago time hit, what'd they do, Tom? They take days out of the VIX. And look at the 1-minute chart in the VIX. It just plummeted from about 14.5 down to way below 14 now. Yeah. So definitely taking some premium out of these options. There's the volatility index. Look at that 1-day, 1 minute.
But
just
that's that Friday effect that we always talk about, where everybody's kind of selling options maybe before the weekend.
Well, what they really do is, it's not that they sell them, they move their dates out. Right. So they're worthless. If you want to sell them now, you got to sell them on Tuesday's date, not today.
Yeah,
right?
those are
but they're really interesting. I told Oliver Rennick this morning, watch the VIX today. They'll kill it if the market doesn't do something different, and boy, they sure are.
Yeah, well, we do have that Monday off. We'll see if Tuesday.
But the other thing, guys,
go ahead.
The other thing with that, we know that from our our floor days, right? Yeah. You're going to take the day out, the other day out. But just look at implied vol versus realized vol, and we continue to say, well, why is it so low? Well, the implied vol continues to be much higher than what the realized vol is. So as long as that trend continues, people aren't going to want to pay up for those premiums. So it does make sense.
Yeah, definitely on that. Joe, real quick, I wanted to get your thoughts on consumer sentiment number. Kevin mentioned it from your alma mater. He kind of pushed back against the small sample size that they use on it, but it's kind of reflective of, hey, the market's been moving higher. Consumers feeling okay. Wages are still growing at a decent pace at this point. So unemployment rate at 3.7%. It pretty much bodes well for the economic consumer spending aspect of it, right?
Oh yeah, it was a blowout number. Was definitely above expectations, and it's starting to pivot in the direction of positive for the consumer. I think as long as the consumer feels comfortable with two things, right? Gas prices and the expectations for their job. Then you'll start to see that number at least firm or hold. I think once we start to see if that pivots, right? If you start to see gas prices really start to pick back up, if you start to see, the market pull back. I mean, think about what's happened for, the market and the consumer over the last couple months, X March, right? You look from maybe April on, what has happened? You've seen gas prices come down. You've seen housing prices start to firm back up a little bit, so that wealth effect has happened. Then you've seen the S&P rally quite a bit within that time as well too. So once again, you get that wealth effect, and we've seen, even though unemployment has started to tick back up, it's still well below 4%. So I think as long as those things continue to hold, you'll have a happy consumer. We noticed that with the retail sales numbers the other day.
Yeah, that's I think the concern from a lot of people, that because the consumer's feeling a little bit better, that wealth effect that Kevin and I talked about and you just mentioned, is the fact that, hey, who's to say that this inflation is not going to continue to remain sticky, especially in those core products. All right, guys, let's take a quick break. When we come back, though, we're going to take a look at Intel. Chipmaker is up about at about 10-month highs, up 15% so far this week. We'll come right back after this short break.
Barbecue hanging out at the highs there. High just below VWAP. Taking its time on this slow reversal from the crazy upward momentum it's had. See if we have a sell-off by end of day. I'll wait till next week. Internet came back down. Yep. Below VWAP. Guess I could have shorted the high. Waking up a little bit. Just be one. A lot of volume though on IRNT. Compared to the other like one-day spikes. You might have some continuation on this today or next week. Nation.
They're doing that's kind of important. They've got factories. because they're such a big company, they're opening up the factories to other firms to manufacture their chips there. That's kind of the thing with ARM.
Yeah, they're becoming a foundry.
That they're doing, exactly. So
just
there is
above
some
VWAP.
good news, but it's not the way you'd like. They're not
very slow today.
Necessarily the best innovator, but they're using the infrastructure, the foundry. That's a good term for it.
Yeah, Taiwan Semi, the leader in that space. And as those geopolitical risks heat up with Taiwan and China, maybe that's an opportunity for Intel. They did just invest in a big factory in Poland. But Joe, to Kevin's point, innovation is the key here, and this is where Intel's been lagging. What are your thoughts here on this one?
Well, they got to continue to make that shift from PC-led revenue to the data-centric led revenue, and they've been doing that. I mean, they've started that shift. It's been something that they really took in earnest in 21 and 22, and it's showing now here in 23. Kevin mentioned the idea of the foundry business, and I think that's important. But once again, these are long-term plans. It might not show right away in the data. Stock's had a nice run. I think that can be said. I think it's up 38% year to date. It just doesn't have the same growth, and you're not paying for that growth like you would with an NVIDIA, AMD, some of its competitors. It's not trading at the same levels in terms of price to earnings. I mean, last year it had negative earnings, so it's kind of hard to look at a PE there. But I mean, basically, if you're looking at it forward, it's around a 21, 22, which is rich for Intel in the last few years. And the enterprise value to EBITDA is around 18. So, once again, relative to kind of where it's traded in the last few years, a little bit rich. It's had a nice run. The RSI, similar to what you're kind of seeing in the rest of the NASDAQ, it's above 70 and it's a bit extended. I think the thing that I look at the most when I'm looking at from a technical perspective is it's about 23% extended above its 200-day moving average. Once again, I mean, that's a fairly large move for this stock, kind of given that it tends to be a bit of a slower mover over time. So there is some extension there. And in looking at that, I looked at this as, look, this is still a medium to longer term bullish move. And I'm seeing some, potential, right? There could be the potential for some consolidation within that longer term bullish trend. So seeing some of the price action today, and then yesterday you had that long wick on that candle, and then today we tried to get back above yesterday's high, and looks like at least at this point that we're starting to fail a bit. Instead of selling a call spread, the problem is Intel is dissimilar into some of the other kind of chip names, with a lot of those other chip names, they got a lot of call skew to them, right? There's a lot of bidders for the NVIDIA calls, or a lot of bidders for the AMD calls, the Marvell calls. You don't see that as much in Intel. In Intel, it's more of that investment skew, right? That where the puts are higher, or trading at a higher implied volatility than the calls. Mm-hmm. So it's kind of hard to sell a call spread in that, especially with implied volatility in the 26th percentile. So it's not very high. So what I looked at doing was actually trying to kind of get ahead of this a little bit. If there is the potential for a little bit of a pullback, that 36 to 34 put spread, the put vertical is what I looked at, and that was in the July 21st expiration. Now, I think when I sent it to you guys, it was trading around 77 cents. I think it's probably up around 85 or 90 now, because the stock has pulled back a bit. But we can take a look. Basically, you're buying the 36, selling the 34. It's a risk-defined trade. If you pay 77 cents, it's got to get down to 35.23 for break even, which is about 60 cents away from where we're at right now. 34 was kind of that level that was difficult for the stock to get up above when it finally broke through. The idea is if that was the old resistance, that could be the new support on the downside. It's a shorter term trade. It's only a few weeks out, and so it's looking to take advantage of about a 3 to 4 week period where you might see some consolidation or a bit of a pullback.
All right, yeah, let's break this one down. Buying this bearish put vertical, buying the July 21st monthly, the 36 strike put, selling the 34 strike put. Kev, you're only paying roughly 77-cent debit on it. That's what we've got. It's about 85 cents right now. Right. Yeah, just a little bit higher.
Because it's already backed off.
Yeah, the debit that you're paying is your risk on this one. So about $77 or 85 if it's trading 85. But it's pretty straightforward, because Joe mentioned it broke above that 34 level, which had been resistance. But this isn't one of those trades where, oh, I'm uber bearish on this name, so I'm just going to buy some straight out puts. He made it risk defined. He reduced some of his costs on it with the expectation that it's maybe going to grind down a little bit over the next 35 days.
Yeah, closer to 70 cents or in the low 70s, it's almost a 3-to-1. If it just moves back down to 34, which is a pretty reasonable level for it to back off to. I mean, it looks like there's support up around where the old resistance was, around 33 and a quarter, 33.30, right around there. So even if it gets anywhere near there, you know, this is a winner. But in this world we live in, you do need a down move. But when Tom, and from what
climbing back up
happen,
a little bit.
This one will benefit from that. And like I said,
we'll see on Iron T.
Reasonably priced vertical spread, but you do need a down move.
Right. Yeah. And if you look at implied volatility, it's in the lower, probably fourth quartile over the last 52 weeks. So buying verticals makes it
little inverse head and shoulders there on the 1 minute.
Is a little bit lower, but you do have some time in this one too. You got 35 days until expiration. About
really need like a break of VWAP and then a retest.
Put vertical as an example.
Retest of that as support.
Intel, if you think it's maybe going to grind a little bit lower. And thanks to Joe Mazzola, Director
That's
of
what I
Trading
look for
and Education at Charles
on
Schwab,
intraday.
for joining us, breaking down markets and Intel. But coming up after the break, Kevin and I are going to be joined by Megan Brantley from Likefolio for a discussion on Best Buy, which has rallied about 9% so far this month. Rebounded, I should say. Stick around. Fast Markets coming right back.
I just closed out of my short leg on Beyond. I just had a good till cancel. So expiring today. So that closed out. With that, now I'm naked on those calls again. Could sell some more short calls. Close my long calls. I'll hold them though. Have 35 days still on it. Still like Beyond's chart. I think it looks good. Yeah, so far looks like Iron T's just bear flagging. Needed to break to the upside and then retest for support. Otherwise, it's just chop around. Done. Seizure of pay from CEO and senior executives of failed banks. Interesting. It's still kind of melting up here. MAT. 6% today. Oh, I don't like it yet. Oh, IronNet going again. Maybe. Yep, IronNet's going again. There you go. Push through VWAP. So made a little double bottom there. Get an entry if it retests VWAP. But it very well could be done. That was fast, man. Climbing up there. Maybe it didn't get bounced. Usually that happens after the drop. This is like drop, consolidate, and then rip. Perhaps. Watch barbacoating. No one can make money on AirNet other than Cameron. Gets his 30%, and that's it.
Versus other retailers, and especially as you consider kind of the progression of electronics, is Best Buy's whole value prop is its niche, right? Its expertise, its tech squad, its geek squad, its ability to help consumers onboard electronics. And now electronics are so intuitive. How much do consumers need that hand holding? I know a lot of consumers probably want the hand holding, but how much do they need it? And where we really look at this is when we look at this consumer sentiment levels. And when you look at Best Buy, we actually have consumer sentiment down by about 3 points year over year. So that's not the trend that you want to see. And it's around 59% positive. It's lower than Target. It's lower than Amazon. It's lower than Costco. It's higher than Walmart, so it's got that going for it. But I think that it's losing a little bit of its value prop. So for us, when we look at this long term as well, we're starting to see some signs of weakness too. So that's the only cause for concern for us for Best Buy is, yes, we're certainly watching because, I think that the cyclical replacement could be a really nice boost for Best Buy because they are getting better at trimming down those costs. They're reducing headcount. They're innovating in ways to improve margin, especially with these, membership plans. But we're just not seeing it come to fruition quite yet.
Yeah, it sounds like you're pretty negative on this one. But when you look at it, I look at like Best Buy as an alternative, right? But a lot of their competitors have gone away, Circuit City and some others. What kind of happiness levels do you have? Because, we've got a place here in Chicago that I go to for everything, all my electronics. I don't go to Best Buy anymore because of the customer service. Do you see any change in happiness levels for this company?
Yeah, that's the biggest, I think, just pause for concern and just red flag is we see that degrading down by about 3 points year over year, under 60% positive. It used to hover, as much as like 65% positive. It used to be right in line with a target whenever you talk about just a shopping experience, but now it is so niche and it is so discretionary. That could be some of the things that's hurting it right now is, how often are you going into a Best Buy? I know that I haven't been into a Best Buy in years, and just anecdotally, I was shopping at Target the other day, and a woman came up and was asking a customer service rep, do you guys not have Best Buy gift cards anymore? I'm looking for a gift card. Maybe I want to give my grandson. And me and the rep kind of chuckled. We were like, do people still shop at Best Buy? Like, is your grandson shopping at Best Buy? Maybe he is, and maybe that's just a sign of the generation. But I do think that sentiment is a little bit of concern, and definitely the fact that Best Buy doesn't really have things other than that discretionary and that niche angle. So I think it's really important that they continue to provide value for consumers. And right now, it's not necessarily trending the direction that we would like to see if we were going
triple
to make a
top
long-term
there.
bet on a name.
Yeah. In the near term, definitely some pullback in consumer spending. All right, thanks to.
Why aren't you
Megan,
happy,
appreciate it.
Lords?
Have a great weekend.
Barbecue's up 8.5%.
All right, that's Megan Brantley, Vice President of Research at Likefolio. One of the things
Oh,
that
Best Buy?
mentioned, Kevin, is the fact that they're very shareholder friendly.
Yeah.
Yes.
They like to raise dividends, and they like to have buybacks. And you mentioned there's still, free cash flow. They still have it. They've got
Right.
sales. So
Right.
how do you want to look at this from an example trade?
So the stock has made a nice little run here in the last few weeks, and I don't know if I want to get caught chasing that.
Right.
So how do you do that? Well, how do you figure that out? Well, look at the support. If you guys can throw up a chart on Best Buy, a one-year chart, look at what happens right around $70.
Sounds like a store I know.
$71.
GameStop.
There's see that whole back, that fourth quartile there. Look at so how do I do that? Here's what I want to do, Tom. I want to buy the stock around $70 if it gets back down there, right? But putting in a good till cancel, that's not the way. Yeah. So here's what I did, Tom. Here's what I came up with. I went out till September 15th, because these aren't big premium names, right? And so September 15th allowed me, that's 91 days. It allowed me to go out, and I sold the 70 put, a cash secured put. So while I wait for the stock to get down to 70, this will pay me while I wait. If it never gets back to 70, and oh, by the way, if I do buy the stock eventually on the short 70 put, my break even, if I sell it for 125 or 130, is 68.70 if I sell it for 130. So even then, I'm entering lower. So this is a way to participate when you think maybe the stock could come back down. And if it doesn't, if it just keeps going up, well, you're short of put. You've got about 17 long deltas, Tom.
Yeah, you see the break even on this cash secured put. It's similar to the risk profile of a covered call, but at the same time, you're selling that out of the money put. You mentioned 3 months until expiration on that one. You've got about over $6,800 in risk on that, and that's if Best Buy went to zero. But selling this in this type of environment where you're picking a level where you're comfortable buying the shares, this is a type of strategy you use. You have to have the capital to buy the shares if it goes below 70 at expiration over the next 91 days. The potential reward is the credit that you sell the put for. And this works two ways in this type of strategy. You either want to keep that option premium and you pick that strike below where you think the stock's not going to go below, or you're comfortable buying the shares if it does slide. But if it doesn't go below 70 at expiration, you just get to keep that option credit that you sold it for. So good look there at a cash secured put there in Best Buy, but longer duration, about 3 months in that.
You wanted to say Bed Bath & Beyond.
Let's take a quick break.
You wanted to.
Take a look at another.
Would have been immediately fired,
Micron.
executed out back.
On the back of a potential revenue hit from its China operations. The battle continues between China and Micron. Fast Market's coming right back.
IRNT testing. Testing VWAP. Close to it. It has a little bull flag there on the 5-minute. NK is suspended. Full on suspension. Base looks like it's bottoming. Base moving back up to VWAP. GME climbing up a little bit. Fiber coating at the top. Iron net's just right around VWAP now. Liechtenstein's on the telly.
It's not hurting equities at this point, so that momentum for stocks, it just seems like that fear of missing out has taken over.
Yeah, the dollar's been closely watched as well this week, and some of the selling that we saw as it works its way back down towards those lows from earlier in the year. We saw this spring down around 101, but a lot of focus here on the other foreign currencies. Yes, I agree with you, rates in terms of something to keep an eye on if you're dialed in on the US dollar, but the greenback's also seems to be more influenced by what we saw this week from the ECB, the rate hike there, their 8th consecutive rate hike. It as was expected, but more to come. Christine Lagarde was very clear we haven't reached our destination. You've got the Bank of England next week. Don't forget about that, Tom, as well. And the British pound making a new high for the year this week with the Canadian dollar, the Mexican peso, the euro, not quite there yet, but it's inching its way up to. And then the only one that was a bit of a standout here is overnight the Bank of Japan left rates unchanged, that ultra accommodative stance that they've been taking on. And you can see, look, the currency's paying the price in reaction to that news, down 1%. Yen's been making new lows, so the yen weakness helps bolster the US dollar, but the strength we've seen in some of those other foreign currencies weighs on it. And I think that's why we're seeing the greenback still somewhat range bound, but near the lower extreme of that range. So something to keep an eye on next week as well.
Yeah, that dollar has definitely been in a downtrend over the last couple of weeks here. And it wouldn't have been a hit with Ben Lichtenstein unless he mentioned the yen. So we got that one in there too. Appreciate it, Ben.
That gas is up 2.7.
He's the host of the Future Show here, bringing us a market update.
2-day rally on this
Kevin
thing.
Green, senior markets correspondent here on the network.
A lot of volume yesterday on it. This might keep going.
Downturn here in Micron. Some news out today. Kevin, break it down for us.
Yeah, we were seeing the shares down about 1.5% in this session. And Tom, we actually have several different news items coming out, but I think the most shocking one right now is that Micron is actually pledging to invest $600 million into its Chinese plants in order to create jobs as well as support the local market, especially when it comes to some of their fabs, which once again is very interesting since the Chinese government has really been cracking down on sales of Micron chips, especially for critical items and critical agencies that could use their chips. So kind of doubling down on in a company and a country that really doesn't seem like they're that friendly to you, I think was very interesting here. They're also disclosing that they're still trying to figure out what the impact of the business is going to be after these new restrictions are going to take place. If you look at the aggregate, around 20 to 25% of their total sales, worldwide sales, are going to come from China or have a indirect sale coming from China as well. So that could have an impact on the top and bottom line here. We also have to keep in mind Micron really focuses on DRAM and NAND chips, and around 80% of those sales are coming from DRAM chips, which is the ones that are going to be impacted the most here. But overall, it does look like it's also closing in an agreement to spend about $1 billion and setting up a semiconductor packaging factory in India, trying to diversify its supply chain as well as from the geopolitical tensions that we have seen between the U.S. and China. India has been a hot spot for a lot of companies as of late that want to be able to grow, but also get into a marketplace that has the education standards that are needed, but also lower labor cost. And so that's why we were seeing this transition into India. And I'm not going to be surprised we continue to see bigger companies and more companies trying to diversify their factories into India, maybe some of the other East Asia countries that are out there. West Asia.
Kevin, they have a possibility to be penalized by the U.S. for expansion in China, but they're also in trouble with China. They failed a key review from the Cyberspace Administration of China, and they may halt their shipment of chips to China. Kevin, how can they be in trouble with both parts? They're in trouble with the U.S. and China at the same time.
Yeah, that's the trouble that we have here, Kevin, because at the end of the day, once again, the majority of their factory or production is coming from China, so they can't really transition fairly quickly out of that country. They can only start to make investments into other countries like India or even making small fabs out here in the United States. But once again, you're kind of bound by the headquarters that you're located in, and that's the United States. So it's kind of a rock and a hard place. And once again, I just find it very interesting to see that you have a country that really doesn't want you selling their chips inside their country, and you're going to spend almost $1 billion more in order to try to grow your factories there. I think that's also trying to maybe having a little bit of a goodwill gesture to maybe have the Chinese government back off a little bit from these new restrictions.
Yeah, greasing the palms over there in China.
Yeah. Would $1 billion make you happy, Tom?
600 million.
All's forgiven. $1 billion, all's forgiven.
All right, great stuff, Kev. Appreciate it. That's Kevin Green, senior markets correspondent here, breaking down the news here on Micron. Kevin, 70% of the revenue from DRAM, 20% from NAND, and then 10% from some others. But we've seen that cyclical trade here where demand is still waning. But one of the key things was that Samsung, who is one of their biggest competitors in this memory chip space, started pulling back.
If SPY rejects this here,
due to the lack of demand, that might help margins.
Yeah, much like we just talked about in Best Buy, Micron's kind of waiting for the cyclical trough to kick in and everything to turn up. And it's gonna. Yeah. These businesses are cyclical. So we've seen this in Micron before. And when it happens, they punish the stock, as you know. But eventually it does recover as cycles swing back up. So, yeah. This company is already off its lows. It's actually had a pretty nice run up to some levels, but down today on some kind of the double bad news. You're in trouble with both countries.
Yeah, about 2.5 years ago, this stock was trading over $98. Yep. It was trading just under 75 about a month ago. So it has been a choppy trade. I think that's the biggest thing. Now, they've got earnings coming up here, Kevin, on the 28th of June. So I looked at a strategy that takes advantage of maybe a potential volatility event in this name. So we talk about iron condors. We talk about selling them typically. In this regard, I'm going to go the opposite, where I'm going to talk about buying an iron condor, where you expect some added
freaking Reddit, man.
As they work.
I can't help but hear retard now when I hear regard.
With China, the investments that they're making in India and China. So I looked at buying this iron condor in the June 30th weekly series. So you're going to capture that earnings event. You got 2 weeks in this trade. You're buying a put vertical. You're buying the 65-62 put vertical, $3 wide. Then you're buying the 70 call, selling the 73 call. So buying a $3 wide call vertical. Combined, you're paying about $1.60 debit. There's your risk on it with your potential reward. $3 minus the 160 is 140. So $160 in risk, 140 in potential reward outside of 73 or 62. Your thoughts on buying this? Because this thing could move outside of this range before the earnings event.
Yeah, once you have this on, any time between now and earnings, it can move, and you can take it off. So remember, this is the opposite of when you talk about a short iron condor. You're looking for range bound. This is the opposite of that. You want a move out of the range, and frankly, you don't care which direction. You have a put vertical on, you have a call vertical on. You know your risk is $1.59, but for every time that someone watching our show has put on a trade, a range-bound trade, or a trade where, it moved too much, or it moved away from my short strike, or it did this. Well, this one, you don't have to worry about that, right? You just put it on and let it move and let it rip, and you don't care how far it goes, and you don't care which direction it goes. So this is one of those that allows you, as long as you think it's going to move, remember, that's the key there. As long as you think it's going to move, this one benefits from movement.
Yeah, and to that point, Kevin, in that June 30th weekly option series, aggregate implied volatility of about 54%. Now, the option market's pricing, this stock can move plus or minus $6 until that event.
Sure.
And then you have the earnings event, which we might see implied volatility go higher into that event also. And this type of strategy takes advantage of that.
There's the thing about this. If you put this on, let's say now, right? You could take it off by the end of the day, or you could take one side off, or if you get a big move on the upside, let's say you take the call side off, wait to see if the put vertical comes back in. You are in charge of this because you own a vertical on either side. When you close it is completely at your discretion. It does have negative theta, though.
Negative theta, the opposite of what we typically talk about. And if the market's open, liquidity is provided, you can adjust or close this prior to expiration on this. But a good look at it, buying an iron condor. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the network. Next Gen Investing's coming up.
Many traders may be willing to take on
Baidu launches commercial fully driverless ride-hailing service in Shenzhen. Really? An ever-growing number of individuals cannot afford homes in the US. Consumer sentiment came out this morning. That was that 10 o'clock news we saw. Good jumping. June actual 63.9 versus 59.2 was a previous. Estimates were 60. So consumer sentiment's a little higher. University of Michigan 1-year inflation June 3.3% versus 4.1% expected. Michigan year-ahead inflation expectations lowest since 2021. Roughly 4 in 10 Americans who have tried ChatGPT say it has been somewhat useful. Michael Jordan finalizing a sale of the Charlotte Hornets. I didn't know Michael Jordan owned the Charlotte Hornets. About 1/3 of US companies say most of their workers are in the office, from just 13% last fall. Putin says Russia has never had a goal of de-dollarization of its economy. It's just perks of the business. Perks of the cause. 60% of 25-year-olds were financially independent in 2021, compared to 63% in 1980. Barbecue, low volume, but yeah, consolidating pretty nicely above VWAP here. 21 cents, up 7.5. Big is making a engulfing candle on the daily. The rally's over on that thing. See how it closes. Dish did bounce off that low. Very nice to see. It's up 2.6. First green day we've had on Dish. A week. Over a week. Can I?
But let's do upvote, downvote. Not endorsements, not recommendations. We got a big semiconductor theme here today. Several of these names getting analysts moved from the same analyst at Morgan Stanley as well. Some kind of shift around in the ratings and maybe top picks, etc. So we'll do all of these stories, and then we'll kind of talk about at the end sort of our thought process as to why we're looking at maybe one or two over the others, and narrow it down that way. But the first one here, we got up on the screen, it's NVIDIA. This has been the mover.
Everyone says
of
NVIDIA.
Not only this space, but of really the market for the better part of the last month.
Yeah, and what's really amazing about NVIDIA shares today here are they're still up on the session. When we saw the majority of these other chip makers lower today, they have held on to that 2% rally really throughout trading all day. So now shares are up 196% this year, up over 300% from their 52-week low. And we did touch a new all-time high earlier in this session, trading around $436 a share was that all-time high. Right now we're about $1 below that, but still, I mean, a name that has been so impressive, and with its run, it is the best performer in the S&P 500, no doubt, so far this year. Morgan Stanley, though, did raise its price target on NVIDIA shares to $500 from $450 with an overweight rating. They also said NVIDIA is a top pick in the semiconductor space in place of now AMD. They said the AI theme remains the most important aspect of these current overall market conditions, and only one company is in this position to beat and raise this year, that of course being NVIDIA. As other stocks have seen substantial multiple expansion in the last 3 months, they said NVIDIA has compressed, thus giving it now earnings upside. They continue to be really bullish actually on the overall AI space, but says that top pick designation is actually meant to highlight near-term upside, in which that's why they favor now NVIDIA over a name like AMD. They also said the demand environment for AI training has continued to pick up since NVIDIA has really made a foray into the space. So, I mean, really impressive note, an impressive name to discuss, and I feel like if we discuss pretty much meta platforms in NVIDIA every single day, because the moves just keep impressing even the most optimistic traders, it seems like, Alex.
Yeah, this is so interesting, and just like it's so different than how my brain kind of naturally works, which is, you know, it can't go up $8, $9 every single day forever. I mean, NVIDIA has been a contrarian's worst nightmare. Betting against this company would have been very, very difficult for traders this year. But this analyst basically uses that exact logic in the opposite way. It's basically saying, yeah, it's been a huge winner, and it's still going to be a huge winner, and we like it the best, even though it's been a huge winner. It's the number one performing stock in the S&P 500, and it's now their top pick. It just seems to me it's like, at some point, didn't you miss it? Like, at some point, hasn't the move at least partially happened at this point? But again, $9 again today, new all-time high. This thing is a runaway freight train to the upside and just continues. The one that they slotted out of this space, though, for the top pick was AMD, and that's the next one on the list.
Right, so AMD also still one of the best performers in the S&P 500 this year, but not anywhere close to NVIDIA's performance, but still up 88% now on the year, up 2.5% for the month, and down about 3% for the week, and lower today by about 2 4/10%. Now, Morgan Stanley did still raise its price target on AMD shares to $138 from $97, so some pretty substantial upside from their previous target. They did keep an overweight rating on the shares, and they do continue to be bullish on AMD's 2024 AI opportunity, but again, highlighted that this top pick designation is more for the near-term prospect, which is not so much AMD at this point. But AMD is still a name that is well loved by the analysts. I mean, this name does still skew more bullish. Price targets do imply upside from here, even with shares now up 120% off their 52-week low.
This seemed to be a little bit of a catch-up analyst note, but I thought it was probably quite interesting. You know, their price target was at 97 on this one. Yet, from reading into it and kind of the logic that we walked through in NVIDIA, they moved AMD out of their top pick spot. So they loved AMD.
Tried to add to my short there.
Trading at 120, and their former price target was at 97. So it just shows they just haven't updated this in a while. They still really like the stock. Stocks moved a ton, huge rally, but 138 still leaves a little bit of upside room here. But this morning, AMD not a winner, unlike NVIDIA, which continues to charge higher. AMD is actually down 2.5%. So maybe a little bit of a rotation here as a result of AMD being taken out of that top spot and replaced by NVIDIA. The next one on the list is more of a legacy name in this
coming
space.
down a little
One that
bit.
AMD has kind of gone head
Double
to head with
topping
for the better
there.
part of the last
Third
couple
time it's kind of
decades,
tested
and
that
is,
high.
Of course, Intel, the once king of
Oh,
this space,
MNK came back to
certainly
life.
dethroned the last few years by not only AMD but of course NVIDIA.
Mullen says actively evaluating companies' capital needs in light of its obligations under its opioid settlement.
There is other news here. So, and also, Intel is of these four names we're discussing
Or is
here on
it
the show,
suspended?
the worst performer on the year, up only 35%
They're
year
gonna
to
go
date.
now,
Which,
27%.
if we're talking any other space outside of tech, that's still an impressive move to the upside, but of course not impressive just given some of the moves to the upside we've seen in these other names. Frankly, they are up about 0.75% now on the session today. Morgan Stanley raising its price target to $38 a share from $31 with an equal weight rating, saying the company has a material AI opportunity, but due to its larger legacy server business, it also has more meaningful headwinds as cloud budgets adjust to higher levels of AI spending. And I think that is so important, differentiating this name compared to, say, an AMD and NVIDIA, because they do not all operate in the exact same way as one another. But of the 21 analysts that do cover Intel, 4 lean bullish, 12 are neutral actually, and 5 lean bearish, and the average price target of $29 a share does imply, $7 of weakness from where we're currently trading. So while we have seen this name, all things considered, up 45% off its 52-week low, Alex, the street does not love Intel the same way it loves an AMD or, of course, NVIDIA.
Yeah, this is a name that had been tough, because I think a lot of investors had been trying to buy it on the way down. It had been sort of perceived as this value play. AMD really out competing it in its own space, and Intel acknowledging that a few years ago, saying it was going to be a several-year story, kind of getting things ramped back up. But it does seem as though at least the sentiment tide has turned a little bit here in Intel. It's made a pretty nice bounce off the lows. And so we'll see if it can continue. It is marginally green here today, up about 0.75%. Last one on the list is
MNK
so
going up a bit.
I think has the least to do with the others. It's sort of the odd man out in terms of comparisons. But it's certainly been an area of the semiconductor market that has been a little bit more of a struggle as of the last few years than, let's call it, AMD or NVIDIA.
Right, no kidding. Now, this name actually looks quite like Intel, at least on a year-to-date chart. It's up about 38%. It's down about 8% from its high, but still up over 40% from its low. But with its own specific news today outside of analyst calls, they actually said they plan to invest an additional $602 million in their chip packaging plant that is located in China despite recent restrictions imposed by Beijing on the use of their semiconductors. The investment, they said, will involve acquiring equipment and expanding assembly lines at the existing facility. But through this expansion, they do aim to create about 500 new jobs, increasing their total workforce in the country to just over 4,500 employees. They also said their plans to expand this plant come after the China Administration of Cybersecurity barred some critical information infrastructure providers from then buying Micron's products, citing these national security risks. I also think it's important to note this is expected to contribute to about 11% of their global sales, just what they derive from China. So this is a pretty major market to Micron, but also they're not the only name that's affected in this US versus China battle. Other names with pretty sizable China exposure are Intel, Broadcom, and Qualcomm. So, well, it did seem like at least a year and a half ago, NVIDIA was one that was caught up in the fray of this saga. It seems like right now the main concerns are these other 4 names. So for that reason, we haven't seen the same degree of strength in Micron shares as we have, and again, some of these other peers like an AMD or NVIDIA.
And, you know, Jenny, as we attempt now to narrow these down, I think it's quite obvious that AMD and NVIDIA are the most watched of this group. They're probably the most widely traded of this group. They're certainly the most volatile, and that volatility, at least in 2023, has been to the upside, not so much in 2022, of course. But they're on this show every single day, it seems. And so just for the sake of switching things up, I was thinking, you know, Intel and Micron deserve some love from time to time as well. But also, both of them they had stories beyond just analyst notes, talking about expansion and building of factories, kind of tying them together as well.
Right, and I think for the sake of refreshing the content, keeping this space, you know, interesting, these names have made over 30% jumps on the year. They're just dwarfed by some massive swings in the other names. So we will give Intel as well as Micron some love today on the show. We will be looking through the technicals as well as some example trades, Stick around, Next Gen Investing. We'll be right back.
U.S. equity funds register biggest weekly inflows in 28 months. U.S. economy is entering expansion, not recession, says Tom Lee. Who Tom Lee? Dude, this GME chart is so ugly. Such a mess of gaps. Just lack of trends and structure. Family earning 75K can afford less than 25% of homes for sale. 5 years ago, they could afford 50%. Fidelity has said that Twitter is worth about $15 billion, 33% of the $44 billion paid in October. S&P 500 has gained 27% from its October lows, the biggest rally since the index peaked back on January 4th, 2022. This is the highest level since April 2022. The S&P 500 is now only 8% below its all-time high. Crazy, it's only 8%. We might be doing a big double top. I mean, 8% is not much at all. That's like one squeezy week. Finance under investigation in France for illegal canvassing. Application for a mortgage to purchase a home are 31% lower than a year ago. The home prices haven't. Talking GME? 630 and 77 GME calls? Well, I would have been out of those. I mean, it's all hindsight. I don't know. So when I bought mine, I almost immediately sold them because the breakout was fake. Instead of selling them, I just turned it into a spread. Yeah, I mean, you can always buy back in if you want, but I don't know. There's a RSI divergence here. I opened up a bearish play yesterday. Oh. Let's buy some GME. I don't see SPY continue to rip. I think momentum's definitely slowed. So probably have a bit of a reversal. Or just some consolidation at least. But more likely somewhat of a reversal back to some more liquidity. So could keep going after that, but I think you'll get a better entry. I'd love to pump it on Friday, and the fact that we haven't. Yeah, SPY's at a higher RSI than it was back in 8:20, 8:15, 8:16, that high, 2022. It pretty much just came down after that. A little different market time. We were in a bear market. I think we still are, but we were in a downtrend, and that was more of a bear market rally. Whereas now we've been in an uptrend. So won't necessarily see that big of a return back to mean reversion. Probably higher if we are going to continue this uptrend. But that's not much time on those. This is kind of more macro. The smaller scale, got a Head and Shoulders.
Volatility environment, which is generally what we've been in terms of buying premium as
I think I'm gonna get that coffee today, Tasty. I'm ready for it. I'm gonna go get it. Saved it for yesterday for today. Yeah, you gotta sell what's exciting. That's always difficult.
And selling one strike that is out of the money, seeking to find a debit near about 1/2 the width of the strikes, and looking for a break even relatively close to where the current share price is. So in the case of this particular trade strategy, what we're looking at is buying 134 call and then selling the 37 call in the July monthly cycle. $1.50 debit is 1/2 the $3 wide spread. $36.50, or rather $35.50 would be the break even. You find that by adding that $1.50 to the 34 call. And then, of course, the risk is equal to that debit, so $150 in risk. And then, of course, the other half of the width of the spread would be the reward, and that is also $150. So this sort of loosely meeting those general guidelines, equal risk to reward, break even near the current share price. It is directional, and so you'll need a movement higher to achieve that profit point. But with this particular name and sort of the sentiment that was garnered, it does seem that there is a little bit of optimism swirling around it, and so looking at a bullish strategy. But someone who's more bearish may look to a similar strategy on the put vertical side, just kind of making necessary adjustments to fit that particular outlook on that one, Jenny. But risk-defined strategy, relatively modest risk to reward, given that it's equal here, and break even near the current share price.
Yeah, now to shift gears here and look at a name that is in the same space, but seeing some slight less positive activity today, slightly lower on the session. That is Micron here, which is still up 5% for the week, but not getting the same degree of strength as Intel, at least week to date. Rick, walk us through the technicals here, because Micron actually looks pretty similar on a year-to-date basis, up about 38%.
Similar, but a little messier, with an uptrend that's a little less strong. But the first thing that stands out on this chart is a very noticeable ceiling that we established right there near the $64 mark. Many times we topped out near this level. It was a frequent stopping point for price. That's the kind of thing you want to look for when you're trying to assess where you might expect to find some support or resistance here. In this case, as I said, we had a pretty We tested it multiple times here. The more times something like this is tested, the more significant it becomes and the bigger deal it is when it breaks out to the upside eventually or is, finally rejected. So we can see here that since we bottomed out back here, we've been trending upward at a pretty clean uptrend there. But once we broke above this $64 mark, our green line here, everything kind of went a little crazy here. We had a big surge upward here, just a $10 move up within actually almost a $11 move up in a pretty short time there. But then we gave most of it back. We sank all the way back down and retested our resistance level near the $64 mark, which became support. Old resistance becomes new support and vice versa here. Then today, we made a stab again at breaching the $70 mark. That's about where price topped out right there a couple times, and then we had a large green candle upward that was turned into a rejection at those yearly intraday highs. So today we failed at 70 again. We crossed below our yellow 21-day EMA, but we recovered above that point. We're still down on the day, but at least we didn't slip below that moving average here. That would be another warning sign for this uptrend that's in play here. We've also got our RSI here, trending downward, but still in the bullish territory, kind of reflecting that we haven't seen a strong uptrend anymore. We've kind of just been moving sideways overall during the past month or so here. So beware of a move below our 21-day EMA and a move below the 50 level on the RSI at the same time. That would be a confirmatory piece of evidence that perhaps the trend is in danger here. So in terms of support and resistance, once again, we're seeing a bit of a volume node here to contend with. That's probably around the 68 level or so. So look for potential consolidation around that point here. But, as I said, 21 EMA is support. Then our trend line right here near about the 66 level, and then the $64 line is our final kind of line in the sand, which aligns pretty closely with our 63-day EMA as well. To the upside, the $70 mark is where I would have my eye on. That's the point to where we topped out twice pretty much, so that would be the next area to watch for potential move to the upside.
Yeah, and Rick, this name still seeing some degree of overall strength, but I think it's important. We were sort of saying this is like nothing compared to AMD or NVIDIA, but still overall in that very clear uptrend like you laid out. We will leave it there. Appreciate the technicals all week long. Our chart master, Rick Ducat. So now, Alex, when considering trading this name, I think the name looks obviously very similar to Intel on a chart perspective. Walk us through again a more bullish leaning example trade.
Yeah, and I'm glad you used the word similar because we're going back to the well. It's the exact same trade strategy, structured a little bit different because it's a different price stock, and of course, different.
See what the SPY's doing. Don't want to read into it too much because it's been so choppy, but we might have a cup and handle here.
Strikes, but because of where the
Starting to
stock
hold
was,
support there at VWAP.
I went ahead and I looked at a $5 wide spread, and so in this case, same expiration, the 65.70 call vertical in July. Same things apply here. So 1/2 the width of the strike, sort of our guideline loosely for that debit spent. In this case, that would be $2.50 on the $5 wide spread. That would mean $250 in risk.
Iron T is kind of consolidating, so actually looks like a bull flag, but this thing's historically been such a one-day pumper.
You get to 67.5.
They have to see it hold by end of day and hold next day. Volume today was solid on it though.
That they went through assignment and auto exercise. If that were the case,
yeah, we'll see if this is a cup and handle going on here.
That would be $250 in maximum profit, not accounted for transaction fees. And of course, on the other side, if these options were all out of the money, they all expired worthless, that would be the worst case scenario. Of course, that would be a maximum loss scenario in which $250
all in down 3.3
would be at risk. On this one, again, not accounting for transaction
volume's
fees.
crazy though.
67.5. Pretty
I
straightforward
want more.
here, though, Jenny. One strike in the money.
I see what you guys, what all you weird Mullen people are about now. You just want more.
Risk to reward. We've looked at these strategies a lot.
And I do think this has been the story of the week. It's these chip makers and the way that we continue to see outperformance from them. It seems like the names that are seeing strength are only getting stronger.
Inverse head and shoulders on the hourly on it, but it did build one here and here also.
In the positive territory, but
even holds or fails.
Also important to keep in mind that for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add additional risk like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We are closing out the week looking at all things Meta platforms with a near 8% rally now week to date.
Fish is starting to tick up. Breaking out of that a little bit. A little bull flag, it's up 3%. Liking this bounce off support. Safe's down 2.3. Still like this uptrend it's in. Ton's down 3.25. On a nice trend also. Same with Drup. Oh, IronNet. Yeah, IronNet's breaking up a little bit above VWAP. Buy's coming back down to VWAP.
Jeffries, Evercore, Bernstein. Let's begin with Wells. They raised their price target to 600, along with Jeffries, up from 5.25 and 530. You have Evercore RSI up to 590, Bernstein up to 585, and I did notice and mention Wolfe Research along with Atlantic Equities. They have them now at 580. So it looks like 4 out of the 5, or I should say 5 out of the 6, are with an overweight. Outperform an overweight rating. Only one, Jeffries, has a buy rating on the stock. Now, I'm definitely keeping a close eye on what's going on in terms of the price activity as well, Jenny, because shares were, on the move higher into this release here. But we know how much, impact earnings can have on price activity, and ultimately, we can see a reflection of that in the chart. They shot up to 520. They've come off a little bit here, but I want to get into the technicals on this chart. Before we do, I just want to real quick point to some of the highlights in the news. They said, or in the release, they said they see third quarter revenue of $4.83 billion to $4.87. They see third quarter adjusted EPS of $3.95 to $4 per share. Fiscal year 2023 revenue of $19.25 billion to $19.35 billion, and fiscal 2023 adjusted EPS of $15.65 to $15.75 a share. So
oh, barbecue flushed. It is Friday after all.
Pretty solid reaction to
broke through VWAP back down to 2023.
519, 520, but still holding up
3.7%.
Still positive on the day.
But that's okay. Last 2 days has shown that starting to reverse trend from the down, at least to flat. So it looks good for next week. We can hold some levels. Might have to fill this gap at 19 something. Like to hold a higher low than yesterday though.
Meta platforms. And you mentioned we should keep a running tally of how many times we discuss, say, like Tesla, Meta. I would even say then Nvidia is another one on the year. But Meta checks out because I have to say, all things considered, Meta shares are now up over 100% on the year, the second best performer in the S&P 500 year to date, a name that has had the year of efficiency, and it has only progressed ever since that quarterly update when Mark Zuckerberg said a year of efficiency. It has just been nothing but an uptrend for Meta Platforms.
Yeah, and what's really interesting too is that this stock, I believe the low was sub $90, Jenny. So you're really talking about now a name that has almost, actually more than gone 3x off the lows. That's just crazy given the size of this company. And market cap right now, it's about $750 billion. Look at that move. It has been, I mean, you could take a ruler, put it sideways, draw a line. That line is perfectly straight. There's been, if you've been a bull in Meta since that low, there's been nothing to shake you out. This thing has basically gone nothing but straight up the whole entire time. It has been so impressive. And it's capitalized on a couple things. It was one of the first to really notice the shift required by the market at the time, which was a move towards cost cutting, a refocus on on revenue generation and earnings, and then of course now capitalizing on associations with artificial intelligence at the same time has really been nothing but great news for Meta. But another name getting a little bit of love from analysts.
Right, getting more love from analysts, and I actually just saw a piece of news that they did unveil a generative AI model voice box today. This is actually going to be used for speech generation tasks. The voice box, which is a short audio sample tool that can be used for some of this text-to-speech generation, is multilingual and can produce speech actually in 6 languages, which is only, I think, fueling the bullish narrative, the fact that they can have any headline with their company associated with AI. But the analyst news, B of A did raise its price target on Meta Platforms to $320 a share from $300, with a buy rating on citing this higher multiple right now to its above street 2024 earnings estimate due to the sector multiple expansion. Now, B of A does continue to expect Meta to reaccelerate growth in 2023 faster than its peers given lapping IDFA comps, ramping Reels and messaging monetization, as well as the increased adoption of Advantage Plus products and an advertiser preference for some of its core platforms. The firm does also think that Meta's compute assets could help the company build bigger AI services just as a whole. So again, a push into AI typically seen as a positive. Shares are up 138%. Now on the year, up 8.5% just this week alone, and up 226% from their 52-week low. And we are right out our 52-week high as it stands, but still
adding a Theta Farm play to the membership.
Been beaten down so badly into the back half of 2022.
Up another one.
Yeah, and really not even all that close to the all-time high. I mean, Nvidia and Apple are the ones that really have bucked that trend, but really what we've seen has been these names just got absolutely decimated, and they've made really impressive comebacks on a percentage basis. But it's like if you start at 100, you go down to 25, and you get back to 50 or 60, you're still down 40. You know what I mean? And so in the case of Meta, in this case, the stock peaked out at 384.33. It's still a good $100 away from that all-time high, which is obviously a pretty massive percentage. So it's been super great to see some of these names catch a bid once again. It's been a freight train again to the upside, but it shows just how brutal last year was for investors in some of these mega cap firms. Jenny, what stuck out to me though on this particular analyst take was more that they like this name. They're more optimistic generally than the street is. They have it as a higher than kind of street consensus for earnings. But they basically said the street's paying more for earnings right now. So as a result, we're going to say that you should pay more for this one. It wasn't really anything different. It was more of, hey, right now valuations are getting stretched. In that case, we'll boost our price target.
Yeah, and I think right now with so many of these names trading at such higher valuations, it's difficult to now gauge, where we go from here based on this analyst price target, which at 320 does put us at the higher end of analyst coverage. This name has price targets ranging from $100 a share all the way to $350. $100 a share, Alex, that would be quite interesting if we saw shares basically get cut in third at this point. But I mean, all things considered, Street seems to really like this name. And it's been like you said, it's been very difficult to bet against these names. It's been very difficult to time some of these rallies because I think there is a ton of FOMO feeling when you see the fact that shares are up 140% year to date. Like you said, percentages, it's all relative considering we're nowhere near all-time highs. But that to me only makes a more bullish case here that we could still see shares run up as we are not near where we once ever were.
And what's so crazy is that $100 a share seems, quite far-fetched now, but the stock was below 100 in November, and so it shows just how far back it's come. But also, I would say that it's probably just an analyst that doesn't update their price targets all that often. Made kind of a rash decision when the stock was lower, and then of course just hasn't updated it yet, and is certainly looking like they're behind the 8 ball in terms of where their price target is to where the stock's currently trading. But from a trading standpoint, we went sort of in this trade illustration back to the well, but given the fact that this is a little bit more of an expensive stock, I did add a little bit more to this in terms of complexity to increase the probability of success, but also reduce that exposure for a trader. And so what we looked at here was actually buying of a call condor. How we did it with this particular strategy was buying a $10 wide debit spread and then selling a further out of the money $5 wide credit spread. If done as one four-legged call spread here, it's referred to as a call condor on the Thinkorswim platform. And with this, it's a bullish strategy as constructed because we're buying a $10 wide spread, selling the $5 wide spread. And in this case, if done for a $4 debit, the break even would be simply $2.84. You take that $4 debit, you add it to the biggest option of the bunch, and in this case, that's the $2.80 call, gets you to $2.84. Debit spent on the trade is the risk on the trade. So with this one, that would be $400 in risk. So for the first, let's call it $20 of this trade to the upside from 280 to 300, it performs identical to how basically a call vertical would perform. However, it can overshoot in this case and get back some of that potential upside if it does breach 300 and go through 305. But because of how it's structured, it has a max profitability between 290 and 300 of $600. You find that by that $10 wide spread down to the $4 debit. But if it does overshoot and goes all the way through 305, you do potentially stand to lose back 500 of those potential profits, and it peaks out at a $100 max profit. So no upside risk theoretically, but if it does go entirely in the money, theoretically, you would be giving back some of those potential profits. So looks for some upside, Jenny, but ideally there's a sweet spot on this trade between 290 and 300 over the next few weeks. This, again, another trade expiring in the July monthly expiration. All the risk is to the downside. So if this stock falls below 280, full $400 in risk, but break even 284 on a $285 stock. I'll give you an idea that you really just need the stock to either hold where it's at or go higher.
And I was refreshing my memory. I cannot believe that we were so recently at underneath $100 a share. I mean, what a year it has been for Meta Platforms. It seems like we've been above 250 now for quite some time, but it just goes to show how quickly we forget where things once were. But we will leave it there for our FOMO segment. Now, coming up next, we will talk all things DraftKings actually raising its bet now on PointBet's U.S. business, offering $195 million. We will discuss that deal coming up next.
Barbecue sitting on that 20 cent. Old spice kind of melting down again. IRNT 91%, still just consolidating there. Go EV above VWAP, breaking out a little bit.
Sports leagues like the NHL, NFL, MLB, etc., maybe leaning on some of those relationships as well. But if they want to break through, buying one of the bigger names in the space that already is licensed in some of these different states, already has the technology and potential human capital to do that, potentially makes sense. It's just going to come down to what is more important to those who are going to be making the decision at a company like PointsBet, and of course regulators as well. Is it going to be a new player in the space with a little bit more money, or is it going to be less players in the space and potentially bigger players in the space for a little bit more money in the case of DraftKings pumping up that deal a little bit. So we'll see also maybe Fanatics will come back with a little bit more of a sweet offer given that DraftKings is now in play as well.
And we do know, at least from looking at M&As, that the company doesn't always go with the highest bidder. We knew that from JetBlue and, of course, the Spirit saga. It's not necessarily completely out of the normal to see a company go with the best fit, not necessarily the most cost-effective or expensive fit there. So it's an interesting story, interesting to see that DraftKings isn't really doing a whole lot of anything on this news, perhaps because it's still fairly speculative at this point, but we will leave it there. Now coming up next, it's time for Under 30. Today we're looking at Virgin Galactic, as shares rose as much as 40% earlier in today's session on the fact they did unveil their first flight plan for late this month. Kevin Green will break us down that story coming up next.
Nice range trade today on the SPY. Short on resistances, long on supports. Hard to see that before, but that's why I like to just go for it on resistance and support, and if it fails then close it, but because you don't know if it's gonna be a range day till it is. But if there's not much direction, you're usually pretty safe going short at the highs and long at the lows. Highs coming down here a bit. Back green on my alt shares. Geez, Mullen really took a hit today, huh? Down 11%. Did not have bought that so early, I guess. Isn't looking good. Like another failed inverse head and shoulders maybe going on. On all that volume yesterday and today. Just kind of crazy. Hi, Laura. Russia has transferred first nuclear weapons to Belarus, Putin says. I just mentioned Mullen and you show up, Laura? The hypiest stocks presently. How do you do it? Housing affordability is the worst since just before 2005. A 3-year run of investors pouring cash into stocks has run out of steam, says Bank of America. And for the March 2000 dot-com bubble peak, it took the tech sector nearly 17 years before hitting a new high, suffering an 82% drawdown along the way. Today, the tech sector is back at an all-time high, less than 16 months after the December 21st peak. Every bear market's different. Everybody dies. Yes, but usually just once and at the end of their life. Everybody's different. I'm still not sure. We might have a cup and handle, but I think this is maybe too low for a handle. Wait. Here's ETF XLK, tech sector ETF. That's one way to play it. Instead of just going short on Apple or Microsoft or Nvidia. Up on 2 o'clock. Need to be making at least $125,000 a year or more to afford half of the U.S. homes on the market. Plenty of time to short the top of this market. Plenty of time. Barbecue up 6.6, bouncing back up to VWAP.
You can't help but notice, obviously, this has been a stock that's sort of inched its way lower and lower over time. Some of that, I'm guessing, due to maybe additional equity offerings diluting the shares over time because it doesn't actually make any money at this point. But what does someone have to see from this to really spur excitement again? Because at one point, this took the world by storm, particularly the investing world.
Yeah, I would say after they get their spaceflight operations up and running, you want to be able to see how much revenue they are generating off of those flights.
Coin's up 2.75 now.
The frequency of those flights as well. One of the things that really had the company on pause is kind of the back and forth between the FAA. I mean, the first flight that they had.
That looks like an inverse cup and handle.
Successful. If you and I were actually looking at it, they did actually violate a couple of
buy back up to VWAP.
FAA rules, so there was a little bit of an investigation that pushed them back here a little bit. But I would say
yeah, IP's down 5. Ace, 2 days ago, man. If you wanted to trade it, I said sell covered calls or sell it if you're trading. And engulfing candle momentum's pretty much dead. So you're gonna have a reversal till support, and then see what goes from there. Hasn't found support yet, though. I'll let you know when it finds support. Could come all the way down to what, 23, 24. Could keep going, but that's where the next kind of major support level I see.
If it does go to 0.
The ego on you.
Is for this name, but
the ego on you.
Opportunity that people like to speculate.
Thanks, Ace. To Mo Lava, congratulations.
Into this overall space flight type of space.
Appreciate it, Ace.
Very small at this point. I mean, there's only
Mo Lava. Well deserved.
So I think that's going to be the long-term.
Stop listening and come to chat. You've been called out.
Appetite of willing to lose your initial investment, or maybe
something Papa Ace for your free membership.
Gain some exposure as well, Alex. I know you.
That is a good one. Solid pick.
Stock that might be primed for that type of strategy to be able to mitigate risk, but also have some upside return.
Yeah, and Kevin, I do know that those that are investors in this name have had
solid
to be really
snipe.
Patient because we've gone from, about $63 at its peak here now to $2 for the better part of the last several months. Obviously higher today, but I think the fact that we've been just hanging out around the single-digit dollars per share here has tested a lot of these shareholders. But the next time I have an additional $450,000 laying around, I'm on one of these flights. I'll do the market research. I'll go for Alex and myself because this sounds so cool. I just am not that target demographic, at least not yet anyway. But we will leave it there. Appreciate the insight as always.
Oh, she wants to go to space.
For the network. That also does it for Alex and myself.
All of her colleagues thought it was stupid and said, I'd rather buy a house.
We have the watch list with Nicole Petalides.
And then Jenai wants to go to space. Jenai doesn't even want to go on a cruise, though. It's like an air cruise, but much higher probabilities of dying. Hey, Dink. Someone making 150K in New York City can save nearly 50,000 by moving to Miami. The Fed funds rate is now over 1% higher than the US inflation rate. The last time monetary policy was this tight with a Fed funds rate above 0% was back in October 2007. What happened after that, I wonder? Ah. The orange line is CPI. Blue line's effective federal funds rate. More bank insiders are buying shares in their own companies. Americans removed $472 billion out of their bank accounts in the first quarter of this year. All-time record since 1984. AI jobs threatened, or AI threatened jobs are mostly held by women. 10,000 Ukrainian civilians have been trained as soldiers in the United Kingdom since June of last year. +4%, barbecue. Musk expects Neuralink to do its first implantation in humans later this year. Senator Thomas Tuberville, who sits on the Committee of Agriculture, Nutrition, and Forestry, just disclosed buying cattle, corn, and soybean futures. Now they're trading futures. He bought 60,000 in cattle futures in May. Cattle futures are now at all-time highs. He's up at least 15%. Finance to exit the Netherlands after failing to obtain regulatory approval. St. Louis Fed's GDP model sees Q2 2023 US growth at 0.46%. Previously it was at negative 0.46. Previously it was at negative 0.66.
So we're watching that story up 3.6%. For some of the biggest stories in the markets right now, we welcome in Caroline Wood, senior markets correspondent here on the network, to talk about shares of iRobot jumping. Big news here.
Yeah, you talked about the major sort of flat around that unchanged line. Not the case for iRobot today. We're seeing
20%.
Shares absolutely surged today, and that's because the UK approved Amazon's acquisition of iRobot. iRobot, of course, makes those Roomba vacuums, the robotic vacuums. UK's Competition and Markets Authority cleared the deal, saying it does not believe that the merger
We got one of these vacuums.
of competition within markets in the
Is it a
UK.
Roomba? Yeah, ours is a Roomba.
Last August.
I think.
It's an all-cash $1.7 billion
Stupid expensive.
deal, including debt. iRobot share is up about 20% today on this news, about 26% this week. So big winner today and this
Crazy
week.
valuation on
Amazon shares
iRobot.
taking a look off about 0.7%, but still
Not crazy, but pretty lofty still at this price.
Shares today, or if it's just could be a little bit of a pullback, because $1.7 billion, we know, for Amazon.
There's a lot of room in this space for something better. I want Elon Musk to make a vacuum. These vacuums are they're pretty dumb still.
Purifier, because I was thinking about Instapot, and Instapot really recently filed for bankruptcy.
Yeah, Instant Pot went BK.
And, one of the reasons people say it's because it had one good product and couldn't really make a foray
We got a
into other
classic Instant Pot for sale. Can't buy it anymore. Collectors, let me know. DM me on Discord.
Company, and then it became everything. Absolutely everything. All right, So that's a big story. And then we have the Micron story that we continue to follow.
Dude, Mullen got wrecked today. What the heck? Down 15%. Oh my gosh. How did you guys suck me into this crap?
Higher in the week, but they're showing their commitment to China with a plan to invest more than $600 million in a chip packaging plant there.
We suck again. Flies coming down. There you go, Mo Lava. Papa Ace comes to the rescue. Dude. Freaking Mullen.
National security risks. China contributes about 11% of Micron's global sales, and Micron had previously said the ban could hit revenue in the low to high single digits. Now, in a new filing, it says half of China headquartered customer revenue is at risk, so the new estimate is as high as low double-digit percentage.
Gage, you've got to be down like 30K on your Mullen shares. If all of your purchases you put on Discord are true. Or more. You bought 20,000 shares yesterday.
Long-term goal, though, is to retain
snap.
share. I will say Wedbush, an analyst there, was out with a note today, making no change to its outperform rating or $65 price target on the shares, despite the fact that it will or could hit revenue that much harder. Said the investment in China might be an attempt by the company to better position itself within the Chinese government in order to return its China-related businesses to good standing. So obviously trying to keep the peace with China. Did note that if Micron's mobile business is negatively impacted, there could be a potential negative impact for Silicon Motion, ticker symbol SIMO, given its supply of controllers to Micron. So taking a look at Silicon Motion, shares under pressure today as well, off about 2%.
Under pressure.
Note that Bloomberg's reporting that Micron's also planning to invest at least $1 billion in a semiconductor packaging factory in India.
Let's get nuts! Oh, let's get nuts! Mo Lava, you dirty dog. Thank you for that dono, man. Much appreciated. That is getting nuts. Let's get nuts. Appreciate it, Mo. Dang, dude. Thank you. Very generous. Very kind.
No joke. And the story about China and the
Gotta make sure you're on the happy crew on Discord, right?
that goes on there. You recently had Elon Musk there. Gates is going there. You have Secretary.
See what you did, Ace? You gone and made Mo all pumped up. Now he's just getting crazy.
Looking for that as well. So I think this is obviously.
Do you realize what you've done?
With China, and so we got to make sure we all get along and play nice in the sandbox. But it hasn't been an easy way of it, no doubt. So we'll see what happens with Secretary Blinken's visit too. I'd like to hear more about that. All right, good story.
Okay, I opened up a Confluent bearish play.
Now let's get the bigger picture.
Chart just looks bearish. It's had a pretty big run with other tech. It's for July. It's a 31-34 put debit spread.
Hi, Nicole. We're still in the camp that recession probability is high, but we're definitely in the middle of a stock market summer swoon right now. You know, at the beginning of this year, expectations and consensus really was that we may have a recession in the first half, recovery of economics in the second half, and the stock market swoon has really priced out the recession.
Thank you, Mo. With that dono, you're welcome to lurk in the caves as long as you like. Hang out the other cavemen lurkers. There's no obligation on my part.
Market leadership. Cyclicals are really outperforming, especially over the last 3 months. You think mega cap tech, industrials.
Oh, I think I see you on Discord though.
Worst performers are more defensive, healthcare, staples, and utilities. And so that's all reminiscent from a leadership perspective that the market's pricing in a slower growth, but still positive economy. So what you would see in a recession, if the market was pricing in recession, is almost the exact opposite of everything that we've seen so far develop from a market credit perspective and a sector.
There's got to be a faster way to find people on here.
We think from the market's perspective, the recession probably.
Oh wait, maybe I do see you.
But those storm clouds are definitely still on the horizon.
It wouldn't happen to be the exact same name, is it? Mo Lava? That's not you, is it? Right?
So at this point now, tell me about sectors and where this would all fit into your outlook.
All right, I gave you the happy crew roll. Thanks, man. I guess you're not really on Discord much, but now when you are.
Going to see some rotation.
Sure. Yeah. For us, it's kind of our guiding.
Jimmy's down point.
From from a
Three.
sector perspective, it's too early.
Barbecue, pretty low volume, chopping around. 2 o'clock. We do have a few more hours for them to crush our hopes and dreams on barbecue and sell it off, but might not happen. I think we are starting to reverse here. The last 2 days has been nice price action. Well, not price action, just price rather. Still on OTC and still barcoding. But yeah, kind of inverse head and shoulders building here, you can see.
That preceded the last recession. So for our perspective, we're kind of staying away from cyclicals. And I think it's a good opportunity to adopt kind of a barbell strategy. We still like high quality growth. We think that in a low growth environment still has demand structure there. But to really peel off from mega cap tech and add to healthcare and consumer staples as kind of a barbell strategy from a sector perspective. Until those kind of broad macro indicators change, the LEI, the senior loan survey, the yield curve, until that starts to stabilize and show a rate of change improvement, we would still adopt that playbook of high quality growth with the defensive sector lean.
Right, understood. I mean, the Fed alluded to the possibility of 2 more hikes and no cuts anytime soon. What do you think of that? And how, I don't want to say do you believe them, because I think that in earnest they're speaking honestly at this time, but that's not to say that they won't change that tune. Where do you think we could be headed?
Yeah, if you look at Fed Fund futures and the Fed's overall commentary around where Fed hikes will be, it's been volatile to say the least. And I think that from the bond market and the equity market perspective, they're kind of calling the Fed's bluff. They pushed out interest rate cuts. It was pricing out at the beginning of this year. Expectations were for interest rate cuts in the spring, then moved out to summer, to fall, and now interest rate cuts are moved out to 2024. So from that regard, I think the market is
bouncing back up a little bit.
And I think that's the closest.
Just trading in a range today.
Still saying the economy is strong to what the bond market's pricing in. But I did find it odd to say that they were going to pause today to possibly move up in July, just a month of data. But really, I think what they're keen off of is the jobs market. So we've seen some deterioration there over the last couple weeks in terms of initial claims. And I think that's going to be the key indicator for them to whether they raise in July or pause for another month or two.
Right, understood. So when you talk about that barbell approach that you were talking about on the more aggressive side, on the riskier side, because I know you were leaning towards a lot of high quality, more defensive plays, what would be something that you'd be comfortable with that would be more on the growth or riskier side, assuming you do this responsibly?
Sure. I think small caps is a really attractive opportunity. We've seen extreme concentration in mega cap tech. The top 7 names up over 55% year to date. The top 400
741's really out.
Are up a little under 5%. So
I thought they had like 20 more to go to get to that.
Narrow leadership in mega cap tech. And so for us, we think the pairs trade of the barbell.
Oh man, and barbecue's on at $20 yet?
And add to small caps. Small caps have not seen the type of rebound we've seen in large caps. And from a valuation standpoint, we look at a lot of different valuation metrics, but when we look at book yield of small cap stocks relative to the S&P 500, they're extremely cheap. 5 percentile type of cheap levels relative to the S&P 500. And historically, when we get to that level, the next 12 months, we see really strong performance in small caps. So that doesn't mean we see that exchange in terms of leadership next week or next month. But looking out over the next 12 months, the risk reward in small caps relative to mega cap tech, I think makes a lot of sense. So still in that aggressive camp, obviously with small caps having higher volatility, but I think the risk reward from a valuation standpoint makes a lot of sense.
All right, Alexander Reed, thank you so much, CFA and Visage Wealth. Thanks, Alexander. All right, later this hour, Sofi is under pressure. We're going to take a closer look. It's down about 7.5% as the analysts are hitting the brakes on this strong bull run that we've seen on this name, which is up over 90% this year, but today down 7.5%. We'll also talk about the Fed action that we've seen and what does it mean for mergers and acquisitions? Do they have the green light now?
our panel taking a look at Adobe and some key takeaways after a strong quarter. And up next, let's talk beer. Some recent trends to consider, Constellation Brands. Stay with us.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select Time Frame to adjust the time intervals or to favorite a time frame. Select Style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
That's too bad, Dink. Too bad. Well, hope you're not getting worked in the market also. Look at Barba coding. 742 and 743. Well, that's the problem. That's why barbecue's not at 20 bucks. They're supposed to just put 741 out and be done. They've tainted it with all these new ones. Freaking Mullen. We suck again. I mean, I guess that's what I get. It's just purely based on volume. But I'm still intrigued. And people that are bullish on it, I'm very intrigued by as well. Oh, I didn't even see your message. Well, Lava says Ace is the best. Ace is the place. With Mo Lava. That's too bad that Microvision isn't gonna actually offer some stock. Sales agreement with Craig Hogan Capital. They just sale up to 45 million. Oh, are they gonna have an offering now? They withdrew their offering. Sales agreement. Maybe they are still going to offer shares. I don't know. Too stupid to understand that.
Now, earlier in the week also, we had the average national rental prices, which is an aggregate from rental listing companies and property management companies, show that new lease asking rents rose just 2% on a 12-month basis. And that's down versus the double digits it was at just years ago. So it's really a large deceleration that we think is going to eventually start playing into the inflation numbers. Now, the inflation calculations are on a lagged basis. We saw for May the rent equivalents being about 8%. So just all very encouraging signs that inflation is coming down. Following day then, the Fed came out and, to no one's surprise, decided to hold steady for June. And we think they were encouraged as well by the slowing and downward trend of inflation. But what they're really watching, and why I think we're taking a pause, is to see how the banking crisis from earlier this year started playing out. I think the expectations and what we've heard from small and medium-sized companies is that their loan standards and rates are starting to tighten and rates increase as these banks pull back a little bit. A lot of expectations are this tightening that we're going to see from these banks are going to be equivalent almost to a single Fed rate hike. So we think it made a lot of sense for the Fed to pause following the good inflation read, and we think that that's helping propel markets right now.
Look, and inflation's going in the direction that they want, and things are going in the way they want. It just has to be fast enough so that they don't raise again. I mean, right now they're giving us the idea they're likely to raise again, particularly if the PCE doesn't decline quickly enough. I mean, that's really where we stand. In the meantime, you have picks that you've made, and I'm curious as to, is there a parameter? Are you just looking at each? I know you look at each company carefully, but is there sort of a theme to the kinds of companies you go about picking?
Yeah, absolutely. So we look for really good companies that have, good management, good services or products, and ones that will be able to, take advantage of certain themes going on in the market. So one of the first names we really like is Apollo Global Management, ticker symbol APO. And this is one of the largest alternative asset managers right now, whose primary focus is on credit investing and distressed lending. And we think, taking a step back, we really like this company because of the economics of, the alternative asset managers. They're growing their asset base, and they're seeing little to no pressure on the fee front. If anything, some of them are actually increasing their fees. But what we really, really like about this company right now is we think they're going to be able to step in and fill in that gap of lending to small and mid-sized companies that a lot of these banks are going to or are expected to start pulling back. So we think there's an opportunity for them to step in and be big players there. They've been accumulating a lot of assets and have quite a bit of dry powder ready to deploy.
Yeah, understood. And then when you look at a name like Tractor Supply, while it may be down slightly year to date, people love it because it's a dividend payer and buybacks, right?
Yeah, absolutely. And we really like it because of the characteristics of their operations and of their revenue stream. So we think you have to be very selective in the retail environment, giving interest rates and consumer budgets and things along those lines. So Tractor Supply is one of the largest, if not the largest, rural lifestyle retail companies in America. And there's three big reasons we really like this company versus other retailers. One, a large portion of their revenue and their sales come from more discretionary items. In fact, their livestock, equine, and pet food make up about 50%.
Iron net coming down.
Now, you're not going to stop feeding your animals.
It's over,
it's
man.
A very high recurring revenue stream that we think is more favorable than some of the more discretionary leaning retailers. Tractor Supply also boasts really nice margins. They're able to charge for their product at a nice price, and you should be able to help them shoulder either some declining spending on consumers or pricing pressures on the supply front. But what really makes Tractor Supply stick out, is they don't have a shrink issue like a lot of these other retailers, large discount retailers, have in our reporting recently. I think a lot of it is given the nature of their products. It's difficult to walk out the store with them. So, those three combined, we think position Tractor Supply really well. Long term, this is a company that, caters towards the more rural, low population density areas, and they sell products that are a little bit difficult to purchase online. and replicate online. So we think they're really positioned well short term and long term.
All right. Let's get to what's been going on with Bud Light. So Bud Anheuser-Busch lost the top spot after all the backlash with the Mulvaney situation. In the meantime, as you know, Bud Light is dropping over 25%. We're seeing other names jumping 25% for sales, that is, of their beers. And a name like Constellation Brands in 1 month has an up arrow, while Anheuser-Busch has been under some pressure. Tell me about Constellation Brands.
Yeah, Constellation, I think, is taking advantage of some changing in consumer taste and preferences. So they're a maker of high-end and imported beer and distilled spirits, and they also have a wine offerings, but they're really, really well positioned in the high-end and imported beer market. So they're selling 9 of the top 15 selling imported beers, most notably Corona and Modelo. Like you said, Modelo has now taken the #1 sales lead in the U.S. And the Mexican imported beer category is growing at high single digits, which we really like, given that when you take a step back and look at the whole beer market, they're growing very low, if not flat, on a year-to-year basis. So we expect there to be increased interest, some of this fallout from the Bud Light controversy, that, it'll drive consumers more towards these higher-end imported beers. And we think that will play out well for the stock. We think for a while it's been underappreciated. They're really nice profile and offerings on these beers. And we think they'll start being rewarded appropriately and valued up higher.
Yeah, and just for the heck of it, I became curious about all the beer brands. And so Constellation Brands, which has Corona and Modelo, which has been growing, 1 month has an up arrow. It's up 6%. Tap is up 6%. Sam Adams, right, which is Boston Beer, but Sam is the ticker symbol. 1 month up 3%. Anheuser-Busch, Bud, has a down arrow. Granted, it's just under 1%, but while all those are gaining, that one's losing. Brian Jakowski, thank you so much. Fort Pitt Capital, great to chat with you. Appreciate it. Coming up next, what's going on with Sofi? All right, the analysts are hitting the brakes on this one after a big run.
U.S. Senate Banking Committee will consider a bill Wednesday that would allow regulators to claw back compensation for executives at failed banks. I think we saw this earlier. Someone mentioned it. For example, CEO of SVB, Greg Becker, sold $3.57 million of stock per his trading plan 2 weeks before the bank's collapse. I mean, clawback compensation. Are they calling this the sale of their stocks as compensation, or what compensation? I mean, they have lockout periods, so that's what those are for. They should, when there's an open window, they should be able to sell it. I don't know. GDM sure it is. There's all the sketchy EVs I think are going bankrupt. Archimoto, Nikola, Lordstown. I've never even heard of Faraday Future. Canoe, Workhorse, Hyliion, Proterra. Never heard of Lion Electric. Rivian, Lucid, Neo, Xpeng, Fisker. Performance from Highs. Archimoto, I guess, is BK. Nikola's down 99%, Lordstown 99%, Faraday 98%, Canoe 98%, Workhorse 98%, Hyliion 97%, Proterra 96%, Lion Electric 94%, Rivian down 92%, Lucid 90%. This is also just highlighting the crazy bubble that they were in with all that loose money that the government printed. But that being said, I think they're still probably overvalued. Bullion shared a write-up on a BBBY subreddit. Part 2 of reading the balance sheet from the 10K by Dakin Aus. I don't know. I'll read it. Liabilities. Mother of God. Again, if you were not tracking the whole story around BBBY and only looking at the liabilities section, you would not invest in this company. There is a mountain of debt that is looming over them, about to drop on their heads. Ever been in credit card debt? Know the feeling of a large balance sheet looming out there and you're just trying to keep the minimum payments up? Yep, that's what it felt like for them for the majority of 2022. All of their cash had been used to buy back stock and at a much higher share price. Now they needed to sell stock. The share price had been seller boxed to ground zero. This is a typical play to short retailer to death. Did EP read this on his show? I feel like I heard this before. Yeah, I heard this. I heard that one. You guys probably did too then. Spy's coming down more. Barbecue 2080. Right at VWAP 6.6% green. GME is down 0.76. Buy testing the lows. That'll be a question whether to close or not to close. See if we make some kind of reversal formation. First head and shoulders, double bottom.
Expense. You could literally do a buy now pay later with, you know, buying a can of.
There's a test on the low of the day.
So that gives them just enormous
Just about. Let's see if we flush through.
In-person market. That's one thing. The other thing that I'm excited about is like they're leveraging their data to continue to come up with, like, you know, even perfecting the delinquencies and making them lower and lower. They get tens of millions of data points every quarter, and no one's better at those data points than Affirm is. So I'm super excited about Affirm. I'm also extremely excited about Robinhood. As always, I met with Vlad, the founder, last week as well. We had a busy week last week. And what Vlad was telling me is that, you know, they're just at the beginning of getting into retirement, right? Into Europe, right? There's just a lot more that they can do, and
Yeah, before I let
Yep.
you go, just Square too. Can you touch on that? Since right now it's at $67. What are you thinking about Square these days?
I'm still very, very upbeat about Square. I think they've had the issue with Square is
Robin
people
needs to go
are
under?
worried about the share loss in
Why?
their point of sale because
Not
there's
Hood.
new companies like Toast that are doing really well, or Clover, which
I
is
like
owned by
Hood.
Fiserv. But if you think about the
They made lots
commentary
of
that
money.
the CFO made, there's been an acceleration in May versus
They still
April,
do.
even though Visa volumes in the U.S. were
They're
flat.
not really
Which means that
profitable.
there's signs of that execution or the work that they've done.
Yeah, they need to
starting
get their act together.
work again. So I think Square could actually end the year much higher where it is today.
Wow, they're pretty overvalued though, huh?
Wow. I mean,
All their growth stuff, fintech stuff, it's just always gonna fetch a high valuation.
To go to the 70s, 80s. I mean, I think
Except for in a
I think
recession.
that if they can prove the acceleration in the point of sale business, everyone's going to be buying the stock.
Dan Dolev, always great to see you, my friend. Thank you, of Mizuho Americas. Thanks, Dan. Be well. Have a great weekend. Still ahead in the second half of our show. Okay, so the Fed takes a pause. What does that mean for M&A activity, mergers and acquisitions? You think there could be some more moves coming now? Let's talk about that as we head to break. The S&P 500 new highs, new 52-week highs. Take a look at
Dirty.
winners and losers. Also, another winning week for the S&P.
I mean, I don't know how they're any dirtier than any other company. I don't invest on ethics. Invest on companies that can make money. Stock market doesn't care about your emotions or your ethical bias. Genius. They're like, oh, we don't have enough collateral? We'll just shut off the buy button. Like, yeah. That's why all the ones that did the Apex clearing uses Apex clearing. Well, they all did it. Kind of bear flagging down here. Not seeing too much of a sign yet, but get a little bounce back to that breakout. We'll see. Maybe too early in the day to flush through the support. I don't know. Today's definitely a tapering of the momentum, though. I think more so that than consolidating before new highs. Could be wrong. Yeah. Just this head and shoulders up here. We built one here, but then it broke out, so still could be something like that happening. The bull flag.
Want to bring in my friend here, Ben Lichtenstein. Look, we got through a very busy week. Senior futures contributor here on the
Lichtenstein.
90 minutes left in the trading day. Don't forget, these are the trades that are occurring before expiration here at the bell and a day off on Monday, which always plays a factor as well. What are you thinking here?
Yeah, Nicole, just kind of watching red arrows across the board, slightly lower, a bit of a shift from what we were seeing earlier this morning. But I think, to your point, the element of surprise is always there when you're headed into a quad-witching Friday into the afternoon session. We've got all four of the majors lower right now, but what a week that was, right? And the rally that we saw, I think, is a real win for the bulls in many ways, considering the data that we had out in terms of the focus being on inflation. We had the Fed, retail sales. I mean, central bank activity, not only here in the U.S., but globally as well. And ultimately, look at the move up. I mean, here's just the run-up that we saw Friday's low, around 42.84 up to 44.93. So just shy of a 4,500 handle in the S&Ps, a solid trend environment here to the upside. No rejection of this upper level. Rolling over a little bit here. Yes, again, as mentioned, negative on the day. But, Nicole, taking a look here at where we are relative to the 200-day moving average, the 50-day moving average, you can see the S&Ps in what looks like, well, if we could squeak out a positive close here today, it looks like it would be the 7th day in a row to the upside here and only one down day, again, since the beginning of the month of June. Quite the run up here. You can see with the bid activity.
Well, he's kind of retesting that
all four of the majors, in a
level where it broke down from.
Watch averages, the longer day 200 and the 50. You've got the VIX, which has been tumbling lower. Look, taking out the lows from May.
If we had a double bottom or if we just
this is the futures now down
consolidate.
31. We've got the VIX, the index back to levels, Nicole, that we haven't seen since the beginning of February of 2020, January of 2020, ultimately. And again, just a real reflection, a sign of how headed into the end of the week. I mean, with the Fed pause and everything else we've seen, investors are exhibiting some optimism, to say the least.
Sure. How about the U.S. dollar? I mean, we've seen the dollar trending lower. I mean, when I saw 101, I was thinking that, most people are saying that the dollar has been trending lower as they are interpreting that the Fed is done.
Yeah.
What say you?
The dollar's almost done, right? I mean, it has been taking a hit, and a tough week for the dollar oftentimes is a reflection of what we just looked at in terms of strength in U.S. indices, stocks in general. Oftentimes, it also equates to rates to the downside. This week, I think it's more tied to some of the strength we've seen in the other foreign currencies, which we'll get into in just a second here, Nicole. But just taking a look at the week, or last couple weeks, I should say, the move off that high, we saw 104 back in the beginning of June, all the way down to 101.50. Now, the low for the year is down around about 100 ticks below where we were this week. But I just wanted to point to some of the strength that we've seen in some of these other foreign currencies. Actually, let's just look at the dollar on the daily time frame to kind of put this in perspective. The selling I just pointed to that's come off of the 104, 105 area, back down to 101. I mentioned that low from earlier in the year, down around 150. But notice how the dollar's still yet to take out that low. But let's look at the
Mullen 24%. Look at you.
Fed in many ways, more so than what we've seen in terms
maybe finding a bottom at 22 cents.
You can see the euro currency inching its way back up, nearing that high.
I already have a stock at 22 cents.
So that's going to weigh on the U.S. dollar, which is
another one.
Weakening with strength in the euro currency. But look at the Canadian dollar. I mean, this has been on a tear. This is a 30-minute candle chart, but this is a new high for the year to 76. That's going to weigh on the dollar. You've got our neighbors to the south this week to a new high for the year. Again, a 30-minute candle chart here that we're looking at, but new year highs. And lastly, I did want to point to the British pound, also a new year high. So all of these currencies are weighing on the U.S. dollar. Oh, one more now that I think of it. Look at the Japanese yen. This is the only one that's really been weakening. And ultimately, I think that's kind of what's keeping the dollar off those lows, the weaker yen. We saw new year lows in reaction to the BOJ, which left rates unchanged, that ultra accommodative stance in place. Quite the discrepancy, or quite the difference from what we saw here in the Fed and other central bankers over the last short period of time here, to say the least. Nicole, keeping an eye on some of the currencies, the dollar, and the indices all collectively.
All right. Ben Lichtenstein, thank you so much. Appreciate it. Now let's turn your attention to some of the trends that we've been seeing in mergers and acquisitions. And now that the Fed may be done, what does it mean for this group? We're bringing in a pro for you, and that is Thomas Smale, CEO of FE International. So FE International, I mean, you have advised on over 1,200 deals that have occurred, named one of the Financial Times fastest growing companies. What's been going on in the world of mergers and acquisitions coming from a pro now versus, the last 4 or 5 years?
Yeah, so firstly, it's busier than we've ever been. mentioned over 1,200 acquisitions we've closed. Been in business for more than a decade, and we've never seen more demand than right now, and that's for from firms in the US, internationally. Yeah, absolutely.
I was thinking that it might be hard to get credit, and that maybe deals we're not seeing that much in the IPO market, for example, and credit. There's been a credit crunch after what we've been seeing with the regional banks, and so. I mean, that doesn't affect what's going on in the world of mergers and acquisitions as much?
So it does to an extent, but I think there's like maybe 3 reasons. So firstly, the Fed is probably expected to raise rates 2 more times this year.
Yeah.
So if you're an acquirer, now is a fantastic time to do it. A lot of buyers, so number 2, a lot of buyers out there already have cash on hand. So private equity firms, they're sitting on cash, they need to deploy it.
Yeah.
And number 3, we work with a lot of international buyers and we speak to them every single day. They're not necessarily affected by what the Fed are doing in the US. They have like their more local interest rates or however they're borrowing.
Right. Are there certain sectors or groups that seem to be thinking about mergers and acquisitions more than others? So when you think of the sectors?
Yeah, so we focus primarily on technology, M&A. What we've seen recently is private equity firms in the $100 million to $1 billion assets under management range are the most active. So for example, recently we completed a transaction. The acquirer was a US-based fund called LTV Fund with 9 figures assets under management. The seller as part of the transaction was called Thrivecart. It was a $35 million transaction, which is exactly the same as what we would have expected to happen over.
So, I mean, your advice, and this is your company, you're the CEO here, is to, if you're interested in making an acquisition or some sort of deal, do it now ahead of the Fed's possible next move in July. Does 25 basis points, I say this sort of facetiously, but how big of a deal is that?
It does start to make a bit of a difference. It doesn't necessarily sound like a lot on a paper or on an Excel spreadsheet, but when you actually start looking at deals, particularly in a competitive market, those 25 basis points can actually make quite a big difference. Often banks or lenders might get a little bit more nervous about lending as rates keep going up. So it's more the signaling effect of the 25 basis points rather than how it works on a spreadsheet with the actual structure.
I always think about tech and telecom, and you have Microsoft and Activision. We had the iRobot. I don't want to talk about that because that's still a developing story. A lot in telecom as 5G was coming along, spin-offs after AT&T was trying to break it down, right? I mean, T-Mobile and Sprint, there's just been a lot going on. Are any of the deals, I mean, they're all interesting to you, but are any of them stand out to you because of the metrics or the way they were done? I'm sure you learned something from every deal. You got any takeaways from some of the action that you've seen?
744 is out.
The one thing to learn,
what do they all say?
Seen time and time again over the years is every single acquirer has a unique reason for acquiring a business. You can show the same business to thousands of potential acquirers, which we do every time, and they'll give you 1,000 different opinions. So there's no right or wrong way to look at it. We don't necessarily see specific trends because everyone has their own reason. For some it might be revenue, for some it might be their location, for others it might be their team. So lots of different reasons. There's no commonality, but I think, as you mentioned, there's a lot of activity happening. The large multi-billion-dollar acquisitions and the smaller acquisitions in the 8 and 9 figure range as well.
Right, understood. And as I was saying, while credit may be tight, lending may be tight, are you worried about a recession that might stall things at all?
Our analysts at the moment are not worried about a recession. I think, particularly in our industry, people always need to buy and sell businesses. They don't suddenly stop wanting to invest or stop wanting to deploy capital.
Coin's up almost 3%.
Part of their strategy. It might change temporarily.
Eyes getting a little flushy down here.
If your strategy is to
Dish broke out to the upside, 3.7.
You don't
Always.
not do that because there's a recession. You might pivot your strategy and what your criteria is, but you're still looking to do those deals.
Interesting.
Right there's a low of the day test on SPY.
I enjoyed this conversation, and it shows the demand is real and it's global. It's a global story, and there is cash on hand to deploy. That they're not just.
We're gonna flush or we're gonna bounce.
Thank you so
Thomas Mail, thank you very much, CEO of FE International. Still ahead.
Looks like we're gonna maybe flush.
Stocks at the highest point since February of 2022. Jumping after the earnings, let's get some details on this one next.
Many
Double bottom there, or flushy flush? Who's in control here? Bears? Really close to the low of the day on SPY. Oh boy. Might be a pretty big flush if it actually happens. Got like 440, 21, 439, 35. Move back up to VWAP first. Yeah, I'm out. Might go long. Yeah, I'm gonna go long. It's 10 minutes to 3. One last little pump in power hour. 4 hops.
I think you still hold on to it if you have the company. You may trim a little bit here or there just because you've had such a nice run in it this year. Take some of those earnings. But at the same time, we've got to see how AI goes and see how this Firefly expands and how it grows the business over time. Obviously, those are the magic words to say right now for any company, and the fact that Adobe is so strong in it and is seeing some positive return from customers about their Firefly system and how good the AI system can be is really great. But again, they're at a rich valuation right now. They've had a great run up this year. So I wouldn't chase the stock if you're not in it at this point. Maybe look for a pullback and then trim some just to take some of those earnings that you've had from a great run this year, and obviously a great earnings report that came out.
Yeah, and that makes some sense, right? You're up 82% from the yearly intraday lows. You've already done really well if you already had it. I mean, that's a good point, Logan. You know, when you think about a stock that has already run up 50%, but it has paled in comparison to some of the other AI boom buzz names that are up 100% or 150%, I mean, namely NVIDIA, right? What do you think about that, Derek? I mean, how much room to run does a name like this really have over the short term and long term?
Yeah, so we do have to consider, so the stock's been up 50% in the last 5 weeks, but 5-6 weeks ago, this was regarded as a company that was going to be see pressure, be a headwind,
Reddit, why?
And that it was going to potentially.
I don't know, Super Smash. Not sure. Come up on Power Hour. Might get another pushback to VWAP first.
That the TAM was going to shrink, and this was a popular short for a little bit. Hence why it was underperforming. That
don't want to sell off on a Friday.
Over the last few weeks, with all the
I wouldn't bring nice sentiment into the long weekend.
This kind of quarter and outlook that they've made, and so there's a bit of a catch-up trade for people to really understand. Adobe is not a loser; they're a winner in AI, and they're probably one of the first ones, at least at the application layer, that's going to see a monetization benefit. And so, yeah, we could take a little bit of a breather, but this is a big moment in a new computing cycle around AI. They're in a very good position, and I think just structurally, this stock has got
a new low of the day on there
behind it, and there's more catch up. I think
closed
around the valuation.
Right, Logan. Just a few seconds. Do you have other names that you love at this point?
We're evaluating. I think right now the market is due for a pullback. We've had a really fantastic run. I think it's due for a pullback in general, and then we'll be going into the names. There's a lot of great setups out there. There's a lot of
low volume today, I think.
Whether it's in the tech space or the market's even kind of broadening out
right now.
Very
low.
But we're evaluating and waiting for a pullback in a lot of different names, and then looking to go in from there.
All right, Derek Wood, Logan Gilland. Thank you both.
Yeah, I flipped back short.
Adobe.
Hopefully I don't just chomp out of a bunch of profits. You can see it going either way. Big bounce to through the bears or flush on all the shorts, stops. Yeah, it just dances around here. Kind of failed the double bottom though, so I think it's bearish. Yeah, there it goes.
Whether you're an experienced investor or just getting started.
There it goes. JP Morgan CEO Jamie Dimon won't face a second round of questioning in the bank's litigation over its ties to Jeffrey Epstein after a judge blocked an attempt to reopen depositions in the case. All right, next support on SPY. $439.50, somewhere around here. This flush is so subdued. There's no conviction. Everyone's gone. Bears are all at the beach. Barbecue back to VWAP 2085, up 6.92%. GME, let's see, down 0.7. Your SPY's getting a little more selling. There it goes. Oh, too late, SPY. We know where you're going. There's Power Hour.
Good afternoon. It's 3 p.m. in New York. I'm Caroline Woods filling in for Oliver Rennick live from the floor of the New York Stock
Yay,
Exchange.
Caroline.
This is market on close. Let's take a look at where the markets stand with an hour left in the trading week and, of course, ahead of the 3-day long holiday weekend. We're seeing some red arrows now. They're picking up a little bit of steam. Russell, by far the worst performer today, off about 1%, holding on to some very modest weekly gains. Dow, NASDAQ, and S&P also seeing some weakness today. NASDAQ off about 0.4%, but still on track for its 8th straight winning week. Strength in Adobe today is being offset by weakness in Warner Brothers Discovery and AMD. Meanwhile, S&P on track for its best week since March. It's 5th positive week in a row, 3rd positive week for the Dow. Taking a look at some of the futures products, we're seeing some strength in Bitcoin today, up about 4%, trading around 26,430. Also seeing strength in oil prices, although still trading below $72 a barrel, around 71.36 right now. The VIX, meanwhile, trading right around 14. All right, to kick off the show, I'm joined by Kevin Hinks, senior equities contributor here on the network. So Kevin, first of all, great to have you. Happy Friday. Happy almost long weekend. We're getting there. Not a whole lot of conviction in the selling today. We've been seeing some back and forth movement across the unchanged line, but you know, just kind of want to get your sense of this market right now, because I know on Fast Market you talk about the technicals point to overbought. But does this market even care? Because we're on track for another positive week. S&P holding above 4,400.
Hello, Caroline. You know, after yesterday and what can only be described as a meltdown
Okay, I'm out.
with lower yields and lower U.S. dollar, today we get a little bit of reversal in terms of the dollar in yields, but the market isn't really paying attention. Sure, they're going to... If it stays as is, they're going to all end up slightly in the red. But boy, Caroline, this is not a market with a lot of conviction here on the downside.
I'll probably re-enter.
Really take these stocks
we'll see.
Significantly
Not much time left.
We are looking for something that will change the tone in these markets. Is it Fed speakers? Well, if it is, you saw Christopher Waller's, his comments. James Bullard made comments. Next week, Wednesday and Thursday, we'll get Jerome Powell speaking Wednesday before the House, Thursday before the Senate. Maybe that can change some of the tone. But right now, this market took the Fed meeting and the pause on interest rates, and they took it and they chewed through the leash, Caroline, and ran away. Yesterday was a strong, broad update in this market. And today, more of a let's take the rest of the weekend off kind of trade.
Well, Kev, I don't know if the Fed is what's going to change it, because obviously the Fed remaining on pause this week wasn't hawkish, but the statement was, the dot plot was. Jerome Powell, you could say maybe not quite as hawkish, but even despite that, we're seeing still really impressive gains on this week. So did we hear any backpedaling of some of that hawkishness from these comments from other Fed members? Do you think we'll hear any kind of backtracking from Jay Powell next week?
Here's where I can connect the dots to something, Caroline, and we're reaching here on a Friday afternoon to try to figure out. Christopher Waller did say, he referred to the banking crisis. He had some very harsh words for the bankers and said, basically, it's not the job it's the job of bank leaders to deal with interest rate risk, and nearly all lenders did that. He said, I do not support altering the stance of monetary policy over worries of ineffectual management at a few banks. So very harsh comments, but he did say this, and here's where I'm connecting the dots. By July, credit conditions will be clearer. If banking conditions have not tightened,
On SPY, I'll probably, I mean, calls would have been when I closed. I could have flipped fully, but I'm gonna look for the short side, look for another entry on the short side. But we might run out of time today. The last like 30 minutes and you just start to get sketchy. The last 10 minutes, it's just, especially on today since it's quad witching.
Come July, because all things considered, core PCE, that part that Jerome Powell was so concerned about, is still too high, Caroline.
Well, especially the regional banks, but these banks need to probably prepare for at least 2 more rate hikes, at least according to the dot plot.
We're talking about like over the long weekend. Probably get puts.
Next week, Kev?
Yeah, I mean, we still have this head and shoulders. It's not even hardly played out. We've just broken the neckline. MACD just flipped bearish on the hourly. We're gonna have a red candle under the 9.
On Thursday, jobless
Yeah.
claims again. Besides that, it's really
Intraday though, yeah, I'll probably look also to the short side. But again, yeah, when I closed my short, I could have gone long, but
besides that, Caroline,
yeah.
pretty light week next
I
week for
want to treat it like a punch card. I only get so many punches during the day.
And then we start, and then remember,
Before I start
as
failing.
you get to next week, it's the end of first quarter earnings season, and then we're only 2 weeks away from more earnings. And frankly, Caroline, these NASDAQ stocks, these magnificent 7, as B of A has described them, they're going to have to put up some numbers come earnings season to hold some of these gains, Caroline.
Yeah, then we'll really see if they're fairly valued. We're looking at the earnings calendar right there. Pretty light. I saw FedEx on there, KB Home, Darden, CarMax. But I guess between now and a couple weeks from now, when we have to start looking at the new round of earnings reports, what's going to drive this market, Kev? Do you think
If you want to get calls, wait for a little retest down here.
Well, historically, and I've been doing this a while, Caroline, this is not a great time to hope for implied volatility. Obviously, we never know what event is out there that become unplanned, but there is very little. And that's why if you look at the long-term view of the VIX contract and not just the last 2 years, it can grind pretty lower this time of year, Caroline. So
Caroline?
Some earnings or without some economic data or some Fed speakers to change the tone, surely we could drift.
Sounds normal to me.
Means higher in stocks and lower in implied volatility, Caroline.
All right. I'll believe it when I see it. Kevin Hanks, Senior Equities Contributor for the network. Thanks so much, Kev. Have a great weekend.
You too, Caroline.
All right, let's discuss the broader market and economy more. For that, I'm joined by Lorenzo Esparza, CEO and founding principal at Manhattan West. Lorenzo,
Might actually
thanks
go
so
long.
much for joining us on this Friday.
Great to see you, Caroline. It's wonderful to be here.
So, Lorenzo, we're near new 52-week highs for the market. Obviously, inflation's coming down. The Fed's on pause, hawkish pause.
I'll try it. I don't think there's enough time for the short, maybe.
In terms of interest rates, what do you think the most important
I
story
get the
of the
bounce.
week has been so far?
Well, aside
Kinda
from
made a little
what's
double bottom there.
happening next door to me right
See?
now, I'd say probably just what the Fed did here. I mean, I do think it was significant. If you imagine that they've raised 10 times in a row, which is fairly aggressive, And, last time I was on the network, I said they were going to raise one more time and then they were going to pause. So I'm sticking with that call. I do think that the Fed is probably done this year. And I actually look to the fact that Powell was so hawkish in a lot of his commentary and stating that they could potentially raise 2 more times. I felt like that was a bit of an overstatement to try to, calm the markets. But, I really do think that that's
Could just be consolidating before another flush too, but
they're going to say it's data dependent.
I'll stop out if I drop below it.
But I think this is the most significant thing that's happened. It's been a confirmation.
Hold the long though till like 9 moving average or like 440.
After 10 consecutive moves, so
440, 43.
Been the big deal.
Where do you draw optimism from that the Fed is actually done? Is the economy in worse shape than the data is showing? I mean, because based on the statement and the dot plot, it seemed pretty clear that rates are going higher from here.
I got to tell you, if you look at the Fed funds futures volatility, it's been all over the place. So I'm not looking at that as the most significant, data point. It's just moved too much to be, imminently reliable. I think that what you're going to see is, the Fed's going to take a look at what's happening and make some course correction. But what's really driving it is the fact that, we were at 9% on inflation. We're down to 4, right? We were at 4.9, now it's down to 4. They're targeting 2. So 2 is getting, it's getting into the specter of visibility here. So I think they're looking at that as progress. That's going to be, the key mandate is, can we get inflation down to 2%? That plus where unemployment sits, I think it's given, the indication that we're moving in the right direction.
Do you think the Fed can bring inflation back to target without sending the economy into a recession?
Well, that's the $1 million question. I don't know. I think that, I don't have a tremendous amount of confidence that they're going to, land the plane correctly, or I should say perfectly. But we're moving that way. I think that just given what I see in the labor markets, what I see in the data, we are at that structural unemployment level of just about 4%. I think we're at 3.7, and I think we're going to stay there. The labor market's fairly tight, and so I think given what you're seeing, this slow move, I think you're looking at about a 12-month cycle before you see unemployment move from 4 to maybe 3. I don't know if they're going to reach that 2% goal. That seems
not a reversal yet, but
lofty, perhaps unrealistic.
More downside, just consolidating for now.
Stay in this, kind of sideways motion and slow trickle downward.
Well, one would argue maybe that's why the Fed needs to keep hiking rates. But let's talk about what this all means for the market, because obviously we're seeing some red arrows today. But when you look at the weekly numbers, Dow up 1.4%, NASDAQ up 3.5%, S&P up 3%, Russell up pretty modestly on the week. Some would say maybe the market's too optimistic given that the Fed says that they're going to hike 2 more times. But if you think the Fed is done, do you think that this week's rally is justified and maybe there could be more room to run given the fact that the rate hikes, maybe no longer?
Yeah. Well, I'd say there's somewhat of a missing piece of this story here, which is the market breadth has been so modest, right? You have 5-7 names driving the growth of the market. So if you looked at a equal weighted index, the market's not up as significantly as it would appear, just in the broad-based numbers. So, you take out those top 5 names that comprise, 20+% of the index, and you don't have that big movement. So, I don't think the market is as frothy as the numbers would indicate.
See if we get a bounce here.
Just a handful of names that are driving the growth. You strip those out, the broader market is it's up modestly, but it's not going as gangbusters as the broad index would suggest. So I think we're gonna move higher from here. I think you'll see these bigger names take a pause and come off their highs. But I do think we're going to float, and I use the term float purposely. I think we're going to float higher, through the end of the year and into next year. I'm not seeing the year end in negative territory. I think there's enough, consistency in the markets. And then look what's happening in the IPO market, right? It was dead last year. And
Yeah, I'm out.
pretty robust opening with Kava this week.
Let it go.
The IPO market's starting to move, so that's giving you indications that that things are heading in the right direction in the equity market. So that's what gives me confidence that we're doing okay.
Yeah, we had Kava down here on the floor yesterday. I mean, it was supposed to open at what, $22 a share, opened double that. Down about 11% today, but still trading around $39 a share. So still, pretty impressive run higher for an unprofitable company.
Good one, John.
So you're looking at the lack of broad-based.
You've contributed
right
0 to this chat,
the rest
sir.
of the market can catch up versus a bearish sign that maybe there's a reason the market's not rallying.
Weird, you don't show up on there, but on there.
Yeah, exactly. And with Kava, that's very typical following the pop on the open that a lot of those profit takings.
Oh, because you're already blocked on this channel, maybe.
We'll see where Kava goes, but I think just broadly speaking about the evidence of an IPO.
Yeah, no one can see your messages.
We haven't seen is giving us confidence that something positive is happening.
He's
But
blocked.
The broader markets, I think
You guys can't see that, huh? That's great. It's weird. It shows up on my restream, but not on YouTube. It's really strange.
That the markets can continue to move up from here.
So where do you want to put money to work if this market's heading higher?
That's great, John.
I would tell you, I still like short duration fixed income. If you look at what's happened with obviously rates where they are, it's suddenly folks are able to get return on their munis and get return on their fixed income, whereas in the past you just didn't have that. So I think for investors looking for income, we finally have
there. Oh, it's a separate block. I can block them also on here. That's so crazy.
I still like
so SPY flush down there a little bit lower.
General equities. I think if you look at European equities,
if it bounces right on my line there, wow.
It's a broader based move up, but we still like equities. We also like alternatives.
I wonder if I blocked him at some point, or if he's just like shadow banned from YouTube for being just a perma chump.
And a third in alternatives. And if you look at what the institutions are doing and the pension funds, that's how they invest, right? So we do the same. So we're consistently looking at having appropriate exposure in liquid markets, but also thinking about the private markets where appropriate.
And you're underweight emerging markets. Why?
Well, I think emerging markets are affected by China primarily as a risk there. I think the weakening economies in emerging markets are always the most volatile. So, not a sector that we're overly optimistic about right now. But I think, look, we've got to keep an eye on China. Do I believe they're going to attack Taiwan, physically? No, but I think there's going to be saber rattling. There's going to be volatility, and the emerging market companies just, they react to that in a broadly negative way. And so, I would be, cautious about that. I do think, this narrative around China and Taiwan is going to continue for a while, because Taiwan has become, the chip center, right? The chips are the new oil, and Taiwan is where you get them. So that's where the battles are happening. But I think China has learned from what they saw in Russia. They don't need to go in and destroy the place, but they can send in, political cohorts to carry out their, will. I think you see a little bit of that, in Hong Kong. And I think that could be a situation that occurs in Taiwan. So for as long as that, as China remains a specter out there, I think, we're going to be cautious on emerging markets.
Okay, so cautious on emerging market stocks. I want to bring it back here to the U.S. just quickly before we wrap, because you're pretty bullish on this market, that the rally can broaden out, that it continue to move higher. And then I said, where are you putting money? And you say short duration bonds, which seems a little cautious to me. So can you be any more specific about in equities what you like and where you'd be comfortable putting money to work right now?
Well, I always say, we want to skate to where the puck is going, not where it's at, right? So I think what you're going to see is, Main Street folks are going to rush into
2080
tech names
plus 6.6% on barbecue.
right? Because that's where they're going to give up a little bit of the steam. So I probably wouldn't be rushing into technology right now, given that you're going to be late to the party. So I would be focused on value type stocks. Companies that have real stable, moats, that have great cash flows and credit. The opposite of that is like a Bed Bath and Beyond, right? That's a company that had to fold its tent, very over leveraged, not in a great posture. So we're still focused on value. We like, many of the names that have succeeded this year, but I think this would be the wrong time to enter those positions. So we want to focus on, again, more of a value tilt. And I think those are the companies that are going to be part of that broader rally that are going to move up from being up modestly this year to actually have some gains. So that's where I would position, our portfolios.
All right. Well, we really appreciate those picks and your insights. Lorenzo Esparza, CEO and founding principal at Manhattan West. Thanks so much.
Thanks for having me. Great to see you, Caroline. Bye-bye.
You too. Coming up, we'll look at the philosophy behind the William Blair International.
See if it makes a little inverse head and shoulders down here on the support. Looking for a shoulder over here.
Lululemon is a top pick. Stay with us. We'll be right back.
Could you guys see him? Jay, you said he's blocked. Could you see him? That's weird. Upward trend of video will continue? No, I don't think it'll continue. Okay, there you go. There you go. Sometimes those shoulders happen quick. You don't get like any bit of consolidating there, just real fast. We'll see if that was the shoulder right there or if it's gonna come down and consolidate a bit. Could have held the long, but you never know. Gotta kill losers quickly, stick to your rules. This could have just turned into a flush. Don't know where that's gonna end. Sorry, Miss AMC still going to be in court, AMC, until after June 29th. The outcome of that court, I don't even really know what's going on with it. But could that be really bearish for the stock? first Russian nuclear weapons have been moved to Belarus. We can always wait for the pattern. Sometimes you'll miss it, but more often you won't. You'll get the shoulder. Or it'll fail and just keep coming down. Either way, chasing is usually never the right play.
Those gains. Production of their SUV, that's 70% of their pre-orders, is the caveat for this company moving forward, as it's kind of overtaken the sales of its pickup truck. So that's going to be one of the concerns moving forward. Competition's starting to ramp up in the EV space. Those rising interest rates have sapped some of the investor enthusiasm. But then also you've got to figure this company's got to continue to raise funds. The nice thing is that Amazon's one of their largest shareholders, so they have the big order from Amazon, which kind of keeps them afloat at this point. But we did see some unusual option activity on the call side in here, and they were out in the July.
They saw that deal with Amazon, huh?
On the 17.5 strike. Trader bought
that ain't bad.
20,000 of those earlier today for an average debit of 90 cents when the stock was a lot higher. So that break even of 1840 over the next 35 days, that's still about 23% above the current share price. So you're going to need to see some movements and improvement in the stock to get above there. Call volume is about 1.5 times normal daily average volume that we've seen over the last week, with the put call ratio just around
I like the Rivian chart.
So you know, for every 10 calls that are trading in there, only about 2 puts. So yeah, skewed a little bit to the call side, but yeah, the stock's given up a lot of those gains that we saw earlier on in the session.
All right, moving to another weekly winner but daily loser. Microsoft shares off a little more than 1% today. What's the bullish trade you saw for Microsoft?
Yeah,
something tells me it might have to do with AI.
Maybe doing something with AI. I think some consolidation needed in a lot of these stocks, and Microsoft's seeing a little bit of that today after hitting all-time highs earlier on in the session, about $351 a share. So you have to take that into consideration. We've seen this on a daily basis, the analyst community coming out, raising the price target on this stock based on the fact that they're doing AI first, and they're doing it a lot better than others as they integrate it into their products.
There's the shoulder.
The Office suite or their Bing chat, Bing search. So yeah, AI is the name of the game, and Microsoft taking advantage of the interesting trade that I picked out today here in Microsoft. It's really far out of the money. Somebody's buying some really optimistic calls out in the October monthly series. So about 126 days till expiration. A lot of duration on this trade for this trader. They bought over 15,000 of these 385 strike calls for an average debit of about $8.10. So that break even of $3.90, $3.10 over the next, say, 4 months. That's about 14% above the current share price, would be new all-time highs. And the question that I would have seen unusual option activity so far above the current share price is there's got to be another way to get long in this stock using the option market without buying such an out-of-the-money call on this one. But this is definitely an optimistic trade from this trader.
You know, it's interesting, Tom. I was just pulling up the analyst breakdown for Microsoft just to see where it's trading in relationship to the price target. And actually, the median price target for Microsoft now is $340, and Microsoft is currently trading at $340, $355, despite the fact that more than 80% of analysts have a buy rating on shares. So I think it's time for some more adjustments to the upside, or do you think analysts are going to have to start maybe going on the sidelines for Microsoft?
Yeah, if we don't see a pullback
party in the background.
overall market, Caroline, I could easily see a lot of these analysts kind of resetting their price targets over the next several months. I think what's going to be key is moving into next earnings, which is about a month and a half away, is what type of revenue generation or total addressable market that Microsoft's going to see. So it's going to be reliant on a lot of guidance and how the AI platform that they've created is creating efficiencies and also revenue generation. The CFO recently came out and said that OpenAI would contribute at least $10 billion in revenue on a yearly basis. And this is a company that basically had, about $190 billion in revenue last year.
That right shoulder might be failing.
All right, TBD on Microsoft and all of these other AI winners. Adobe is the winner today. Only up about 1.3% though on those earnings, although up about 10% on the week. All right, finally, a big winner today is Virgin Galactic, but even that is actually off its much higher levels today. Tell us about the trade you saw for SPCE.
Yeah, this one was rocking earlier in the session, hitting.
Could just be a bear flag still.
Which was basically about a 4-month high in there. And this is all based on the news that, hey, they're going to launch their first commercial flight at the end of June, between June 27th and June 30th.
They've got a double bottom here.
A team of 3 Italian researchers. And then they're going to start monthly flights starting in early August if this one works out well. Private astronauts, Caroline, are going to have to pay $450,000 to fly on the commercial space flights. So, yeah, that'll create some revenue generation because over the last couple of years, this company's burned through about $1.5 billion in operating
They take a lot of flights.
Amid development
a lot of full flights.
So this is some good news for the stock. Still up over double digits today, up about 33% on the year. As I mentioned, did hit those 4-month highs. And anytime you get moves like this in a really low price stock, we see some call buyers come in. One that stuck out to me is really short term. As far as duration goes, a June 23rd weekly option series that expires in just a week. Traders bought over 10,000 of those 6-strike calls for an average debit of only 25 cents. Low price stock, not a lot of option premium in here. So that break even is $6.25 over the next week. That's about 35% high. Days to get above that break even in such a short duration. About 18 times normal daily average volume that we've seen over the last 5 trading sessions. So yeah, a lot of bullish flows in this one today, Caroline.
Tom, I've seen your Twitter pictures. I know you like to travel. You've checked a lot of cool places off your bucket list.
Yes.
Australia,
3:30 now.
London. What do you think? Space, 450,000 to see what's above and beyond. You signing up?
Not a chance at all. It's almost like the cruise theme that we talk about. I won't get on a cruise.
Exactly.
I'm not going to get on a spacecraft anytime soon.
Jenny hates cruises but loves
There's probably more of a chance I'd get on a cruise based
space
on the
travel.
price, but I was joking with Oliver. I won't even pay to choose my seat on a flight, pay extra, so there's probably no chance I'll be paying $450,000. All right, just to kind of wrap things up, just want to get your broad take on the market. We were talking with Kevin Haynes.
Yeah, I'm not selling barbecue.
Just obviously you've talked a lot about on the fast market that the technicals are overbought, but this is a market that can't really be stopped. I mean, we are seeing some arrows today.
The trade,
What's your overall thoughts?
if we get up and there's, you know, TA showing that we're at a top like we were here, I'll sell it. But I think we're just starting to turn around on the momentum, so I'm happy with my position. For whatever news comes, if there is news. Otherwise I'll just wait for the
I think one of the key things is heading in to the end of the
or the news.
At the end of the month, not only quadruple.
Thanks, Foghorn. Appreciate the dono, buddy.
A lot of these fund managers.
It says lemon character doing a victory dance with maracas in his hands. Thanks, Fog. The lurker donos are extra special.
If they continue to buy,
no comment.
Because of that underperformance, is that going to cause the final?
Foghorn, I remember you, dude. You've been here a long time, haven't you?
A little bit of a pullback today. That's probably necessary for this rally that we've seen over the last several months to continue, and some consolidation may be warranted.
Let's get nuts.
I'd be careful Insurance is really cheap right now. Look at the VIX below that 14 level. If you're having some concerns about
I'm not liking this
moving up
bounce
as
yet.
quickly and parabolically
Jump out of my
as
long.
it has, there's some cheap insurance out there.
Like just consolidating, bear flagging maybe.
Thank you.
Long time liquor. Thanks, Fog. I feel like I've seen you chat long time ago at some point. Appreciate it, man. Hope you're having a good week. Excited for the long weekend. Extra time off. Yeah, look at that little dancing lemon. Alright, there's the SPY bounce. A bit. Hey, might still be in that range. Setting up a little range down here on the bottom. Okay, broke out to the upside of that. At 334. We'll see, move back to VWAP. AMC is down 1.8. Beyond's down 1.3. Coin's up 1.9. Dish is up 3.5. Liking this triple bottom on Dish. There's SPY starting to rally. Safe down 1.7. Peloton down 3. Let's have this engulfing candle on the 5-minute. Just barely. I'm back down for a retest. Chennai.
Plan to invest an additional $602 million in its chip-making facility located in China, despite
Right, Jenny's there. He's normally a
and China regarding
smart
some
taking
security
Friday off
issues
kind of
with
gal.
semiconductors. Now, Now, the investment will involve acquiring equipment
Catch an
and
Uber
expanding
before it's too
assembly
busy.
lines at the existing facility. Through this expansion, Micron does aim to create about 500 new jobs, increasing its total workforce in the country to around 4,500.
Maybe she's not as smart as we thought.
Plans to expand does come after the China Administration of Cybersecurity
Thought she was so smart. Taking off early Fridays. It's traffic.
From then buying Micron's products, citing some national security concerns. They've also said that this could actually impact Micron's overall revenue in the single digits, as China does contribute about 11% of Micron's global sales. So this is an issue they have had to navigate, but they have not been the only semiconductor company that's been hit by some of these uncertainties. Intel, Broadcom, and Qualcomm are all companies that have pretty sizable China exposure. We did also get reports, though, that actually they're expected to commit at least $1 billion towards setting up a new packaging factory in India, a move to then further diversify some of its offerings as a way to then offset some of these tensions with China. So the top three memory producers, those being Micron as well as SK Hynix and Samsung, are working to improve some of this imbalance they see with their supply chains, but then moving into new markets like, of course, India. But none of this was able to excite investors here, as we are seeing shares expected to close the day lower, up about 35% on the year here and up about 5% still for the week, but just not able to close Friday's session with any of that strength that we have seen in the last 4 sessions, Caroline.
You know, it's interesting, Jenny, you say that China contributes about 11% of Micron's global sales. So the initial estimate was low to high single-digit impact to revenue, but Micron actually was out with a filing today saying that half of China headquartered customer revenue is at risk. So the new estimate actually equates to low double-digit percentage, so a bigger revenue impact. So it's actually maybe 1.4% decline today. The fact that it's still up about 4% on the week might actually be a pretty good response. Now, I did see that a Wedbush analyst did maintain his outperform rating, but $65 price target on shares.
It's pretty late, probably 2 accidents on the road. Oh, that's true. She's smart. She checked Google Maps for accidents and saw them. Said, hey, I'll work late. Give me overtime.
The same exact theme with Micron and Intel, that it seems like the street is a little bit more neutral on both of these names, which shocked me because completely different conviction we see in AMD or Nvidia, but both Micron and Intel, it seems like the street
said,
has the price
for Jenny Horn, anything.
With a more neutral leading stance, which is interesting because we talk about the push into AI and the excitement in tech and the outperformance of the NASDAQ. I think it's really, really critical, though, to differentiate some of these chip makers
340.
because it is not.
I don't know if we're gonna get that
It's definitely not
today
an
pump.
equal playing field so far this year, and you can see that reflected on Intel, Micron, both up around 35 to 40% on the year versus, say, like an AMD, which is up.
Got a nice inverse cup formed here. So we don't get the rest of the handle today.
So I think that speaks to the different performance we're seeing from these companies.
See if that forms next week.
Definitely a headwind, but you're right. There's 25
Looking for like 440, 50 maybe. All the way up to 440, 441.
Not getting any closer today with shares off about 1.5%. Jenny, thanks so much for filling us in.
Can I?
Appreciate it.
Thanks, Caroline.
Exempt.
That's Jenny Horn, markets correspondent for the network. All right, now
Barbecue, little candle above VWAP.
I'm joined by Larry Shover, managing director of international markets, Exchange Capital Resources. Larry, thanks
Here's
so
up
much
18. Yeah, finger broke out. 18 and a quarter up over VWAP. Thanks, Jenny. Wow, look at that daily chart. That volume.
Positives and negatives that are just forcing the issue, as it were. I mean, the crack spread at a 2.5-month high. The market is still trying to sift through the China issues with regards to oil quotas.
Mullen bouncing a little bit on 22 cents.
Year over year to refineries.
Got a ways to get to VWAP.
Chinese stimulus. That's offset by dollar
Mullen
spread.
spy.
And also,
Going the wrong way.
In China, in the month of May, are well below the 5-year average. So who knows what's going to happen? But I think the market's just trying to work on figuring that out.
Well, Larry, I meant your energy, but since we're getting right into the energy markets, that's one area where we're not seeing red arrows today, as we can see here.
There you go, barbecue. 21, 29. We had 2130. We had 12,000 shares at 2130. Is this 9%? The late Friday pump?
Impacts the overall inflation outlook and the market outlook? Because we know that's
Those are
one
fun.
thing, and we'll talk about the Fed in just a second, but that's really out of the Fed's control.
No, it's great. I mean, it's a great question because, like, next week there's a $19 billion.
Tempted to average in, but I bought so much crap today.
Is there going to be more of a grab for
Bought
inflation protection given
Mullen.
people's view on inflation?
I entered a lot of positions today.
WTI by and large has been in the low 70s.
But yeah, barbecue's looking good. Set up a nice inverse head and shoulders. I don't think we're gonna get news over the weekend. I mean, who knows when we'll get it, but actually, I actually have no idea. Could get it this weekend.
Decision to pause rates at this last meeting, but basically say there's still work to do and we're going to do it, and have 2 more hikes put into the dot plot.
Yeah, I think it's the market's doubting the dots, and you hit the nail on the head.
Don't doubt the dots, market.
50 basis points in the updated dots is really threw the market for a loop.
Barbecue, 2130, 3,000 more shares.
It's causing the deeper inversion or flattening of the yield curve, which
We filled those gaps to the downside too, huh?
The 210 yield curve had inverted
nice.
by almost 20 basis points since last Friday, and it's really largely due to that, and also the market's unwillingness to fade to skip versus pause narrative. That's going to continue to imply flattening of the yield curve.
2140, barbecue.
So how high
do
you
it.
think the Fed ultimately goes? Do you believe the market, or do you believe the dot
Get
plot?
some volume.
Well, put it this way.
2145.
The market right now is putting what, 75%
Yes.
chance of
Buy at the market.
rate hike in July, but it's predicated on payroll growth
Buy
is
at
still
market.
strong, and
Do
maybe
it.
uptick in the unemployment rate won't happen again in June. And secondly, the downshift, the widely anticipated downshift in
I'm not liking this buy.
inflation for the CPI.
Too close to 10 minutes. There's 15 minutes left.
I don't think it's a foregone conclusion. I don't think, for one,
Barbecue, 2145 up 10%. Did have 20,000 transaction at 2150.
It's a foregone conclusion that we're going to have 50 basis points between now and the end of the year.
See if we can break the high of the day.
That the Fed, or at least as far as we know, that the Fed was going to cut. They were expecting cuts as soon as September, not all that long ago. So could the market just have it wrong at this point, and Powell continue on his path higher?
Yeah, I think the market might have it wrong, but I think the market might be premature. And again, I think the market's doubting the dots. They don't know what to do.
Don't doubt the dots.
With the dot projection, given the fact that it's way off from what the market has said. And I think they're waiting for this next week when Powell speaks before the House and the Senate, and see what's the real deal. And I think the bottom line is, what's more important to the Fed right
Go
now?
barbecue, 2175, flirting with the high of the day.
Restrictive longer than most people.
That was just a 1,300 share order.
Basis points at the end of the year. I mean, I think the Fed is dead.
Being so illiquid.
Keeping right now, the effective fund rate is above 5%. They want to keep restrictive for longer.
Yeah, their ultimate goal is bringing inflation back to target. But when you go back and look at the Fed's inflation targets, I think it was, 3.5% at the end of this year, and not even back to 2% at the end of 2024. So do we need to see a readjustment of those targets?
I often wonder that. And I think, I think there's definitely an outlier chance, but I think the Fed is so committed to being an inflation fighter, even though their historical record has been horrible at being an inflation fighter. I think that's foremost. So for them to give in and change
2180, high of the day on barbecue.
It's definitely an outlier chance.
Plus 11.79%.
All right, so what does all of this mean for the
22
bond
cents.
market, Larry? Because you mentioned
Next.
the yield curve is still inverted.
Next spot.
Should we look at that as just a broken recession signal at this point?
Nice inverted head and shoulders has been formed.
And what are the implications?
No, I think the implication, the yield curve is inverted, and inverted flattened as much as it has. Really, first, we have to remember that the Treasury allowed more bill supply. So that's just going to
There you go, 2190, 12.3%.
Like in the twos, but also the consensus
18,000,
is just not
2195.
to skip versus pause narrative, and that's going to keep the curve flattened. I mean, I've gotten stopped.
We're getting back up to that 2340 level. Oh boy.
So,
oh boy.
Something's going on. At some point, I think the
22 cents.
will be the trade. We'll see that,
go the other way, but not anytime soon until there's more clarity on what the Fed is really going to do. And we have to keep in mind, it's not just Powell. There's 7 Fed speakers next week. I mean, they could definitely offset anything that Powell says on Wednesday and Thursday.
22.16, up 13.6. I like the volume coming in too.
Personally, I still think duration. I like duration, which means buying 10s or 30s here. And, you know, I really like the steepener. I think that's a trade of 2023. It has not worked out this week. I've been unprofitable. I would just say it's more of a tactical trade. You have to keep your stops very tight. But I do think, like right now, the 210 closed around negative 96.
Oh, baby.
It's a good time to get into that if you can, you know, take the risk and have like really.
Give us a nice send off into this weekend.
All right, Larry Schober, we have to leave it there, but really appreciate you sharing all of your expertise with us. Thanks so much.
Thank you.
That's Larry Schober, Managing Director, International Markets at Exchange Capital Resources.
Let's make this weekly candle green. Look at that thing. Big old hammer. Turn this into back into a bull flag of sorts.
Stay with us. We'll be back after this quick break.
22, 23. $22.25. Over that 23.40 is going to be resistance. Not dumping end of day on final bidding day. I guess that's a good sign. I feel like the stock price is at this point is still totally irrelevant of what's going on with the bankruptcy court. I don't think there's been any special news that's affected the stock, unless there's news coming out right now that we don't know of. Other than maybe, what was that news the other day? Oh, I can't remember. What is this? BMO stock alert. Delays sale timeline again? Well, that's old. $22.90, 17.4. Watch that 23.40 level. Buys coming down. 10 minutes to go. There you go, barbecue. $22.99. We get it. We get it. $23.40 prize. Good old movement at close. Classic. Classic Friday pump. Well, we were patient all day. A nice upward movement today. Top it off with this pump into close. The IP is not going down. That said, on the daily chart, it is kind of interesting how it does look inverse. $99. Be scared of $23.40. No, I did not see a filing saying that on one of the dockets. RC Ventures is a creditor? What the heck? Dude, this is such low res, I can't even read it. I don't see RC Ventures on here even. Where is it on here? I don't even see it. I don't see his name over here or over there. Oh, it's an accident. Buy's coming down. Well, that could be the cause of this pump, potentially. Added 427. When did he sell his shares? February. Wait, way before February. 8. 427? When was this released? Rose. Rose means no one own or representing themselves. Is this on it's on the other subreddit? Buy at the low there. Is that on one of the dockets? Yeah, I'm just looking. Primary bondholder being our retail, RC representing himself. He holds the bonds? Creditor would be a bondholder? RC providing to the dip. Well, it's a dip provider, gets first dibs at everything. I'm still not sure. They're saying that means it's a bondholder, but somehow tied in with 6th Street. It's not tin. I mean, looks like he's a creditor. So I just trying to figure out what that would actually mean. Some are saying that means it's a bondholder. I don't know. That's crazy. I mean, maybe that's part of the reason this pump's going on, honestly. This means RC's in the system to be able to bid, which he doesn't really have a reason to be there except for this case. Wow. Well, I guess more confirmation that he's involved, at least in some form. Crazy. Yeah, EV and tech. I took a dump today. You're gonna get fired too. Got 30 seconds. I suppose it could come down all the way to here for the full cup. It'd be 438.55. And then see a handle. Retrace, maybe 440. There it is. FCL, IDX, EBS. Yeah, can be a long weekend. Might be, yeah. Well, that is the bell. Barbecue up. Did nice. Didn't break through that 2340, which is fine. Might be big news. I mean, first of all, the 10K has crazy news that Bye Bye Baby might not even be part of the Chapter 11. Look at that candle and SPY. What the heck? Which would be the most crazy announcement I think so far. And now this thing with Ryan Cohen being a creditor. Figure out what all that entails. But more filings, more dockets, more paperwork around this bankruptcy with his name on it. Holy crap. Oh. Sorry, emergency. Yeah, that's a lot of good news. It seems like coming into this long weekend. We might get news this weekend, like legitimate news that us retards can understand. Not just that RC Ventures is a creditor and that potentially Bye Bye Baby's not even a part of this Chapter 11. I mean, I don't even know. Like, I don't know. I don't even think they could do that. They secretly have carved out Bye Bye Baby already and sent Bed Bath & Beyond to Chapter 11 to just sell off its assets, and then at some point say, hey, by the way, Bye Bye Baby was not a part of this. It's its own company. I don't know. It seems crazy. I hope we have ownership of that. I don't even know if we would have ownership. Like, we must, right? Because Bed Bath & Beyond should still own it. So, I don't know. It's crazy. What a week. What a short squeeze week. You brought more UAVS? Why? Just broke Broke like all-time lows. Not quite all-time lows. I remember when this thing squeezed. In a downtrend, it just broke the lows. It's this obsession. Obsession with buying things like that. Yeah, it seems maybe super hype. I don't know. Definitely look into it. Happy weekend will be hype for sure. They're using Bye Bye Baby bags at Bed Bath & Beyond? What? What would that imply? I don't even know. Back at 32 in no time. Oh man. Well, there we have it. Quite the week on SPY, so we even start. Yeah, just literally a squeeze week. Look at this weekly candle. Got a little wick up there just from today, but crazy. Crazy last 5 weeks. This was a big break. This was a big one, and then this one. Both these were nice breaks. For next week, I think we'll see kind of slowing down and potentially reversal. You still have this head and shoulders here, and I think that's kind of getting turning into an inverse cup and handle, which I thought it was maybe here, but really this would be the cup, full length to there. So might see that play out next week. If you're seeing that, then you're probably gonna get a bounce on there. Maybe back up to 440, and more downs if it is bearish. If it's bullish, yeah, we'll see if it bounces here next week and doesn't make the full cup, and we just start riding back up, make kind of an inverse cup, an inverse head and shoulders or something. But yeah, end of day, I mean, kind of made a bear flag come into the end of the day. Barbecue, nice week. Looks like it's reversed. What do we start with? Yeah, we started with a sell-off into the week, but I think we were talking about even early this week, like want to see reversal by end of week to show signs of the momentum's shifting, and I think it's safe to say we have seen that. We do have a reverse head and shoulders here with a head, a shoulder, maybe even RSI divergence. Oh, it's not a divergence, but MACD's bullish on the hourly. Got green over the 9 moving average. 4 hour looks good. RSI is ticking up there. Yeah, it's nice if it's I want to avoid this head and shoulders though. That's the thing. We're kind of seeing that earlier. Right. So right now we're kind of right at the shoulder. Don't need to break this 2340 once again. This 2340 level, big level, and then find it as support, or just break it and keep going. Doesn't have to retrace, but if it resists here a lot, kind of next week, I'll probably be closing. Just for the swing or the trade or whatever. Just because this could be, yeah. I don't know, but I do also want exposure to when this thing potentially gets suspended and opens back up at, $5 or something, with a buyer and RC involved and all that. So yeah, have to wait and see, but looks good. Just this right here, we have inverse head and shoulders, and everything looks nice there. Our MACD never flipped bearish, which is amazing on that daily, and a tick up. So it looks more good than bad, but there is a head and shoulders here that we have to kind of break out and use as support, confirm we're swinging back up. I don't have the FOMO. I could have bought more, and I have enough. So 26 is almost here. You buy your things, your past backs is bye bye baby. No, okay, I understand. But why? What's the implication? I get what actually is happening. What's the implication of that? Anyways, yeah, that's up 17%. GME, I think, is on its way down, probably with the SPY. Have this RSI divergence. Just a weird chart with these huge gaps everywhere and this huge gap fill. Yeah. We'll see. Good end to a Friday for sure. Let's see, IP down 2.3. We saw this with this engulfing candle 3 days ago, if you were listening. I'm not sure where it'll find support. Next major level for support I see is around here, though. This area. 23. So, just have to find out where it reverses. Other than that, yeah, fun day. Week, I guess. Kind of crazy. Down on the futures again today. And I'm kind of trying to trade them a little differently, and there's some growing pains to it. Did make some trades today. Here's the ones I entered Mullen this morning. I don't know, all that volume yesterday got me crazy. Got 3,100 shares of Mullen. Closed out of my calls in Nordstrom. Closed my short call on Beyond Meat. So I still have long calls on that. Chart looks nice. Open up a short position on Confluent. 34.31 put debit spread. And then I have a Theta farm on another account, and I added a membership tier on YouTube. If you haven't heard about it or are interested, feel free to join that membership. I am updating it every time I enter and exit positions on the Theta farm. So it's always selling premium, selling options, not buying them. Being the bank, being the insurance provider. But have a good long weekend, guys. Enjoy it. Take it off. Chill. Get outside. Your feet in the sand and the grass and the dirt. The yard. Fidelity. Yeah, the cost to borrow, it's like doubled on barbecue. But it's still not very high. We saw it up at, 16? Is it still there? Yeah. So here's your chart. It was at like 400% in February. And then it averaged out around 120% through March. And then it's just been steady around the single digits, like 9. But now it's starting to pump up here, you can see. Starting to ramp up a little bit, so we're at 15% now. So yeah, it's a good sign. All good things. Have a happy weekend, Trace. Thanks, Jay from the Bay. Thanks, Tony. Thanks, Ace. Thanks, DIY. Thanks, Granite. Appreciate it, you guys. Thanks for the gifted membership today. Ace, your continued support. Foghorn, thanks for your dono. Really appreciate it, man. If you're not on our Discord, jump on it. It's linked in the chat. It's pinned. Lava. Man, appreciate it, man. Hope you had a good week. Hope you have a good weekend. Take it off, chill. Thank you for your dono, Lava. Much appreciated. Yeah, I gave you the Happy Crew role on Discord. Don't feel like you have to be active on there, but I think there's some advantages for sure. Thanks, Dink. And anyone else, hope you have a good week. Have a good weekend. We'll see you on Discord. See you on Twitter. No, thank you, Kitty. Sub up, like up, comment down. Happy money sticks around. All right, guys. Peace out.